a cue that maybe there's more to come.
Yeah. Good morning, Tamanna. Good morning, Alex. And confluence of events. Given a small plate of positive cues that set us up. So the implied may suggest whatever it does, and I'm sure we'll mark it. But just this, Brent. So one, you mentioned the compromise, if you will, whatever little compromise there is there. But Brent falling to its lowest level since 2021. Dollar index below 105 levels. And RBI really the champion of whenever this turn moves, and I hope these are not the famous last words, but whenever the turn moves, the market will credit the Reserve Bank of India for standing up when it mattered. Measures to manage liquidity conditions. This is probably the 6th or the 7th move, and a large bazooka fired by the Reserve Bank. We'll talk about it for sure. But just as Tamanna said, right, the confluence of all of this together, I think the implied, I mean, we don't predict markets, but somehow something tells me from within the implied is a bit conservative today relative to what might happen.
As it was yesterday. Yeah. As it was yesterday. And it turned out to be a very different session.
Yeah. It was a positive session. I don't know if maybe it's too early to say that the worst is over and, we've the bottom has been made. But definitely a second day of green in the screen would be a relief. The global cues are not half-bad. So let's just come down to the facts and lay it out for you. As far as the US is concerned, there was a rebound in US markets as traders have cheered those auto concessions on tariffs by Trump. So here's what's happened. Key automakers, especially the big Detroit-based companies, got on a call with the US president and they've asked for concessions. So they've been given a 1-month exemption on tariffs. Remember, it's not a massive concession. 1 month is nothing. But those companies that followed the USMC Pact, that is the United States, Mexico, Canada Pact that Donald Trump himself had inked in his first term, those that follow it will be given 1 month's concession. What that's telling you is that at least he's willing to talk. There are also reports that there might be further concessions on agricultural commodities. So first blanket tariffs and then sector-wise concessions could be the way we're going. As a result, the Dow jumped nearly 500 points in that relief rally, but key indices are still about % lower than last week. Jobs data over the next 2 days now becomes crucial for market direction, so that's something to note. Private payroll data, ADP data that came in showed only 77,000 jobs have been added versus expectations of 148,000. So the important point to remember is that while all of us are obsessing and only talking about tariffs, there's a lot more which is going to be taken into consideration as far as US markets are concerned. It's also economic data that comes in, which will become crucial. Bond yields have jumped on the Trump tariffs and the poor private jobs data, the 10-year 4.31. Crude, though, has continued its downward slide. Brent was at the $69 mark. NYMEX now jumping up a fair bit. So the OPEC plus production increases, plus all the tariff uncertainty is something that is keeping crude under control. Always good for India. We'll pull up the implied open for the Nifty and as well tell you what Asian markets are looking like. 36 points up, so fairly muted but in the green. And as far as Asian markets are concerned, all in the green as well. The Nikkei leading 1% up, the Hang Seng nearly 3% up. But just a quick word before I hand it to Alex, and I found this point from Mahesh Nandurkar of Jefferies quite interesting when talking about India's strategy. He says India's underperformance is at reversal levels, relative valuations against the MSCI emerging markets to the 10-year average. Historically, from such levels, Indian markets have bounced both in relative and absolute terms. He goes on to say, with the dollar index down 4% from its peak, FPI flows might turn. Our FPI ownership tracker indicates that India's positioning by emerging markets funds is at a decadal low. Near-term positives such as economic uptick, liquidity easing may lead to a near-term bounce. So just underlining the point that we've been talking about since morning, those cues, at least the smoke signals, seem to be turning green, if that makes any sense. But yeah, important points coming in there from Mahesh Nandurkar, that from these levels, historically, Indian markets have turned around, and in emerging markets as well, the India allocations are at decadal lows.
And they're not the only one. I'm sure Neeraj has also got a few more brokerages to talk about, but I saw Citi talk about the fact that they went overweight last week on India and a few stocks.
They came on our channel and said that they are turning constructive.
And so there are more people, there are more voices globally that are talking about this, but not yet. fund flows from foreign institutions have not yet turned positive. They were net negative yesterday. They sold to the extent of 2,895 crore rupees. Domestic institutions net bought to the extent of 3,370 crore rupees. But what a session it was for the Indian equity markets, and a strong rebound in a broad-based pullback. There was short covering that occurred, and the Nifty 50 gained over 250 points to end at above 22,300. The strong gains were despite that weak implied open and the wobbly start that we saw to trade yesterday. We were talking about it at the start of trade, and that entire market breadth shifted. In fact, the mid-cap index gained as much as 2.4%. The small cap ended higher by as much as 2.7%. The top 5 gainers on the Nifty 50, I just want to elucidate this point, contributed less than half of the gains. And in fact, you had 45 stocks that ended in the green. So you had a broad-based contribution. Who were the losers though? The financial pack underperformed, and Bajaj Finance ended lower by about 3.3%. Regulatory concerns there. IndusInd Bank lost about 1.6%. HDFC Bank, that Nifty 50 heavyweight, losing 1.2% and proving to be a drag not just on the Nifty 50 but also on the Nifty Bank, which underperformed. Gains were across the board, as I mentioned: metals, PSU banks, IT, energy, auto, realty, all stocks in sectors that have underperformed and that have gotten beaten down in the recent past found favor yesterday, and all sectors ended with gains. However, you had banking, as I mentioned, which was an underperformer, led by that 1.2% decline in HDFC Bank. Stocks and sectors, as I mentioned, that have been beaten down have seen a pullback. There could be an extension of that today. Market breadth was tilted very heavily in favor of the gainers. 8 stocks, Neeraj, gaining for every stock that declined yesterday.
Yeah, now, so the trade setup is simple. One, that the RBI moves, right? The OMO purchase auctions, and we'll talk about this in detail. But just dwelling this, viewers, for the benefit, that the RBI moves are significant. The OMO purchases for an aggregate amount of lakh crore in 2 tranches. The buy-sell swap auction, the third or the fourth, if I'm not wrong, of $10 billion. Effectively, the RBI is buying securities and releasing liquidity in the system. So much needed in the month of March specifically. And remember, we're still kind of liquidity deficit. So I think this is one big move. And therefore, just keep this in mind as we talk about trade throughout the day today and why banks could be interesting. And therefore, my trade setup mentions this, right? It's just very difficult, if not impossible, to ignore the confluence of the positive factors in trade today. Now, it's very difficult to call this a trend. Tamanna was right. We don't know where this will go. Very difficult to call it a trend. But I still believe that the up move is likely to continue for the time being. Now, how much it does, anybody's guess. Is this a dead cat bounce, which a lot of people use to lighten up positions? Most certainly. But for now, it seems like this up move might well continue. And somehow, if you're really trying to marry the macro and the micro together, then the 2 safest pockets currently seem to be oil sensitives and seem to be banks. Both of them have macro action to themselves. You can again argue that OMCs have already had a bit of a rally, but oil sensitives, OMCs are not the only play. I think aviation features in that list as well. So keep that in mind, do your math, etc. If you are confused, listen to the Probal Sen conversation that we had yesterday on the channel. He's somebody who tracks this space closely and has given his verdict as well about what the numbers could look like. So if you're marrying the macro and the micro, OMCs, banks certainly fit the bill. And I must say this, Tamanna, when we did a conversation with BofA Securities, in his response to our opening question, he said, I'm sorry to spoil the party, but I'm still in the bearish camp. This was a few days back. He turned out to be right. So I'm saying, we know that the Sandeep Tandons of the world have come out and said that it's bottom around the corner. BofA was one of the few who was negative even at 23,000. I'm not saying that makes them right all the time, but they have turned positive as well. And their note yesterday suggests, it came during closing hours yesterday, I think. Their note yesterday suggests that we turn constructive on the Nifty, given that it's now trading at the long-term average valuation on earnings growth estimates. And we see a potential for a 14% returns on the Nifty in calendar year 25, with the index target of 25,000 by December. So the correction kind of bakes in maybe some of the negatives, whether it's a swift up move, I think Tamanna is right. Who knows?
No, but that's important because if the most skeptical of them all, the most conservative, the last to take out the party hats when it comes to the Indian markets, if they are also now saying that maybe the worst is over, it's something to note. Just to add one more sector to the list of spots that Neeraj, you spoke about when you say marry the macro and the specific, I would look at autos, because this report on Reuters that says that the US is pushing for zero tariffs on imports, paving the way not just for Tesla, but then, if India drops down tariffs massively with the United States, we can't quite have differential tariffs beyond a point. It's all over. Auto imports or imported automobiles, let me put it that way, will get cheaper. You will have to bring down tariffs. That's not necessarily the best thing for Indian automakers, who thus far have been very protected relatively to other nations. They've not faced that much competition. So I would keep an eye out on automakers. And while M&M had a great day yesterday, Tata Motors, of course, has been flailing. And over the last 1 month, most automakers have had a tough time. So that's one sector you should watch out for. But stock specific, let's get to those stories. I've got Zydus Life Science on my list first up, and it's a thumbs up. They've got a US FDA final approval for a dasatinib tablet. This particular formulation treats cancer, and the tablets will be manufactured in the Ahmedabad facility. So this particular kind of medicine, this dasatinib, has had US sales of about 1,800 USD, 1,807 million USD. That's for the 12-month period ending Jan 2025. So big space, and they have the US FDA approval for it, even though there is that cloud of tariffs on pharma. But at the end of the day, with pharmaceuticals, the fact is, if tariffs go up, it passes on to the US consumer. That's not something that Trump might want to do. If he's in the mood for concessions, definitely pharma sector will be one of them, because life-saving, very crucial kind of a sector. So that's one to watch out for. Zydus Life Science, maybe you want to keep that on your radar. Gensol Engineering is definitely a thumbs down. And okay, this is a stock which has had a world of pain. They came out with a clarification yesterday, which might not really help. So let me give you that context. The stock has been down 34% in the last 5 days due to credit rating downgrades, essentially by CARE and ICRA. The rating downgrades have happened due to short-term liquidity mismatch. So the company put out a statement yesterday after market hours saying that they understand the concerns that downgrades have raised. They're committed to addressing these concerns to all stakeholders. They've also denied any involvement in falsification claims, this was a claim made by one of the credit rating agencies, and they will be setting up a committee to review the matter. But looking at their current debt picture, this is something that might not see any kind of relief soon. Their total current debt stands at 1,146 crores, debt ratio of 1.95. The company has in fact reduced their debt obligation by about 230 crores in FY25 so far. So Gensol might have more pain. They've also planned to reduce their debt by disinvesting, by moving out of some businesses as well. L&T is the other one, and this is a thumbs down as well for L&T. And this is interesting, just see how this pans out, because the new order inflows from Saudi Arabia, remember their Saudi orders were the big one. Is that a concern, is the question that we're raising. The Saudi Arabia budget constraints could impact L&T International revenues, which contribute 50% of the top line of the company in the 9 months ending FY25. L&T, in fact, gets 33% of its order inflows from the Middle East in those 9 months. Saudi Arabia's contribution to revenue was at 18% in 2024 and 8% in 2023. So it's coming higher from Saudi Arabia, which is why a thumbs down. So what are the major concerns? Aramco's dividend cut impact. Saudi Arabia's oil giant has cut its dividend by 30%. They expect a dividend of $85 billion in 2025 versus $124 billion last year. That dividend feeds into the Saudi Arabia government's coffers. So lower crude global demand has also led to a fall of profit of 12%. This loss of special dividend may lead to a loss of $40 billion for the government. And of course, the Saudi Arabian government owns 97.5% stake in Aramco. So which is why keep an eye on L&T today as well. Might not have an impact immediately, but this is something important to note, and which is why it's on my radar as well.
Okay, so I'm not going to spend too much time talking about the liquidity measure by the RBI because we're going to delve very deeply into it, and Neeraj has already spoken about the cliff notes. But I do want to talk about banks and the fact that if we can pull up the year-to-date and calendar year-to-date Nifty bank performance, you would see that the declines are to the extent of about 5%. That's marginally lower than what you've seen for the Nifty 50 itself. And at a time when a lot of people over the course of the last few months and weeks have said that you can find value in banks, they're attractively poised in terms of valuations, that hasn't yet panned out. And perhaps to a certain extent, a large part of the negativity that was being built into the banks is one, asset quality in certain pockets. Of course, you're talking about agri loans and you're talking about microfinance, but there was also the question mark about liquidity. Consistently, right? So you had just before the RBI monetary policy, in the announcement of a rate cut, there was a measure, a significant measure to bolster liquidity. The latest measure is going to be the last fantastic shot in the arm. So you could see a significant up move in some of these banks today, particularly on account of the relief that they're getting. Why is it important? Because remember, there's been a 25 basis point cut in the repo rate. Before that, of course, there was a CRR cut. But for that repo rate cut to transition and to move into the system, there needs to be liquidity. If there's no liquidity, there's no transmission of monetary policy. If there is liquidity at this stage, that gets transmitted much faster. And then the conversation becomes, in April, just about a month from now, will the RBI cut once again in order to spur the economy? And then banks should be front and center on your radar. The second pack that I will talk about today has to do with asset management companies, and we've spoken in the recent past about the flows into mutual funds by retail investors. Now, we've got an HSBC note that has come through, and they're saying that they're maintaining a hold on HDFC AMC, but they're cutting their target price quite significantly to 3,900 from 4,350. On Nippon AMC, they're downgrading it to hold from a buy, and they're cutting the target price also very, very significantly to 550 from 840. What are they saying? Saying that not all SIPs are in fact sticky. There have been cancellations, and this is data that we've spoken to you about as well. The holding period for over 1/4 of the total SIP AUM is less than 1 year. A lot of new SIPs have come into the system, and this is also fact. 30% are in schemes where the propensity for redemption is high. And here we're talking about small cap schemes and to a certain extent mid cap schemes. The latest data that was released by AMFI also suggests that a large number of SIPs are in these two pockets. With the rising SIP discontinuation rates and the mark-to-market losses, the AUM growth outlook appears to be weak in the near term. Now, take all of this with a pinch of salt. So far, over the last several months, though there have been cancellations, the SIP number, gross number, has been resilient. It is at close to all-time highs. Of course, that net number has been diminishing a little bit. But what they have done, HSBC, is to cut the EPS estimates for Nippon AMC on the growth pressure, and it is quite considerable in terms of the cuts that they have in the earnings expectations for these companies.
Okay, so I have a couple and not more. One of them is Galaxy Surfactants, because it's entered into a strategic collaboration with a global customer to provide EPC services for specialty ingredients plants overseas. And they are in discussions to enhance this collaboration post-commissioning of the plant. It may be a very small thing for Galaxy, but strategic collaborations eventually end up a lot of times in companies being able to set up a manufacturing plant back into India. It's happened with multiple fragrance companies as well. So let's wait and watch if it's the same here. The management will be best placed to talk about the significance of this, but seems to be an interesting one. So keep an eye out for that. And then, we've spoken about banks, we've spoken about everything else. I'll repeat, oil could be a very interesting catalyst for oil marketing companies as well as aviation stocks. So considering that WTI has extended losses and now it's the lowest level since May 2023, or Brent since 2021, if you will, I think it's an interesting place to see what the HPBP IOCs of the world as well as maybe Interglobe and SpiceJet both could do. So keep an eye out for these stocks. Certainly ones to reckon with. Remember, the trend is in their favor because they've done very well over the last couple of days, and on a bullish day could do more as well. So keep an eye out for them. But guys, none more so than banks. And I wonder that whenever this tide turns, as we said, will the street recognize that the Reserve Bank of India did all that it could, or if not all that it could, then did a significant part to turn the sentiment and aid liquidity, because it was a need of the hour, because RBI has certainly done that.
And then the latest moves, Vishwanath Nair there with us in the studios to break that down. So a fresh liquidity injection, Vishy, what is the context in which we should see this?
So look at the number, right? It's 1 lakh crore worth of open market operations that is going to happen over 2 tranches. Then there's a $10 billion US buy-sell swap, which adds up to about 88,000 crores. So that's a 1,88,000 crore roughly worth of liquidity that is being pumped in the ecosystem. Why is this happening? The context is, 15th of March is coming up, so advanced tax payments will happen. More money will go out of the system into the government's accounts. So you're already sitting on a crunch. On top of that, the RBI has been doing daily variable rate repo auctions, which will unwind in the coming weeks. So that means that more money will then go back into the RBI from the banking system. Further liquidity crunch. You need to account for all of these things and ensure that the system has durable liquidity, which is why you're doing a 3-year buy-sell swap, and you're doing open market operations and not a VRR auction, which is what you've been doing so far.
I suppose.
Right, so that ensures that some amount of liquidity is there in the system for a reasonable period of time, at least till the end of March. And then as April starts, and hopefully things will magically come back to normal, we'll see what happens then. But it's and as Neeraj said, they are doing all that they can. I think they can do a little bit more, a rate cut, yes, which was something.
So
that
now I think there is a city note, Vishy. Sorry to interrupt, but the city note says that there could be 2 more because the liquidity measures that RBI is taking paves the way for those.
Exactly.
Stocks.
So this is, according to me, or at least the people I've spoken to, it seems that this is a rate cut in disguise. They're already making setting the stage for a rate cut that's coming up, and that's essential, because if you're going to target like really sharp growth in Q4, you're already in the last month of the year, right? You need to ensure that the system has enough liquidity. So will there be an out of turn rate cut is the conversation that's happening right now, because the next monetary policy is only coming up in April. So will March suddenly see a rate cut or not? I mean, I don't want to wager any guess at this point.
Question mark about this dollar swap, right? Generally, and just the mechanics of it, ultimately you're talking about the RBI buying dollars, so therefore sucking more dollar out of the system. It would put downward pressure on the rupee. It would make it more the dollar more costly. But do you think that it's comfortable doing this, the central bank, because of the decline we've seen in the dollar?
100%. So what happened just this week, right? On the 4th of March, the RBI did the same thing, a $10 billion buy-sell swap for a 3-year period. There was temporary pressure in the rupee in the days ahead of that, and that sort of got reversed. And you saw yesterday the rupee was actually doing quite well against the dollar. Over the course of the day today as well, since the announcement has already come in, you may see some pressure returning, and then the RBI doing spot interventions to ensure that volatility is taken care of. All in all, this is a planned sort of a buy-sell swap, right? So you know that at certain date the dollars will come back into the system, and therefore the system doesn't take it to be like a major dollar shortage in the ecosystem, and therefore trades are played accordingly.
Sorry, Alex.
Sure. Just to follow up on the dollar swap, because this is going to come out in 3 years, and ultimately the trade will have to be closed at that time. Is it going to be net negative, or net positive for banks?
It's always going to be net positive. They don't enter a deal unless they know that it's going to be positive, right?
And how so? Can you explain that?
So essentially, when you are buying rupees from the RBI, you're doing it at a price, and you're doing it at a price, predetermined price. 3 years later, wherever the rupee is, I will give you a certain amount of premium. Right. On today's price.
Assuming that the rupee will depreciate over the next 3 years.
Exactly. So the last trade that happened at a 6 rupee 55 paisa sort of a premium over the dollar price on that date, and therefore they are saying that we will pay you 92 odd dollars, 92 rupees against the dollar that I'm going to buy back from you, and we will have to see where the latest the latest trade, whether that auction leads to a better price or a worse off price. We'll see how that plays out. But yeah.
Net positive.
Net positive for the banks.
Okay, so net positive for the banks, a rate cut in disguise. I'm assuming banks will start passing this on one way or the other, and they kind of already have to some extent.
Crossed, I think.
Fingers crossed there. Thank you for that, Vishwanath Nair. So BFSI in focus once again. So are real estate companies in focus as the HSBC has revised its targets while maintaining ratings. Mika's joining in on more details. So Mika, what is first of all the overview that HSBC has on real estate stocks, and then break it down for us?
Yeah. So to put it shortly, they're like, be cautious but not fearful. They have cut the target price by anywhere between 5 to 14% for their real estate coverage. But they've maintained the buy ratings on DLF, Godrej Properties, Prestige and Sobha, and the hold rating on Oberoi Realty. Despite the new targets that now have been set, DLF has a 39% potential upside to its previous closing. Godrej Properties has the highest upside at 69%, Prestige at 41%, Sobha as 27%, and Oberoi Realty the least upside at 13%. Now, why have the targets been reduced? Because there is an expectation of the potential of the residential cycle peaking, and the peaking of the cycle could lower the net asset value accretion for the companies. HSBC has stated that the stocks have underperformed on multiple macro worries, and there is a risk of the companies missing guidance. They're telling investors to be cautious but not fearful about the realty space, and they've mentioned key risks like the weakness in the economic environment as well as delayed approval cycle.
Okay, all right. Thank you for that, Mika. Realty in focus. I mean, I don't know if things turn, then real estate will as well. But we had a conversation a few days ago with Keystone, Baman Irani of Keystone, who was saying that all of this talk about slowdown is just definitely not there. But of course, in the premium segment and in MMR, things are looking good as far as he's concerned. We'll take a very short break. Quick look at the implied before we get into that break, but we're coming back with the NDTV Profit watch list, what stocks should be on your radar, and top strategies for the day. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be
All right, now back with India Market Open. Of course, the implied open should come up on your screen first, and just let's see what that is showing. 46 points. Let's see how it starts off. Now, the point is, viewers, if this is the time to fish in the pond, then where should you fish? And in the wake of the sharp corrections that have happened, MK Shares and Stockbrokers have come out with a couple of screening criteria and the stocks as a result of those screens. So there are two screens here. One is the GARP screening criteria, which is that growth at a reasonable price. So they have done a few measures. So what are the screeners that they've put in? That the FY26 EPS growth should be greater than the FY25 EPS growth. The 1 year forward price earnings ratio should be at a discount to the 5-year averages. So higher earnings but a lower PE. The stock should have corrected over 35% from the 52-week highs, and FY26 ROE should be greater than 15%. And there is one more, but these are the 4 key ones. Now, based on these 4 criteria, the stocks that stand out within their universe their coverage universe are Motherson Sumi Wiring, Adani Green Energy, JK Tyre, and Bikaji Foods. I repeat these stocks: Motherson Sumi, Adani Green, JK Tyre, and Bikaji Foods. So if you believe in growth at reasonable price, then MK has done the work for you. And from their coverage universe, these are the stocks that stand out. Now, they've also done something else. They've also done quality at reasonable price screens. And how do they choose to this? How do they come down to this list? That operating cash flow to EBITDA for FY26 greater than the FY23 to 25 average. Fair criteria, right? That 1 year forward operating cash flow to EBITDA ratio is higher than the previous 3 years, which is great. And it should be a minimum of 45%, by the way. The positive free cash flow in either of the 2 years, FY25 or 26. Return on capital employed consistently above 10% from FY23 to their estimates for FY27. Working capital days less than 90. You don't want to stretch working capital cycle for any of the businesses right now. 1 year forward P multiple lesser than the 5-year average. And again, it should have corrected more than 35% from the 52-week highs. The top ideas in the quality at reasonable price screening criteria are Motherson Sumi Wiring, JK Tyre, Colgate Palmolive, and Kajaria Ceramics. Interestingly, 2 names fit the list of both quality at reasonable price and growth at reasonable price, which is Motherson Sumi Wiring and JK Tyre. So if you're looking to fish one of the screens, if you believe that what MK has done in terms of their screens is good enough, then there's a list of stocks that you might want to look at. Standard disclaimer, this is MK's list. They may not have a few stocks under their coverage, and therefore you can look at the Citi list or the Jefferies list or what have you. Everybody's putting out their list. This is the MK one.
And it is 2 filters that, or rather 2 overarching filters that they put, which is growth at reasonable price and quality.
And there's separate criteria for each of those.
But interesting on JK Tyres, because it's been under pressure, so has the tire space because of underlying problems.
But they are saying that even in the growth at reasonable price thing, because they would have estimated their FY26 growth numbers, as per the criteria, it probably fits the bill, as per their estimates.
And relatively, I suppose, to others in that space.
Yeah.
All right, on to a Profit exclusive. Ola Electric plans to process vehicle registrations in-house to cut costs. The Bengaluru-based EV firm now plans to process vehicle registrations at 1/5 of the cost charged by their vendor, that's Rosmerta Digital Services. But Ola Electric is yet to settle its dues of about 17 to 18 crores with them. Tushar, who's been tracking the story, joins in with more details.
Good morning, Tamanna. So essentially what Ola Electric is doing now is pulling out all the stops to cut costs and turn profitable as quickly as possible. One of the measures is to do vehicle registrations in-house. So the company has set up a team which will process vehicle registrations on the Vahan website at its own end, rather than handing over to the vendors such as Rosmerta Digital Services. But about pending dues are still remaining at about 17 to 18 crores. So Ola believes that Rosmerta will charge about 1,500 to 1,800 rupees per vehicle for its registration. The company believes that it can do it at about 300 to 400 rupees at this point of time. We have to remember that this comes on the back of Ola Electric's sales in February, which were about 25,000 units last month, but they could register only a third at about 8,300 units last month. This effectively means that if sales remaining constant at about 25,000 units, the company should be registering near about 42,000 units at least in the month of March. We also have to remember that the company also has shut down state distribution centers like warehouses which supply to experience centers all across the state. But even the experience centers are not performing at the optimum level. Some of them are not even retailing one electric scooter per month. So going ahead, the going is actually a bit tough, but yes, Ola Electric is taking the steps to cut costs as much as possible to become profitable, at least on an operational level.
Thanks, Tushar, for getting us those details. Keep Ola on your radar in trade today. The stock has been under a tad bit of pressure, and that might just be a little bit of an understatement. Let's talk about the setup for the day from the F&O perspective, and we've got Agam joining in to tell you about the takeaways from yesterday's session, of course, and the setup at the start today. Agam, yesterday short covering visible, and does that play out today as well?
Yes, short covering certainly was taking place yesterday. The question really is that if this continues and if this can actually turn into fresh longs. It's a little bit of a long wait, and I wouldn't go, read too much into the implied open because it usually tends to be volatile, at least in the first 1 hour of trade. That said, when it comes to what happened yesterday, we did see the benchmarks advance. The Nifty moved up around 1%. There was a decline of around 2% in open interest. It wasn't significant short covering, but short covering it was. And when it comes to the Bank Nifty too, again, the index moved up along with an over 2% decline in open interest, also indicating short covering. When it comes to your options markets, while we continue to see the level around the 22,500 call strengthen as support, resistance on the lower end, we are now starting to see a lot more writing shift from 21,800, 21,900 and 22,000 higher to about the mark of 22,100. And that's what we are working with in today's day of trade. So today, of course, is your weekly options expiry. We're likely to see activity continue to be around and between 22,000 and 22,200. And moving on, as far as stocks go, again, it was a mixture of trade, but there were more gainers than losers. And IIFL Finance, Titagar, NBCC, Tata Technologies, along with KPIT Technologies, all of them see longs, and there was also short covering for Polycab, Deepak Nitrite, Biocon, L&T Tech, as well as NCC. So if these positive cues continue, you never know, you might see a bout of more up move as far as benchmarks go.
Okay.
All right.
Thanks so much for that.
We are also so excited about your outlook on the derivative space today. I think it's going to be an interesting day overall.
A really interesting day.
But what are the stocks that you need to look at? Well, let's start on the NDTV Profit watch list. Zydus Life is first on the watch list this morning. It's gotten a final approval from the US FDA for a cancer drug. Bharti Airtel, HSBC has hiked its target price. Actually, it's a good note from CLSA as well on Bharti Airtel. So I would watch out for Airtel in any case. Canfin Homes Axis Cap sees a 28% upside. A lot of movement you could expect on the back of brokerage notes today as well. PFC, REC, I would add to that list. Macquarie has reiterated their outperform on it. And OMCs, oil marketing companies overall, HPCL, BPCL, IOC, the likes, because Brent crude is down at a 3-year low, which boosts their margins almost immediately.
This is not a list that you want to look at today because some of these stocks may not move and some of these stocks have already moved. But Angel One in particular, average daily orders have declined in the month of Feb. So weak update for sure. Nippon AMC, HSBC downgrades. AMC is by and large, but Nippon in particular, and cuts targets. BSC, Goldman Sachs has cut the target, which is now almost in line with maybe the current market price. And ONGC or all upstream names, because Brent crude is down to 3-year lows. So what is good for OMCs is bad for upstream oil, and therefore you got to keep that in mind. Let's get in Nirav Ashar, Head of Equity Research at Latin Manharlal Securities, to talk about the fundamentals. Nirav, good having you. Thanks for joining in. Let's assume that the tide is looking okay and not too negative. I would love to come to 2 or 3 key things, right? One, we can either start with banks or oil. So, okay, let's start with banks. All the RBI moves that are happening, liquidity coming in, etc., etc. How positive is this for the banking sector disbursements and earnings for Q4 and outlook ahead? And what banks would be top of the pile for you?
Yeah, good morning and thank you for the invite. I think this is an excellent move by RBI as far as the liquidity management is concerned. Because we've seen 3 quarters of underperformance, and during these 3 quarters we've seen the sentiment go down to new low levels. What happens is that we tend to see a trickle down effect. When there's a slowdown in the orders, it comes down to the lowest levels. The contractors don't get their payments, the execution gets impacted. Everything goes into a slowdown mode. Now, I think what is happening is that the government is trying to do a course correction at this point of time. A lot of orders are being given out. We are seeing a lot of order inflows being announced by companies on a daily basis. And this definitely will there is going to be a need to expedite things, expedite the execution going forward. So there is going to be a requirement for working capital. A lot of working capital requirements will be there. And typically March is a month where we tend to see tax related payments. Generally the liquidity in the system is very dry. So I think the right step in the right direction at the right time as far as Reserve Bank of India is concerned, and it could have a positive impact as far as banks are concerned, and particularly those banks which have a very good exposure to funding the working capital requirements.
Okay, all right. So that's the view on banks. And bear in mind, of course, that the public sector banks, despite the up move yesterday, have broadly underperformed in 2025. PSU banking index is down about 10%. Nilesh Jain, Centrum Broking, joining us this morning as well. Nilesh, very good morning to you and thanks for joining us this morning. What is your opinion based on yesterday's broad-based up move? Are you enthused based on the charts, and do you bet on this up move, or as some people are calling it, will it be a dead cat bounce?
Morning, Alex. Morning, everyone. Absolutely. So there are multiple triggers that are supporting the market and supporting the yesterday move as well. Today, we have a weekly FN expiry for the Nifty. So we are expecting a short covering move to continue because we have seen a lot of call writers were active at 22,200, 22,300 and 20,500 as well. So after looking at today's flat to positive start, I think there will be another round of short covering move which will take Nifty towards 22,500 to 22,700. And we have already witnessed the markets were trading in extremely oversold territory. So this kind of a dead cat bounce or a pullback is very much in line with the expectation. It is important to see whether Nifty manages to sustain about 22,500 from here, because there is a gap area at 22,500 zone. So if that is taken off decisively, then next target in the Nifty would be somewhere around 23,000 to 23,200. So that is important level that we are keeping an eye on, at least from intraday point of view. The setup looks positive given the kind of outperformance that we have already witnessed in the Bank Nifty. So we are very much bullish in the Bank Nifty as well. And we expect Bank Nifty spot to move towards 49,000 to 49,500. Classic triple bottom kind of pattern can be seen on the daily time frame chart in the Bank Nifty spot levels. So overall setup in the banking space looks strong. On the back of that, we may see a follow-up move to continue, at least for today's trading session.
Okay, Nilesh, what are the top calls of the day? Can we get your stock picks on what is looking like will be an exciting morning?
Right, so a couple of buy ideas. First of all, OMC stocks are looking very attractive at current level, given the kind of rebound that we have seen back-to-back for the third straight session. We have seen a strong follow-up move in the stocks like BPCL, IOC and HPCL. So within the space, BPCL is something that is looking strong on the chart. So we are expecting a follow-up move to continue towards 267 to 270 on the upside. So these are the spot levels. One can keep a stop loss below 249 and BPCL can be bought. Apart from that, Cummins India is another stock that is looking very good at current level, given the kind of a base formation that we have seen. And it has already cleared its 50-day moving average and as well as 21 DMA. So looks strong on the chart for a follow-up move to continue towards 3,000 to 2910 to 3,000 kind of levels on the upside. So with a stop loss below 2830, Cummins India can also be bought.
Okay, it's an important one that Nilesh just mentioned, right? The trend on OMCs is very positive. Nirav Asher, come in here. There's been a rally though that has happened in OMCs already. At the current levels, are oil marketing companies giving you a good bang for the buck?
Well, yes, definitely. With the reduction in the crude oil prices plus these oil marketing companies being good dividend plays also, I think they fit the bill as far as the investment objectives are concerned. And we particularly tend to like IOC and HPCL from the oil marketing pack.
All right. So, by the way, we'll get you more on OMCs. There's more to talk about. But before we do that, let's talk about PVR Inox, because there's an interesting note that has come from Kotak. It has upgraded the stock to buy, but it has cut its target price from 1,330 to 1,200. Mahima joining in to tell you what stands out. And Mahima, there was a spate in between of a lot of box office releases that were doing well. What is Kotak saying in his latest note?
Right, so as you rightly mentioned, they've upgraded it to buy from an ad rating, but cut the target price to around 1,200 from 1,330. Now what they're saying is that the correction for the stock is overdone. The stock has declined significantly in the past few months due to continued weakness in the box office collections, and the issues plaguing the Bollywood industry seem structural going forward as well. But an improvement in movie releases is likely to drive higher Hollywood collections in FY26, and this could drive growth for the company. PVR Inox's initiative on cost optimization and capital light expansion are also noteworthy, and they believe that the recent correction, as mentioned earlier as well, in the stock is overdone, which is why they're seeing an upside from now, from going forward. So these are the reasons as to why they've upgraded the stock, but they've cut the target price by a bit.
Okay. Okay. So, but it's an interesting conversation, right? Because the company has repeatedly stated that people are not going to shy away from the theatres, but at least anecdotal evidence seems to suggest that people are going less. I wonder what Nirav has to say about this. Nirav, I'm sure you've looked at the details far closer than I have, certainly. So, do you find merit in the arguments that Kotak is making?
Well, I think people may not shy away from the theaters, but definitely I think investors have shied away from the stock. So I think it's been a case of a perpetual wait for the investors, and I think finally we've lost faith in the stock. So I think we've stopped tracking the stock actually at this point of time. There are better bets. We've shifted to Saregama in this space, which looks far better and compelling.
Okay, Saregama in the space is looking compelling, but would it be so? Therefore, okay, Nilesh, why don't you come in on this? Right, PVR Inox. There is one bet that has been made. Nirav is saying that he's not really positive on this. Saregama is his pick. Why don't you comment on both of them?
Exactly, that's the same view even I have. So what Nirav has said is exactly technically is looking attractive. Saregama on the chart. PVR, it has gone into extremely oversold territory, so there could be possibility of a dead cat bounce in this particular stock. But the conviction is missing because the stock is constantly forming a low top and low bottom formation. The immediate hurdle is placed somewhere around 1,030. So till the time it doesn't crosses above the same, we can expect another round of selling to continue in this particular counter. But yes, from current level, pullback cannot be ruled out. Saregama, on the other hand, we have seen a good consolidation in this particular stock. We haven't seen a correction. In fact, this stock has outperformed the market, and this consolidation, in fact, is giving a good opportunity to accumulate this particular stock. Positional target in this particular counter comes around 550 to 600, and from a short-term point of view, we may see the levels of 520 as well. Stop loss should be placed below 425, and yes, Saregama looks attractive compared to PVR Inox.
Okay, Nilesh, I want to come back to you because we've not spoken about individual banks, right? And your picks did not include any banks. Based on the latest move by the Reserve Bank of India, I'm just wondering whether some of the PSU banks, for example, that are still down despite yesterday's move on the month, or in fact on the year, would you buy any of these right now?
Absolutely, Alex. So I have one buy, that State Bank of India. And just to give you a disclaimer, we have already recommended this particular stock to our client as well. So yes, we are pretty much bullish on State Bank of India for upside target of 780 to 800. So little positional call in State Bank of India, and technically as well, we are expecting a follow-up move to continue towards 750 to 770 from a very short-term point of view. With a stop loss below 700, yes, State Bank of India will be our preferred bet within PSU banking space. And within private sector bank, Axis Bank is something that is showing strength on the chart compared to ICICI Bank and HDFC Bank. So Axis Bank can also be added at current level with a stop loss below 988 and upside may be seen towards 1050 to 1070.
You know, Nilesh, you mentioned OMCs as one of your picks, but if I were to ask you to choose between an HPCL, BPCL or an IOC, what would be your top OMC pick right now?
See, top bet would be BPCL, where we have already shared our levels. Apart from that, yes, IOC is also looking attractive. We have seen a good breakout coming in yesterday with a good volume participation as well. So we can expect a follow-up move in IOC as well towards the levels of 126 to 130 with a stop loss below 119. Yes, IOC can also be bought.
Okay, now talking about OMCs, let's have a bit of a deeper focus on it. Obviously, this is the background. Brent crude prices have dropped 17% from their 2025 highest levels. Let's go across to my colleague Somit on how Indian companies benefit from these lower crude prices on various industries and what will be the exact impact. Let's start with the impact on India first of all, Somit.
Well, if you look at Brent crude yesterday at the lowest point of around $68.3 per barrel, which is the lowest price that we have seen since December 2021. Now, crude has been down for the second consecutive month. In fact, in the month of Feb, it had declined around 4.7%, and in March, so far, it is down more than 5%. And from 2025 highs, if you look at the Brent crude price, it is down nearly 17%. So, what are the reasons that have led to this fall in the Brent crude prices? Firstly, it was the rising dollar index. That was one of the reasons. Apart from that, Trump tariffs have increased the global uncertainty, which has also put pressure on crude prices. And the third and one of the most important reason is the fact that OPEC is looking to increase its production from April 2025 amid a slowing demand. So that has also put pressure on crude oil prices. So how India benefits because of this lower crude oil prices? India benefits because nearly 85% of our energy requirement is met through imports, and hence lower crude oil prices definitely is positive for India. But if you look at over the period of time, India's oil intensity has actually come down. When India had crossed the $1 trillion GDP mark, it used to import nearly 900 million barrels of oil, which was nearly 8% of the GDP. And now when we are at about 3.5 trillion GDP, we import around 1.7 billion barrels of oil, which is just 4% of the GDP. However, when it comes to inflation, fuel has a direct weight of around 4.4 percentage points in CPI, while it has a higher weightage of around 7.95 percentage points in WPI. And a 10% decrease in crude oil prices leads to a reduction in the headline CPI and WPI by nearly 40 to 80 basis points. When it comes to current account deficit, oil accounts for around 26.5% of the total imports and 61% of the commodity imports. And a 10% decrease in crude oil prices lowers or narrows the current account deficit by around 30 basis points. When it comes to growth, generally falling oil prices is likely to have a favorable impact on domestic growth through lower inflation, better financial conditions and robust business sentiment. So overall, India stands to benefit given the fact that we import nearly 85% of our crude requirements.
Okay, so that's the overarching picture and the bird's eye view. Let's drill deeper, Somit. No pun intended on the oil sector, of course, but let's talk about the individual stocks that could benefit here.
Well, yes, if you talk about sectors and stocks that could stand to benefit because of lower crude oil prices, firstly is the oil marketing companies. Now, overall, the impact could be neutral given the fact that oil marketing companies maintain an oil inventory, and if crude oil prices drop sharply, then there could be huge inventory losses. But Street obviously takes it positively given the fact that a lower crude oil prices leads to higher marketing margin for the oil marketing companies that they earn on selling every liter of petrol and diesel. And generally, a 0.5 rupees increase in the marketing margin of petrol and diesel increases IOCL, BPCL and HPCL's EBITDA by anywhere between 8 to 11%. When it comes to paint companies, it's positive nearly because 40% of the raw material cost is oil and oil derivatives. For aviation, also nearly 40% of the raw material cost is related to crude oil prices because fuel is the major cost for them. For lubricant manufacturers, nearly 50% of the raw material cost is crude oil linked, and a lower crude oil prices would definitely lead to lower raw material cost for them. Obviously, there will be a lag effect for all of these sectors. Even for tire sector, it is positive because synthetic rubber, carbon black and other chemical prices are derived from palm oil prices, and these chemicals form nearly 40% of the total raw material basket for any tire company. For cement companies, it's positive because nearly 40 to 50% of their total cost is either directly or indirectly related to crude oil prices, and a reduction in crude oil prices would lead to margin benefits for them. For specialty chemicals, a host of specialty chemicals stand to benefit, given the fact that raw material, crude oil is one of the key raw materials, or crude oil derivative is one of the key raw materials for them. But when it comes to oil explorers like ONGC, Oil India, Vedanta and HOEC, it is negative, given the fact that crude is the main product and lower crude oil prices means lower realizations. The major downside would be for ONGC and Oil India, given the fact that a $5 per barrel drop in Brent crude leads to lower EPS by ONGC for around 7% and for Oil India by around 12%. However, do remember, this is the most important fact to actually realize the benefit of lower crude oil prices need to sustain at these levels. Just short-term fluctuations won't lead to any positive or negative impact on any of these sectors on companies.
Okay. Point well noted. Somit, thanks so much for filling us in on the details. And now viewers, if you see the last half an hour, there is enough opinion out there on what could happen to oil marketing companies at the very least, on banks and a few more as well. I wonder though, just before we take that break, if Interglobe or SpiceJet are the others in focus. Remember Plutus, Arpit Khandelwal's Plutus broking or Plutus Wealth bought into SpiceJet 2 days ago, quite a large quantity, so that is interesting. But Interglobe as well, with all that the brokerages have said, plus the Mahakumbh effect and lower oil prices, does this become good? So Nilesh, of course, has a buy there. Nirav Ashar, Interglobe / SpiceJet, if not an investment play, is it a trading play? Are they a trading play?
Yes, they are a trading play, and I think as we had discussed in the previous show also that there's been a marked increase in the traffic flow, the airport-related infrastructure. We have new airports which are coming up, which are going to be inaugurated very soon. Air traffic intensity has been going up, so I think the going seems to be quite good. The sentiment is positive, and this should definitely aid the trading sentiment at least.
Okay, point well noted. And remember, viewers, there is actually, Nilesh, very quickly, 20-second answer. I know you long Interglobe. What about the charts for SpiceJet?
Well, SpiceJet is comparatively not looking that attractive, better to avoid, although there could be a possibility of a follow-up move towards the 33 to 35, but the confidence is coming in Indigo.
So, you mean 53 to 55?
Yeah, 53 to 55, right.
Okay, fair call. Great, Nilesh. Leave it at that.
He's just checking if you're listening.
maybe he's checking. मैं बोल रहा हूँ आप सुन भी रहे हो कि नहीं? Nilesh, thank you so much for joining in today. Have a good day. Nirav, stay on. More to talk about. We need to slip into a quick break. Back with the pre-open rates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies.
one factor to look at this morning is also what's happening with the rupee. So the rupee, which has been completely hammered for the last several weeks, has shown uptick in the last couple of days, with the dollar obviously now weakening as well. What is the trend that we're seeing, and do we expect it to continue? What is giving strength to the Indian currency? I'm speaking now about this to Anindya Banerjee, pardon me. He's SVP Currency and Commodities Research, Kotak Securities. Mr. Banerjee, a very good morning to you and hope you're doing well. Let me start by getting a quick take from you on what is the directional position you see on the rupee.
Thank you for having me. A very good morning. See, the Indian rupee should be able to benefit from dual tailwind, which has emerged over the past 1 week or so, especially over the past couple of trading sessions. That is, the US dollar index has fallen quite sharply, and we are seeing a bit of appreciation across the Asian currencies. So that can be a tailwind for the rupee. Second factor is that the liquidity operations from RBI can also be quite beneficial because it tends to help growth. So better outlook on growth and at the same time a weaker dollar index can actually help the Indian rupee to come towards 86.5 levels on the spot in the coming days.
Okay, so 86.5 level in coming days sounds good, sounds directionally positive definitely for the rupee. I'm just wondering, Mr. Banerjee, how you see the impact flowing through of what the RBI has announced overnight, more liquidity measures. Does that boost support?
Primarily these swaps should be, it should have neutral impact on the spot rate because these are designed to have an impact on the money market liquidity, because on one hand they are sort of giving the rupee loans and taking the dollar as collateral, which they will reverse after 3 years. But what happens is when the dollar is appreciating, as it was, let's say, till last week, in that environment, it tends to have some positive impact on the spot, because what happens, the RBI has to take dollars from the market to give the Indian rupee. So last time when they had done the swap operation a week or so back, on that particular day we saw the USD rate jump by 20-30 paisa. But as I said, the good thing is that now the dollar index is falling. In that environment, it shouldn't have any negative impact on the Indian rupee on the spot market, and it should have a positive impact on the overall liquidity.
Okay. Point well made, Anindya, and that reinforces what we've been speaking about as well. I'm just trying to understand what your base case assumption is for, and can you make a base case assumption for the dollar rupee pair and for the rupee for the rest of the year, given that there are so many uncertainties about the dollar itself?
Right. See, 2025, our view has been that it's going to be a year when we'll see unprecedented volatility in the currency market, because the Trump's trade war is going to escalate with time, especially the trade war between America and China, because this America First policy basically tries to create the production, US as a production hub, which means it will come at the expense of China. So in the coming months and quarters, we could see the trade war escalate, which in a way is a slightly positive for the dollar. But at the same time, we have to also understand, for America to have any kind of manufacturing base, it cannot afford a strong dollar. So eventually, America has to look at some ways of devaluing its currency. Whether that becomes its official policy or not, we have to see. So that's the reason why 2025 we could see unprecedented volatility on both the sides, in USD and on all the currency pairs.
Thank you so much, Anindya. Thank you for joining us this morning. Anindya Banerjee there, saying you could see strength continuing. 86.5 for the rupee to the dollar is where he sees it, perhaps going 86.8 today. Not half bad. Rupee continuing to be strong. Good to see that on the screen, but it's largely due to a weakening dollar. All right, first ticks coming in, and of course we'll wait for markets to settle, but not half bad at all. Zydus Life was on our list, is about 6.5–7% up. Again, like I said, this is just 3 minutes in, so those numbers will settle in. We should pull up and see what OMCs are doing, since we've been talking about it to this extent. HPCL, BPCL, all of those not doing half badly. Autos is another one that I want to watch out for. What's happening with Tata Motors, M&M, and Maruti and the list. Ola Electric, they're seeing an uptick also because they have a PLI tranche, 700 crores odd of money coming in through a PLI tranche. All autos also up in the green. Nirav, in fact, that's my question to you on how you see autos right now in light of reports that India is now at the negotiating table, of course, with the United States, and there are reports that the US wants tariffs to drop as low as 0 for automobiles that they want to export into India. Now, of course, that's part one of the negotiation. We'll have to see where it ends. But do you see that fundamentally as a negative for Indian auto companies?
Well, definitely it's going to add to the competitive intensity which is there in the auto market. But I think there is equal space and pass for all the players. So I think this can be accommodated in the first place. And as far as the auto industry goes, we've seen some very good numbers which have come in, and I think this is probably one of those sectors which has reacted very positively to the monthly auto sales numbers also. If you see Mahindra & Mahindra, companies like Eicher Motors, TVS Motor Company, Force Motors, SML Isuzu, all of them have done quite well. So I think there's definitely merit that they can compete on a level playing field also.
Okay. Well, the other thing is I wonder if all oil sensitives rally. So we spoke about OMCs, we spoke about aviation, paints, and that could be a pocket that could be interesting to look at as well. So just keep those oil sensitives in mind. Usually oil is considered to be an insider of what is happening to geopolitics, etc., etc. And if that is the case, and if global demand is looking slightly sluggish, unlikely that oil will really have a big bang day in the sun. So keep that in mind. It's a great positive for India, by the way. I just wonder, guys, just before we go to the brokerage call, Parag Thakkar was making that point, right? That and typically when the pendulum swings in the bullish side, you tend to ignore all the negatives. When the pendulum swings to the other side, you ignore all positives and forget promoter buying, which is, promoters can buy when they do it. But RBI measures, lower oil prices, valuations having come back to comforting levels, if you will, all of that put together, oil is a big macro positive for India, right?
It is.
I mean, and with these current valuations, you are almost back, or actually back to the levels that you were at when the new government got elected. That whole premium has vanished again.
The only fly in that ointment is the reason why oil is trending downwards.
Global growth.
Worries about global growth. And if those worries actually come true, low because demand is less, because economies are not moving as fast, that's not good. That will balance out any of the positive if it goes through. So it's a bit of a tight line there.
But conversely, Tamana, I just ask both of you that if global growth is going to be anemic, US exceptionalism led to all flows going to US. If US growth starts to become anemic, the dollar at the margin might go for economies which are showing growth. I mean, we know what 2 months of some policy stimulus in China did to what was considered to be an uninvestable market by foreigners. This is a market where policymakers are gunning for growth. But at some point of time, it will come back. In 2025.
Caution there, to the point on China. Yesterday you saw, even here you saw metal counters rally because China made one statement about 5% growth, right? So if the growth there sustains, do you not think that still people from the...
At 26,000, I could buy that argument, Alex. At 22,000, the valuations are in favor. I'm just saying, I'm not saying kal hoga parso hoga. I'm now for the calendar year 25.
The turn is coming. It depends on how quickly you can see it. I suppose that's what matters. And market's not looking bad at all as the pre-open session is almost ending. But let's get to the big brokerage call of the day. Macquarie has maintained an outperform on REC and PFC. Harsh joining in to tell us why.
Well, no real change with regard to target prices. A nearly 75% upside on REC from here. That's why it really stands out. And a 67% upside on PFC from yesterday's close. And therefore, very, very bullish, or rather maintaining that bullish stance. Now, in terms of what the problems could be, and Macquarie highlights some of those. First, talking about how PSU sentiment in general has been weaker, and therefore you've seen some of these stocks, take a bit of a beating, and therefore an opportunity coming out of it as well. The second piece is with regard to growth concerns. And while they're talking about how the PSU basket in general has declined and therefore PFC, REC have declined, no real surprise there. But some of the other factors, Macquarie calls it as a bit surprising because they don't see some of those playing out. And I'll highlight those. One, decline in growth, they don't believe that's a big concern. Increasing competitive intensity, also not a big concern. And the soft power demand, some of these things they believe are overblown and a lot has been built into the price unjustifiably is what they're saying. Structural story remains intact for some of these power financiers. We saw an upgrade even by CLSA earlier this week. Again, target prices were extremely elevated and therefore upsides were large, and therefore this one stands out. But what has not changed? One, lower credit risk, that seems to be the norm. They also see that growth has come off because prepayments have started to trickle through, and that's impacting the growth number with regard to the AUM. Strong ROE it continues, that hasn't changed at all, and relative valuations remain subdued. All of those factors likely to play out and hence the upside.
All right, so that's on the pair REC PFC. They've had a few bouts in the recent past where they found buyers, and a lot of you've seen significant up moves in the recent past. So watch out for those too. We've joined this morning by Shrikant Chauhan as well, Kotak Securities. Shrikant, good morning to you. And the initial uptick seems to be quite strong and building on yesterday's move as well. What are the key levels to watch on the upside in your opinion, and which stocks do you like right now?
Good morning, Alex. Good morning, everyone. For Nifty, after almost falling for 10 days, now it is bouncing back from the important support levels, and which is something really positive, because whenever the market approaches to the oversold levels, at the same time, if it falls to the important support levels, that time actually the recovery comes much faster and larger than the expectations. So this time also the way it recovered, I think the next level to watch out for would be 22,500, because there the market is having a huge amount of call writing. So close to 22,500, 550, we can see some resistance. And today, after opening higher, we need to be a little bit careful while adding long positions. Instead of adding positions, we should look for reducing weak long positions. But in case if there is any correction during the day, then close to 22,300, 200, the market is having excellent support, and there we should look for taking some long bets.
Okay. So, but Shrikant, okay. So, reduce weak longs, give us maybe a filter of some of those stocks there, but couple that up, Shrikant, with your stock recommendations for the morning.
Yes, Sinek, today we are expecting some activity in real estate stocks. There we are expecting further upside. In that, we like DLF, Lodha, Prestige. All these stocks have recovered very well from their lows, but specifically DLF looks good because it has corrected to its important support levels. From here, the stock can move to the levels of minimum 680, 685. We can keep stop loss at 653 for creating any long positions. And the other stock which we like is Divis Pharma. And if we consider the overall activity in the pharmaceutical stocks, then most of these stocks are bouncing from their lows. They have fallen to their extreme levels in last 7-8 days on the back of tariff-related issues and all. But broadly, Divis looks good at current levels with a stop loss at 5,400, and we can again expect 5750, 5800 sort of levels.
How are you liking Zydus this morning, Shrikant? Since you spoke about Divis as well, Zydus in focus because of a FDA nod for a cancer drug, but on the charts?
In fact, Tamanna, if we see the long-term pattern and chart of the stock, Zydus Life, then it is correcting from the highs. And after correcting to the support levels, again, we can expect rally towards the levels of 1200. So broadly, I am of the view that the stock has already completed its correction close to 850, 870 levels. And again, if there is any rally, then as I said, we can see the higher levels. But in the near term also, I am seeing the levels of 980, 990, where the stock has spent maximum time. So close to 1000 levels, we can see the stock moving in the near term.
Okay. Any other names, and I know that you've already named Divi's, you've looked at Zydus, but some of the other pharma pack players, Shrikant, do you like anything going long right now?
Yeah, in that space, Alex, we need to focus on CDMO stocks because there the real genuine buying interest as well as momentum we can see. And in that, we like Aarti Pharma. We also like Piramal Pharma. All these stocks are rebounding from their lows. Biocon is something where we should focus because the stock is in the range. It is not crossing the level of 400. It is not breaking the level of 300. Again, it is rebounding from the lows. So there also we are bullish. I'm again expecting the levels of 350 sort of levels. For Aarti Pharma specifically, if we see the entire pattern, then the stock is into strong uptrend and the stock can again move back to the levels of at least 850, 870, which was its previous highest level. So at current levels also it's a buy.
Shrikant, one very quick thing, two stocks, Reliance and Adani Enterprises or Adani Green. Big move in Reliance this morning after the upgrade. Adani stocks had a big move yesterday. We have 20 seconds. What would you trade, if anything?
Yeah, I think Adani stocks are really doing well and most of these stocks recovered from their lows. So Reliance, of course, it has fallen to its extreme level, again bounce back to the levels of 1250. But for Adani Green and Adani Enterprises, we have specifically a bullish view based on its technical formation. Otherwise, we are bullish on Adani Ports. There we have a fundamental call also and technically also we are bullish on this.
Okay, Shrikant, we'll actually ask you about Adani Green because that stock has been on a roll the last couple of days post-market open, because here's how the markets are starting off this Thursday morning in the green. Well, about much better, by the way, than what the implied was suggesting. We kind of spoke about the possibility. Banks leading the way, not surprising at all. IT 0.5% higher and mid caps and small caps next up on your screen. Percent higher for the mid cap space, the small cap space after hitting crucial levels on the valuation front bouncing back. Let's get the heat map up on the screen. Banks are cooling off, by the way, interestingly. Interesting there. But the key gainers are oil beneficiaries or oil sensitives. So BPCL up 2.78%. Tata Motors is 1.75%. Reliance, interestingly, I think because of this Kotak upgrade today, finally Kotak turning positive on Reliance is a big thing, 1.76%. Then there is Asian Paints, oil beneficiary again. Hindalco, Tata Steel, metals are in focus because of all the conversation of the safeguard duty. Who knows? Do we see some action today? But just that there's a lot of green out here, very little red. What is in the red? Well, no reason really for Infi, Bharti, etc. It's just that the market is currently preferring some of the others, and which is why those stocks are so much in focus. But today, banks are vacating the space for Reliance to make a move and for some of the other metals or sensitives to make a move. I think the points contribution will show that we might still have banks maybe, but in the top 20, you don't have a large banking stock as yet, which is the other interesting part of today's up move, Tamanna.
The recovery in Tata Motors is quite interesting today as auto stocks in focus. All the news not great for auto stocks, but looking good for Tata Motors, which got hammered a fair bit. A good day on the street, and let's look at the broader indices very quickly before we get you the sectoral heat map. What's happening with the mid cap? So this is really heartening because the index is doing well, that's fine, but your broader markets, and that's where portfolios have really suffered about 1.5% up, is truly heartening today. Let's pull up the sectoral heat map for you as well and see where there's most green on the screen. No surprises there. Oil and gas, we've been speaking about it since this morning. Crude below $70, and that's really helped. You've seen the small cap 250 up there as well. So this is a broad-based kind of rally. The only red on screen is India VIX, and that's something that we like to see. Autos also not doing too badly. So all those reports of, because of Tesla's entry into India, a push for zero tariff duties, not making too much of a mark on auto companies. Energy, metals, these are the themes that you're seeing this morning. Even on the lower side, relatively IT, I wouldn't complain too much about it. But let's look at specific stocks and what is happening today, some of them that we have picked out for you as well and which were on our list. Let me start with Zydus, and that was on top of my watch list this morning. It's got a nod from the US FDA for a cancer drug. Let's talk about a 3% up right now. REC PFC, this was our top brokerage call this morning. Macquarie has a bullish note on it. This is also telling you how you should have seen NDTV Profit since this morning, nearly 3% up. I want to look at the entire pack which will be impacted by low crude prices in totality. So HPCL, BPCL, IOC, all three in the green. HPCL leading the pack over there. Was also the top pick from our technical analyst. Asian Paints, Berger, let me look at those as well. Of course, you have your airlines, which will also see margins being comforted a bit by low crude prices. Interglobe, Asian Paints, Berger, all up in the green. I wonder if spices as well, because of low prices. Yes, about 3% up, not half bad. And IOC joining in the party. Gensol, I wanted to quickly pull up. I had picked this out. They put out a clarification yesterday after a lot of pain points coming in and worries about financial irregularities as per one note by rating agencies. They've been downgraded as well. Their clarification has not helped. That stock about 10% down. So those are the outliers, I would say. Credit Access, Grameen, if you can pull up very quickly. Their business updates on your screen right now. And not looking too bad either. Remember, for the BFSI space, microloans and the quality of microloans has been an issue. This update seems good, about 1.5% up. So overall, a lot of green on the screen today.
Absolutely, and I want to add one more stock to the list of companies that you highlighted already on the oil prices. And the lubricants also stand to benefit, lubricants companies. So pull up Castrol, because it's gaining quite considerably. It's up about 4% or thereabouts right now. Shrikant, I'll come to you first and then I'll go back to Nirav on some of these oil sensitives. But lubricants, Castrol, it's still considerably off its 52-week low, though it's come off its 52-week high, though it's come off its 52-week low quite considerably as well. So what is the potential on the upside?
Yeah, see, technical pattern is also indicating us that it is retracing to the sell-off that we saw from the highs of 285. And the next level to watch out for would be 255, 260. So there again, we could see some profit taking, but at this level also, we are expecting further upside. And on the dismissal of 285 or 290, we can see fresh up move for the stock. But yes, in the near term, we can see upside.
Okay, in the near term, you could see upside on Castrol. Nirav, we've spoken about a raft of these oil sensitives, but you haven't given us a view on Castrol specifically. Lubricants, of course, also stand to gain, and we haven't spoken about paints either. So crude at less than $70, if it sustains, huge positive, is it not?
Yes, definitely. It's going to be a huge positive if it sustains below the $70. Because a lot of industries which are raw material sensitive from the crude oil point of view. So I think, as you pointed out about the lube oil, why just Castrol? I think there could be companies like Apar Industries or Savita Chemicals. These are also beneficiaries because they use crude oil as the base raw material. At the same time, you spoke about paints. Yes, a lot of products are crude based, and not only crude based, they are imported also. So I think the paint industry tends to import a huge amount of its requirements through imports. They meet their requirements through imports. So I think the dollar going down, rupee strength also could be a positive as far as paint companies are concerned. So it could be a dual benefit as far as paint companies go.
Okay, so Asian Paints also on up move today because of the OMC factor. I'm just wondering what would be the take, Nirav, at this point for your large private banks? Looking at the kind of liquidity coming in, are we raring for a rate cut? That seems to be the mood. Would you look at private banks right now or PSUs?
I think the preferred pick would be State Bank of India, and as far as the private banks are concerned, I think we would go with ICICI Bank.
So bank would be the topic. What about you, Shrikant?
I think, all these stocks have very close to their immediate resistance level, and if we see the entire pattern of these stocks, then they are in fact underperforming. They are not participating with the overall performance of the market since last 2 days. In that specifically, we are more focusing on NBFCs, Bajaj Finance as well as Shri Ram Finance, Chola Finance. There we are expecting further upside in the near term as well as in the medium term. So again, we could see the levels of maybe 700 for Shri Ram Finance, 1550 for Chola Finance, as well as 9,000 sort of levels for Bajaj.
Okay. Do want to point out on the benchmark, we've fallen off the high point of the day. Let's pull up the Nifty 50. It's now up about 0.2% or so. And the stocks that have declined quite sharply from the high point intraday, pull up something like a Trent, pull up something like a Wipro, down about 2% from the high of the day. SBI Life, Tata Motors also was one of the top gainers. It is now trading with just about gains of about 0.6%, down about 1.7% from the high point of the day. Tata Consumer, IndusInd Bank, Coal India, all dropping over 1% from the high point at this juncture. ITC, we've not spoken about this counter in a while. Nirav, I'm just wondering if at 400 levels, do you find value? Would you buy? Would you add on to positions? Would you build this into your portfolio?
Well, I'd like to wait for some time because I think we'd like to see at least the Q4 results. What is the performance of the paper division? What is the performance of the agri side of the business? How the tobacco business is doing? And with I think the hotel business about to demerge, I think it would make sense to wait for some more time and see how the residual business tends to perform.
Okay. What else? We've seen OMCs and aviation companies, paint companies, etc. All of them do well. So that shouldn't be surprising anybody. I just wonder, Shrikant Chauhan, maybe we already spoke about it, but maybe we didn't. But you were talking about how Adani Green, Adani Ports, and maybe Adani Enterprises fit in your list of trading ideas. My question is, they've rallied a bit already. Would you still be buying them at these levels?
See, if there is a short-term view, then certainly we should look for adding Adani Green at current levels. It is moving up with above average volumes. Currently, it is at 860, 870 sort of levels. But if we see the next levels, then the stock can move to the levels of maybe 1,050, where it has next leg of resistance. And current volumes and reversal pattern is indicating us that we could see further more activity. At the same time, Niraj, if we see the entire activity in the entire group, then it is quite positive. Stocks like Adani Enterprises, which was correcting from the highs, but the sell-off was quite gradual and the volumes were very, very low. But when there was a recovery, we saw a good amount of participation in the stock. So there also we can see some activity, but Adani Port looks really good to buy and hold. We can again see the levels of 1250 or 1300.
Okay. Thank you so much, Shrikant. Thank you so much, Nirav, for joining in today. And we're seeing markets actually struggling to sort of hold on to gains. So there are selling pressures there coming in. I mean, look at the Nifty IT, completely flat there now and almost falling into negative territory. So you're going to see that happening as well. Sharp slide from the highs already in the first 15 odd minutes of trade. But we'll see what the bigger picture is and are we really turning things around. To speak on this, Milind Karmarkar, Director and Fund Manager at Dalal Brocha PMS joins in. Milind, very good morning to you and great as always to have you on NDTV Profit. Thank you so much for your time.
Good. Most welcome.
So how are you reading, and I will say emotions, actually, I know you're looking at the chart screen and data, but right now what's happening in the market is also a lot about emotion. How are you reading the emotions on both ends? One which is saying doomsday and one which is only trying to look at the glass half full. Is the worst over in your view?
So frankly, emotions play a major role in the stock market movements. And I don't think, probably worst is over, but very difficult to take a call on the bottom of the market. But at the same time, history has shown that, whenever there are large corrections, the market always recovers. Like typically, if I go back to 2003 to 2008, when the market went up 6.5 times, there were many such corrections, 10%, 15%. But the one which I think is very similar to what we have seen now, but it was much sharper, It was about 30% correction in June 2006. And the reasons at that point in time the economy is slowing down, the prices have moved too ahead of fundamentals. At the same time, there is global uncertainty, and the market fell by 30%. In fact, the leaders at that point in time were typically most of the infrastructure stocks like ABB, Siemens, Larsen and Toubro, and many others, which fell anywhere between 25 to 40%. And but by that time, by 2006, the market had already reached 2.5 times from 2002 2003, and then it fell 30%, and people thought that it's all over. But from there, the market went up another 2.5 times to, by 2008 January, it was nearly 6.5 times from the bottom. So I don't think this time it's different. It's the same. The companies are doing well. Maybe the growth has slowed down a little bit. Doesn't matter. The basic story of India is still intact, and this should be taken as an opportunity to buy.
This should be taken as an opportunity to buy, but buy where and what? This becomes more and more important right now, Milind, because for the last 3 or 4 years, it was as simple for a lot of newer investors that you throw the dart at the dartboard and you're hitting something. I think that phase might be behind us for a while. So when you are looking at allocations, what are the filters you are applying and where are you seeing value?
So I have always been saying that our focus is long-term growth. So wherever I see a huge opportunity, in the sense we have India, which is growing at about 11-12% nominal GDP growth. So any company or any sector which can grow at least 15 to 20% for a very long period of time. And when I say long period, I'm talking about anywhere between 5 to 10 years and beyond. You should be invested in those type of sectors or those type of companies.
Milind, good morning. Neeraj here. And can you elaborate?
Good morning, Neeraj. How are you?
Very, very well. Thank you so much. Lovely having you. Can you elaborate on that point? What are those kind of companies?
So you know me, Neeraj. It's predominantly consumption. But when I say consumption, I just wanted to once again repeat that whether it's banking and finance, whether it's retail, whether it's insurance, whether it's pharmaceuticals, whether it's hospitals, these all, according to me, fall under consumption because they benefit out of rising per capita income. So as such, consumption, according to me, should be about 70-75% of your portfolio. And then, of course, industrials, infrastructure, even wastewater management and things like that. Those also could be.
Yeah. So, Milind, let's try and bifurcate some of these, because the last couple of days, the bit of a revival that we've seen in the last few days in the small cap space might have gotten people's spirits slightly up again, right? So would love to understand this in a bit more detail. Let's say the expensive consumption names, discretionary consumption, right? It could be the retailers, for example, in select cases, consumer durables.
I can't hear you.
Okay. Milind, can you hear me now? Okay. I think we are. Tamanna, you want to try? Maybe he can hear you.
Milind, can you hear me? Okay, I think we seem to have lost that line. We'll try and get him back. But I thought it's interesting he's talking about consumption. But of course, in a broader bucket, I suppose, not typically, you're not talking about your FMCG or only your discretionary consumption.
Likely not. A lot under the sun. 70% of portfolio under consumption and so many triggers. Maybe ask him, Tamanna, that. So, Milind, let's try and bifurcate this. Can you hear me now?
Yes, I can.
Okay, brilliant. So, Milind, let's try and bifurcate this now. Now, I'm first going to the first level or first order of consumption, and some of those names expensive. It could be retail, it could be consumer discretionary in some sense. It could be, if we classify EMS players, they're also catering to consumption, though they're manufacturing, but let's say in some sense consumption, right? So they are expensive, and we've seen in the case of Trent, in the case of Dixon, in the case of so many others, that a quarter of a shock coming in brings down the multiples quite significantly, right? So please take your time and tell us, how do you think about such times wherein some expensive names which have shown years and years of growth EMS companies don't have 20-year history, but 4-5 years of very strong growth, for example, right? And a quarter of mismatch, etc., pulls the valuation multiples down. How do you go about thinking through these? And are you constructive on these buckets after this corrective move that we've seen?
Well, frankly, when Trent went up to 8,000, even I was perplexed as to why it went up to 8,000. And then it has corrected as well. I mean, not only Trent, but many other stocks have corrected. But before that, I would like to give a disclosure that we do own Trent in our portfolio, and our fund, as well as personally, I own Trent in the portfolio. And this is not an advice or anything. It's just a discussion which we are doing. So coming back to these type of stocks. So when I say that we look at the companies with a long-term opportunity, you should look at it as a genuine long-term opportunity, and you should keep investing whenever there is a correction. When it comes to whether it's cheap or expensive. So if Trent grows, I'm giving again an example as Trent because you asked me so. So if Trent can go at 25-30% year on year for next 10 years, will not be the largest retailing company in the world. It will be much smaller. And despite that, so if you think that this is possible because Indian per capita GDP is likely to grow at about 15 to 20% uh, over a longer period of time, then you should be looking at these type of companies. Because I remember that between, I think, 2013 to 2017 or 10 to 16, I don't remember, when Trend did not go anywhere. Trend remained where it is. There were various reasons. Their store growth slowed down. So when we interacted with the companies, what they used to say then, and they even say now, that unless and until they get a good quality uh, retail space at a price which they think is beneficial to the company, only then they will grow. So whichever company is, even for that matter, Avenue Supermarket, they don't decide, they don't say that, okay, this year we will open 500 stores and we will be miserable if we open only 200. No, that's their aim or that's their goal. Whether it happens depends on a lot of other things. So these type of corrections, I think people can look at for investing in these type of companies. So I'm not worried why these companies came down, because I didn't know why these companies went up as well. So the focus has to be long term. The focus has to be the long term earning potential, and then you consider the PE after considering the long term growth potential.
Right.
If that you think is comfortable, you invest.
Got it. Milind, so just one follow-up here. What are ideal valuations for, I mean, and so by the way, I didn't ask you about Trend, but I just asked you about the broad bucket, but I'm glad you evoked that because it's a conversation point, right, with the store release numbers yesterday for Trend, etc. But just this whole retail space, right? Avenue Supermart's Trend, both of them might trade at almost same valuation multiples currently. Growth rates are dramatically different, and both of them are high-quality franchisees. So how does an investor like you, for example, decide which to choose? And if you have chosen both as well, how do you decide where to allocate more? Because both of them are trading at the same multiples despite the difference in growth rates.
That's true. There are two aspects which I would like to bring to your notice. One of them is Trent is an apparel company, but it also has a grocery store in it. While as in case of Avenue, it only has grocery business. It also has apparel, but frankly, apparel as of now at least is not very significant. In India, the grocery market has a much larger opportunity than apparel. But at the same time, the first, let's say, discretionary buying happens in apparel and not in grocery, because grocery you have many options, while as apparel you have there are certain brands which you like, and that is the reason why you go there. But over a long term, I think both have got equally large opportunities. So a 10-year view, I think, whether it's grocery, whether it's apparel, so anything which directly benefits out of rising per capita income. And here too, I would like to bring one more thing to your notice. that though we talk about, large middle class in India, frankly, if you ask me, it's the 90% which are below, say, $5,000 per capita. These are the people which over a longer period of time will move to the higher level and will start benefit. I mean, the companies will start benefiting because these consumers who are $5,000 and below will move higher, and that is where the maximum benefit can come in. So any company which is focusing on the lower end of the pyramid is likely to do much better than the companies which are there at the higher end. Incidentally, in case of Trent, they started all the verticals. So because of that, whether it's high end, middle end, and low end. So that is the reason. And grocery, where again, right now, because there is another debate which goes on between Zomato and Zomato and the old format stores. I think ultimately, the people who focus or the companies who focus on the lower end of the pyramid will benefit maximum.
Yeah, so, you've actually led beautifully to my next question, Milind, which is how excited are you about the platform companies and that quick commerce sort of movement? Because that's the hot story, and since you look at consumption so closely, are you as excited about it as the street seems to be, or do you think it's a bit overdone at this point?
I think even platform companies will do well. So they are into different segments, frankly, or they address different needs. For example, quick commerce. Why everyone is excited? Because all of us are sitting in cities with high population densities, and everyone is busy or thinks that he is busy, and that's the reason why he orders from a Zomato or a Swiggy or these quick commerce companies. It's an habit which can stick on. But my view is that these companies will do well in those cities where the population density is high and where per capita income is high. To extend beyond that, it could be difficult for them. Whether this is a fad and will die down over a period, I don't know. Only time will tell. But regarding population density and high per capita income, if the population density is low, it doesn't work, because that is what has happened in the West. It has not worked. Quick commerce has not worked in the West. It's worked in India because of the high population density, especially in cities like Bombay, Delhi, Pune, and so on. So I am bullish on that, but if you ask me, these companies could do well for a 3-4 year period. Beyond that, I don't know. If this model succeeds and they are able to penetrate the smaller cities as well, they will continue to do well. But I think whether it's large format grocery stores or large format retail stores, it's possible that they may grow much longer than these guys.
Okay, so if I were to ask you, Milind, to look at FMCG, consumer durables, retail, and then quick commerce as the bucket of consumption, how would you rate them in terms of your most favorite to least favorite?
So retail is my most favorite.
Okay.
Then comes platform companies. FMCG currently, we normally don't invest because we have seen that, say, for example, in the United States, when organized retail just started, at that point in time, the top 5 companies in the US were FMCG companies. 20 years later, top 5 companies were all retailing companies, because the baton of uh, control over prices moves from FMCG to retail. That's what happens. And that is also likely to happen in India. So in India, most of these large companies like FMCG companies, like whether it's HUL or these are mature companies, and they are likely to grow at 8 to 10%. But beyond that, whether they will grow, I don't know. And since we focus on only those companies or those sectors which can grow higher than the nominal GDP growth, we would be underweight or we may not own these companies.
Okay, thank you so much, Milind. Pleasure as always speaking with you, Milind Karmarkar there, and at a time.
Thank you, Neeraj.
Yeah, at a time when consumption is in question, he's fairly bullish, starting with retail as the top focus. But we're speaking about Mahanagar Gas today. That's in focus, with the stock seeing a strong up move in early trade, still about 3.5 nearly 4% up. We're going to be speaking with the management exclusively in our studios, but before we do that, Mihika is joining in to set up that conversation.
So the city gas distribution space has been one in focus because of many regulatory changes in the last couple of months. Now, while MGL and the space has overcome the whole APM deallocation debacle, we need to understand how the potential end of marketing exclusivity impacts the space and the company. Furthermore, we need to see where the margins can go from here. Their Q3 FY25 EBITDA per unit stood lower at 8.3 rupees due to APM deallocation, which has been restored to a certain extent. And on the other hand, the company's volumes have seen strong growth. The FY25 guidance stands at 12%, and the implied Q4 volume growth also stands at 12 to 13%. Something that we need to also talk about is the gas sourcing from here on. The current gas sourcing mix is 49% from APM, 15% from difficult fields, 30% from the Henry Hub link contracts, and 6% from spot market. And lastly, one thing that will help us understand the outlook for the company are the CNG vehicle additions, which did see a 72% monthly uptick in January, but did fall 57% in Feb of 2025.
Okay, all right. Thank you for that, Mihika. In fact, let's get straight to that conversation. Ashu Shingal, Managing Director at Mahanagar Gas, with us in the studio. Sir, thank you so much for your time, and great to have you here at the NDTV Profit Studios right here in Mumbai. Superb. So interesting developments to speak about, and we'll get to all of them. But let me start with these notices issued by the BMC, the corporation in Mumbai, where they want bakeries and restaurants transitioning to gas. This is also now a theme that you're seeing across large cities. For example, in Delhi as well, there has been this clampdown on vehicular pollution. I'm just wondering, what is the feasibility and how big an opportunity this is for a Mahanagar Gas?
It is an opportunity, but more than that, it is the necessity for the city. I mean, in the sense that the pollution level at Mumbai is perhaps higher in few weeks as compared to NCR and Delhi.
Yeah.
So we have to be more aware about this problem, and that's the way sumo motu, the High Court, has taken this cognizance, and they have said few things, like they have said that bakeries and other eateries which are consuming polluting fuels need to shift to cleaner fuels like PNG and LPG, and maybe electric oven also. And also they have said that CNG and EVs to be promoted in place of petrol and diesel. Now, coming to your query on bakeries and how we are prepared, so we already have a network, because the company was formed in 1995 and we have been laying a lot of network. Around 7,000 kilometer network is already existing in Mumbai and nearby region. So I remember that there is 480 bakeries which were mentioned in some BMC order or maybe High Court order, that these needs to be shifted. So out of that, 280 bakeries are there where we have the pipeline in front of the bakeries. Maybe we have to lay the last mile connectivity of around 50 meters, 100 meters or something like that. So we are prepared depending on the conversion, because they are currently using, say, coal or wood or some other fuels, diesel also sometimes. So they have to change the burner, they have to change the setup. We will lay the pipeline and they can start using the new fuel.
Yeah, but is it a bit of a hitch to get them to take on those extra costs?
Yes.
Some of these are very low margin businesses.
Absolutely right.
They're not going to want to add those costs.
That's right.
Yeah.
It's a very unorganized sector.
Yes.
I mean, many of the bakeries are very small scale where they are using wood because of the cheap and maybe quality also is there. But if you go for a oven where the gas is being burnt or LPG is burnt or electricity is burnt, then you get the magnitude is more. Like you can produce more. The efficiency also improves. But you are very right. They have to incur first initial capex. So that needs to be funded or subsidized by some mechanism. Like in our case, we have been, I mean, there were some media reports that some deposits are being asked from the bakeries. But we have completely waived off that deposit. Like earlier, 90% bakeries we were not asking any deposit. But 10% we were asking deposit because the line of pipeline was to be higher. But now that we have waived off, we are also helping them to lay the last mile piping and also doing it at our own cost. Now we know that there are some schemes from the government side, BMC also, that some of the funding can happen as a subsidiary for conversion from a dirtier fuel to the cleaner fuel. So all this can make it happen. I believe the government is very cognizant about these facts, and the High Court order is taken in the right perspective. Yes, there will be pain points in the initial phase, but hopefully we will live with it.
Mr. Singhal, so what's the big picture of as we sit at the start of 2025 virtually, I mean the first quarter, what's the big picture for this whole clean fuel transition? Because there are 2 or 3 things, right? Electrification is picking up. Does that reduce the potential demand for gas vehicles, even at a point of time when, at least in Mumbai, it seems to be almost inelastic? Price variances notwithstanding, those numbers are looking steady for now. Does that change? The geographies that you have for laying pipelines for home gas, right? I mean, and the rules and regulations surrounding, what would be broadly the plan and what would be your plans in this?
See, we are very much geared up to this transition for the cleaner fuel to happen, because as compared to diesel and petrol, CNG is much cleaner in terms of both carbon dioxide emission and NOx, SOx also, plus PM 2.5 is main ingredient which causes pollution. So we have been laying a lot of infrastructure. In last year, 50 stations have been added in MGL geographies and 35 more in our Unison acquisition. So 85 have been added in a base of 410 stations. So there is an addition of around more than 20% addition. And every next year also we have similar plans. So that is one part of it. We are laying a lot of infrastructure. Pipelines are also being laid. The second part is we have given a lot of stability to the CNG prices also. We are one of the cheapest in the country. And despite the fact that the deallocation happened in October and November, but we did not raise the prices immediately. We did some portfolio management to get what is the actual cost of procurement. We did some adjustment. We absorbed some cost. And in January, the deallocation was restored to the 50% level. So we raised some prices, 3 rupees, but as you rightly said, it is quite inelastic in the sense that a owner which already has CNG will always run on CNG. For petrol, it is different because petrol is a dual fuel. You can run the same vehicle on petrol or CNG. But we are launching various schemes also for diesel vehicles. A person, when they are going to purchase a vehicle, so we are almost funding 50% of the differential cost between diesel and a CNG vehicle by way of our CNG Mahotsav schemes. So that has also given traction. So overall, we find that we will be able to maintain, because of low prices, more infrastructure. And currently, if you see the prices of petrol are, CNG is 45% cheaper than petrol and 18% cheaper than diesel. So which is a good traction to convert to these CNG vehicles.
So then, therefore, if I were to ask you, and we'll get to the minutiae in a bit, but if I were to ask you that if you were to look 3 years out, 5 years out, depending on whatever vision you may have, where do you see MGL then versus where you might be at the start of 2025, assuming follow a calendar year? Or let's say at the end of FY25, you're at a particular level. Where do you see yourself at the end of FY28?
See, the physical volumes are growing. And if the physical volumes grow, the financial numbers will take care of itself. See, we are having a good margin also.
Growth can be 1% also, sir.
No, that's right. You are right.
Also.
If you see last decade or so, we have been growing traditionally with a CAGR of 5%, 4.5% to 5%. This year in 9 months, we have seen a growth of 11%. So definitely there is a momentum which has started picking up. If we take Q4 also, there can be another 1-2% addition. So year on year, last year it was 5.5%. This year could be 13%. So as you asked, that next 3 years, we can see the movement at least double-digit growth every year. So if that be the case, our numbers will speak by itself in terms of physical growth. And that's what our focus is. If the physical growth comes, financial numbers can be slightly up and down, but definitely they will reflect in the financial results as well. That's we are very pretty comfortable with that.
But you know, in your case, in this kind of company, there is one more factor, which is the policy factor, and we saw that with APM allocation back and forth, some impact on your unit economics and your EBITDA per unit in the last quarter. Then there was a reversal. What is the picture looking like right now? Because we saw that impact in Q3, then there was a reversal. Where do you think you are at EBITDA per unit? And do you have any conversation ongoing that you can tell us about in terms of how much allocation you can expect? Will this now be steady?
See, we have to look at it slightly macro level. Last 15-20 years, the government have been very consistent with their policy support to CGD sector. Therefore, we have seen a lot of foreign investment, direct private investment also in the country, in the CGD sector. Now almost 98% country is covered with the allocation of geographical areas, licensing at least. Now this deallocation happened because we have to also acknowledge the fact that upstream producers, mainly ONGC, they also incur more cost to produce same amount of gas, or to keep that level they need more money into it. So when Kirit Parikh committee came in 23, they recommended that they should be supported with more better priced mechanism for producers. So 1.5 years it took almost to get this adjustment, and in October last year and November last year, there were 2 cuts.
Yeah.
So we were first, to put it in the right perspective, PNG we are getting 100%. Industrial and commercial, no allocation was ever there. So we were anyway sourcing LNG for supplying to the industrial and commercial segment. The CNG segment got impacted, so we were getting around 70%, which came down to 38%.
Yeah.
And then in January it was restored, and now we are getting 51%. Now, if you look at from a more macro level, more LNG is expected in another few years' time, because more LNG terminals are coming up, liquefaction terminals in US, Qatar, Australia is there, and maybe some more can be added up. So we expect that the supplies will be supplemented, whatever domestic deallocation is happening can be taken up through the term contracts.
But that will increase your costs. I'm just trying to understand where it sits on your...
Just to clarify it, the APM gas is not reducing. It is getting renamed as new well gas. So earlier we were getting at $6.50 per MMBTU. Now we are getting at 12% to Indian crude basket, which is effectively around $9, $8.50 to $9. So the weighted average cost goes up, you're right.
Yeah.
So it was around $7.2 per MMBTU, now it is up to $7.8 per MMBTU on the weighted average basis. So we supplement this gas by new well gas, HPHT, which is domestic, slightly higher price, or we can take it through term contracts. So all combination of all three, plus spot gas is available, Indian gas exchange is there. All this is a combination which we keep on doing to make sure.
No, I'm sure, sir, but I'm saying that the fact is that APM allocation has come down.
That's right.
There is going to be a period of readjustment. I'm wondering how that's going to look in, say, this quarter and the next couple of quarters on your balance sheet.
Margins have come down.
Yeah.
Earlier we were having a margins of say 13 rupees. Now it has come down to 8.5 rupees.
Yeah.
And we had an impact of around 6 rupees per SCM. So 3 rupees we have increased the prices, and the restoration has happened by the 50%. So now we are at par. Now with portfolio management, and we expect that the prices of LNG to keep low, we expect that stability will be there in the CNG
Will
prices.
you need to take more price hikes?
May not be. Because as of now we are at par.
Okay.
Pre-cut level and current level are at par. We have taken some price hike and some readjustment in the restoration has happened. So we are at comfortable at that current levels. If it goes further down, then we may think about it.
For bookkeeping purposes, so unit EBITDA, which was had slipped to higher single digits, back to double digits in quarter
yeah,
four?
I mean, if you see last 5-6 years, we have been having an EBITDA of 7 to 8 rupees. Last financial year was pretty good. We were having 13 rupees and slightly higher than that. Then we gave a guidance of 10 to 12 rupees.
Right.
Now perhaps maybe we put down one number, 1 rupee, so 9 to 11 rupees could be a new guidance.
Okay, because the number that we had was that Q3 was about 8.3, right?
That's right.
So you're saying it could be now between 9 and 11.
Correct.
It could be double digit as well in quarter four.
Q3 was slightly low because we did not raise the prices for some time.
Exactly.
Yeah.
So back to double digits likely.
Could be, yeah. 9 to 11.
9 to 11.
Somewhere 9.5 to 10.5 rupees or something like that.
Fair call. The other slightly, I mean, so this is one one set of picture. The other thing is the longer term supplies, right? Almost every country. I was reading an article which said that the LNG procurement for various nations will really move up. India seems to be doing that in a big way too. What are you doing for securing longer term LNG supply contracts, sir?
We don't go directly to the market for procurement of LNG from international sources.
You or anybody doesn't go, you're saying?
No. There are other big companies, aggregators, who does this job.
Okay.
Because our requirement is very small.
Okay.
So it doesn't make sense because we have to book capacity in the regas terminal, pipeline, and then take it. So that quantity does not justify ourselves to directly going to the international players. So what we do is, we go to aggregators like GAIL is there. HPCL, BPCL, IOC, Reliance, and other players are there. So we float an inquiry, and whosoever give us the best bid, depending on their aggregation and portfolio, we procure the gas. So those are called term contracts.
Yes.
Typically, they enter for 10 years, 15 years contract. We enter for 3 to 5 years contract. That is another difference.
So does that buffer you in terms of fluctuations in prices, currency fluctuations, what's happening geopolitically? Just trying to understand if that hits you at all.
See, these are all different related things. Like we can procure gas in Henry Hub based contracts from US, or we can have NBP contracts from Europe, or we can have JKM contracts from Japan. So all three indexes are different. So that is one part. Currency fluctuation, we are exposed, because we procure everything in dollar denomination and we sell in rupees. So that variation, if rupees get further deteriorated or depreciated, then we have to take some call on that. But otherwise, term contracts, 3 to 5 years, we get very stable prices. We choose our index, like Henry Hub is more stable. So we have our more inclination to go for Henry Hub contracts, and then we take a call on that.
I have one final question, Mr. Singhal. Are you more excited than Rajiv Bajaj is for the CNG bike?
No. We are complimenting each other.
Yeah,
I mean,
course.
we were also very much pleasantly surprised that two-wheeler segment, which was never for a CNG, has come up. And I was at the launch of that bike. So it is absolutely perfect. I mean, very good, robust bike. So we expect this new segment to open up, but it will take time, because each bike hardly takes any CNG. Hardly 1 kg, 1.5 kg to 2 kg max. Whereas a commercial vehicle take 20 kg, 30 kg.
So not very meaningful. I mean,
no,
a good addition,
it is more volume. If more number of bikes come, then it will be significant. But our understanding is that it will take at least 7-8 years to really get a meaningful impact on that.
Having said that, in Feb, I think your CNG vehicle addition numbers also came off a bit. Was that a number of factors behind that?
You are saying came down?
Yeah, in Feb.
Slightly. Maybe only a slight, because a matter of sometimes people purchase more in January, year change is there.
Okay.
Otherwise, not anything significant. Our scheme for CNG is already going on. And the prices are very stable. We are one of the cheapest in the country in terms of selling CNG, and we have maintained low prices for quite some time.
What are the kind of expansions you're seeing for fueling stations and pipes also in the MMR region? There's always long lines outside all of the fueling stations.
The lines are there in particular stations, in particular region, in particular timings. Like in Mumbai, yes, there can be some stations which are more queue is there. But if you go slightly out towards Navi Mumbai or Thane and other places, there won't be any queue. The queue happens because in Mumbai, we don't have land parcels to put new CNG stations. OMCs have come up to our help to allow us putting more dispensers in their CNG stations. But as coming to the numbers, we are putting up 50 stations and 35 in the unison. So almost 20% number we are increasing every year. Although Mumbai, yes, we will not be able to put many stations. But let us see, we are in touch with the government and other agencies who have some land parcels. Even BEST, their depots, we are only using 18-20% capacity. So if 2 stations have been allowed for commercial vehicles on an app based. So similar, if more stations add up, then we will have more stations to fill up commercial vehicles.
Just one last question, sir. There's a committee now in place for phasing out petrol and diesel. We saw some moves from the courts in Delhi as well. You are a part of that committee, if I'm not mistaken. Yeah. What is the outlook of that committee? And if this is a plan that comes through, what does it mean for you?
See, it's a very positive development. If you see NCR, Delhi region, that happened somewhere early 2000 when the pollution level was very high in Delhi NCR. And because of several steps, one of them was phasing out diesel and petrol commercial vehicles and replacing with CNG. So the growth of IGL has increased in those 5-6 years in a good substantial manner. But more than that, there are several things which are being discussed. Like there are more polluting vehicles which are BS3 and below. Which are more polluting as compared to, let us say, BS6 vehicles. So it will be a gradual step, more practical approach. The recommendations are under deliberation. So maybe some of older vehicles and some of BS3, which are more polluting vehicles, will be phased out in gradual manner. New registration of diesel vehicles or commercial vehicles will be deliberated, and more stations will be put up to enable a smooth transition. We are not going to recommend anything which is not practical.
All right, so interesting times ahead, and I think these are some things which just have to be done over time.
Absolutely.
It's a no-brainer. Can't really wait for it any longer. And you're right, days of pollution in Bombay are sometimes as bad as Delhi.
Higher than Delhi.
Higher than Delhi. Terrible. Thank you so much
Thank you.
for your time here and for this wonderful conversation.
Thank you so
much. It was,
much.
of course,
My
the
pleasure.
view coming in from Mahanagar Gas. We'll take a very short break, but we're right back with a lot more conversations and all of the latest market news. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
All right, back with India Market Open right here on NDTV Profit. Good news for auto fans. It is official that Tesla is set to open its first showroom in Mumbai's BKC. The company has put down some amount as security deposit for a 4,000 square foot showroom space. My colleague Tushar joins in with more details. Tushar, over to you.
We're outside the Maker Maxity building in Bandra Kurla complex in Mumbai, where Tesla is set to open its first India showroom. Tesla has actually leased 4,003 square feet space in the ground floor of this building at 881 rupees per square feet, making it the biggest or the most expensive commercial real estate deal in India. Second only, or actually more expensive than the Apple BKC store, which is also behind me at this point of time. A total of 2.11 crore rupees has been deposited as a security deposit, while the rent is set at 36.25 lakh rupees per month. The rent will increase at 5% per annum. The total lease is for a total of 5 years. Tesla is expected to open a second showroom at AeroCity in Delhi. The first model that is likely to come into India is the Model Y at about 60 to 70 lakhs. The other model that can come in if Tesla is more aggressive with its expansion would be the Model 3 at about 30 to 40 lakh rupees in India.
Okay, 30 to 40 lakh rupees in India. And that's where the next story comes in, because the negotiation is on right now on what are the tariffs that India will impose on imported vehicles. And of course, in the wake of Tesla's impending entry, that becomes more important. The US tariff policy as well as India's own EV policy now under the scanner. Puneet is joining in to bring us more details. So Puneet, reports now saying that the US has started the negotiation saying we want zero tariffs on automobiles that you import. What are the implications of this, of course, for our own domestic auto companies?
Well, definitely, it's a very interesting juncture where this particular agreement and, these negotiations are right now. As you rightly said, US is eyeing zero tariffs on import of cars in India as part of the larger trade deal, according to reports. Now, currently, just for context, India currently taxes 110% of the cost of the car in terms of the import duty. So it's a huge gap there currently. Apart from that, Trump has, of course, warned of reciprocal tariffs action against India because of this particular high auto tax. While India is currently reluctant to bring down such duties to zero, it may consider further cuts going forward as well. Now, it's important to know that India had unveiled a new EV policy back in March of 2024, where it had mentioned that cars will be having an import duty of just 15% for foreign car makers on the contingent that they will be setting up a manufacturing facility here in India. Now that is, of course, still in the works, and none of the car makers from the foreign countries have approved this particular scheme for themselves. But this could be a game changer, because if it comes from 15% to 0%, as mentioned in this particular report, I think the likes of Tata Motors as well as Mahindra might be, having a hard bargain going forward. Apart from that, Tesla, as my colleague Tushar mentioned, has entered India with a showroom in BKC. The likes of Tata, according to this particular record, the likes of Tata Motors and Mahindra have especially lobbied against lowering the tariff specifically for the electric vehicles. I think that's one of the key things. And just a couple of points in terms of, what the EV policy essentially is. It's a minimum investment of about 4,150 crores, that's $500 million. And it will have 3 years, you will get the 3 years for a car maker to set up the manufacturing facility. In that time, you can import the cars at 15%. So that is the key context of this whole argument under the new 15% import duty. And I think from there is where the conversation will start at a 0% tariff rate. I think just one point I want to highlight, as you mentioned, and my colleague mentioned, of the cost of cars of Tesla in India. It'll be roughly 30 to 35 lakhs, but when we take into consideration the road tax, the import duty of 15%, the cost goes over 50 lakhs. And I think we discussed that before. So I think it's a lot of details currently in terms of this whole arrangement, and a lot more to take forward to as well.
Okay, Puneet, thanks a lot for that. Some interesting details. And now, the next conversation is with Metropolis, and the case for a chat is that they've gone and acquired, well, amongst other things, the case for a chat is that they've gone and acquired Agra's diagnostic chain, Scientific Pathology, I believe, between 55 to 83 crores. So that's a wide range, of course. About 3 labs, 11 collection centers, and definitely strengthens presence in Western Uttar Pradesh. Ameera Shah joins in to talk about that and more. Ameera, great having you. It's been a while. Thank you so much for taking the time out. Did Mahakumbh have a role to play in this decision?
Of course, we always need the blessings of all the gods.
Okay, that's a good one.
But UP is an amazing state. It's growing very fast, developing very quickly, and people of UP deserve to have the access to the best quality of diagnostics and the largest test menu. And we felt that by partnering with a leader from West UP, which is Scientific Pathology in Agra, it would create a great entry point for us, but also a great access for all people of UP for our 4,000 varieties of tests that we offer.
Okay. No, so yeah, I mean, what I meant was actually that what I meant by Mahakumbh was that if indeed we are going to see, an event at times triggers tourism residency in a big way, right? And it's a very populous state. So I wonder if this is the start of many things that you might do in that region as well, Ameera.
No, you're absolutely right. Last year we decided that we are going to focus on UP and MP, in a big way. And we started 8 new labs in UP last year and about 80 collection centers. But obviously doing the greenfield rollout is one part of it. But we felt that if we could also get really great quality partnerships with ethical, good quality players, that would really be a great addition on top. So, this is definitely the start of what you'll see of us doing in North India, not just in UP. And we're very excited for, not only having core diagnostics with us, now a scientific pathology with us. And we'll keep building a string of pearls across North India that really helps us gain market share and be a meaningful, contributor in North India in the diagnostics industry.
Ameera, hi, good morning. And great to speak with you as always. Just wanted some details on the acquisition. I'm seeing that the price ranges from 55 crores to 83 crores. That's quite a wide range. Just trying to get a sense of why such a wide range. Where do you think you'll end up at? And what is the kind of contribution you see to your top line? When does that start kicking in from?
So, this is a convertible structure with scientific pathology. And while we have signed the SHA now, it will close in another 20-30 days before the end of March. And 1st April, it will be effective. I guess before that, it will be effective in our books. We have a structure with them where we've said that, look, we are paying you 65 crores right now. We're valuing you at 100% for 65 crores. But based on your June 25 audited numbers, this number can either go up to 83 or it'll come down to 55. That's the range that the valuation can fall between. And therefore, we've given the range just to show the lower side and the upper side. But we are valuing it at 65 crores at the time of closing.
So 65 crores. So if your valuations come back to 55 crores, I mean, just how does that work out? And you've said 1st April onwards, it's on your books. What is the kind of contribution you see to revenue coming in?
It's the leading chain in Agra, but it's about 26 crores in revenue in the year 24-25, and it's a profitable entity. So, it will be a little bit higher than the Metropolis margin profile. So obviously that will get fully added into the 25-26 number, and obviously whatever growth that we see, from the base of 26 crores in the year 25-26. So while it's not adding anything very large into the revenue, but it is a great entry point. And, we've done this many times before, where we've acquired the leading player in a city, and then we've really grown them out, in a significant way over the next 5-10 years, across the entire region. And we're hoping to do the same thing with scientific pathology.
And Ameera, hoping to do the same thing with some other players in other geographies as well, or maybe even in Uttar Pradesh. I mean, in a lot of European countries will say that Uttar Pradesh is larger than their own country too. So I wonder if there is space for more acquisitive moves in UP and MP and elsewhere.
So of course, I mean, I think across North India, there are some markets in which we believe that we would continue to like to get deeper. We're quite strong in Punjab, where, now, of course, in UP, we've made a great entry. We have a fair amount of business in Delhi, but, even markets like Haryana, Rajasthan, Uttaranchal, Uttarakhand, I mean, I think these are all markets in which we would love to, have, again, good entry points and grow from there. So certainly keeping our eyes open and continuing to watch, how we can incorporate the best quality of labs across India under the Metropolis umbrella.
All right. Ameera, the other question is, the trend that has followed post-COVID. There was this COVID, ignore the COVID surge, but there is this uptick in diagnostic requirements, and then their competition came in from those online labs, etc. For a while, it was believed that would they eat into the market share of the incumbents, even if the organized market was only 15-20%, as the case may be. Just trying to think, 5 years out, a lot of things would have gotten settled. How do you see a slightly longer term CAGR growth for a business like yours or others which are incumbents, if you will? And for you particularly, if it is slightly different than what the industry growth rate might be?
So even right now, I mean, if you see, we're actually growing a bit faster than our peers. So I'll speak for ourselves. We are quite excited about the next few years. The last 5 years has been a real roller coaster, right? Because we had COVID, then COVID came off. Also with Metropolis, we exited a lot of our institutional contracts very consciously. And while that is good for the long term, of course, it hits you in the short term. So, there's been a roller coaster ride for us as an organization last few years. But having said that, we've only gone stronger and stronger in terms of every aspect of the business. So I feel very confident with where we are and where we are going. To your point, I think there was a lot of new competitors that came in, a lot of people who felt, oh, this is a great, easy business, we can make money. And I think after coming in, many of them have realized what we always knew. It's very easy to enter this business. It's very hard to build a profitable business. Because you have to be really good at what you do. You have to have a right to win and an expertise. It's not a commoditized business, especially when you're taking care of really sick people. The doctors do care for the quality of result. Patients do care. And therefore, I feel the incumbents will grow stronger and stronger. Obviously, depending on each person's execution rigor and strategy, one will outpace the other. But overall, I think the incumbents will grow stronger. And I think the people who are doing business in the industry or purely on a price basis, will have their own market, but that market will be, the tail end of the market, which doesn't necessarily need the best quality results. And we'll continue playing in the market of taking care of patients who genuinely want accurate results because, they're genuinely sick. So I think, there's enough place for everybody to play in the market. We're very excited about where we're.
Okay, Ameera, so just to round off that conversation, right? One is growth and one is profitable growth. And you're right that the last 5 years, there have been a few disruptions, including the COVID surge and the post-COVID, post that surge, a bit of a cool off. But when I look at numbers, even for a quality franchise like you, right? Top line is one thing. Operationally, your operating profits or bottom line, maybe because of the COVID thing and otherwise, the last 4 years, 5 years, you kind of come back now to the profit levels or the operating levels that used to be there. So my question is really that would you believe that now, henceforth, the next 5 years will be different? If there's a COVID surge or some other surge, God forbid, who knows? But otherwise, do you reckon that the operational growth or operational profit growth or EBITDA growth could actually be commensurate with what the top line growth might be for a business like yours over the next 5 years?
Actually, if you look at the last few years as well, the anecdote you gave about the last 3-4 years and the operating metrics not doing as well, if you actually separate out the core of the business, which is the B2C and the B2B, it's done very well. It's only dragged because of the institutional contracts that we chose to exit, like the government contracts we chose to exit, which caused a drag on the margin. And on the revenue. But otherwise, if we had not chosen to exit those, we would have actually done, 2% better, 1 or 2% better. Secondly, with the same time in the last 4 years, we've done an extremely accelerated lab expansion program. We've gone from 130 labs, which we were in 2020, to 210 or 220 labs right now. So we've really added 50% of lab capacity. And, all of these are not going to break even in the first year. So the last 4 years, we've actually carried the dilution on the margin because of building out these labs, and obviously they make losses the first year, and then they start to operationally break even. We are now at the end of our lab acceleration program, and by this March 25, which only means that going forward, since we're not exiting any more contracts, and since we're not now doing an accelerated lab expansion, it's very natural that the EBITDA margin will expand. So I think this was known to us in the last 4 years. It's not a surprise, but the fundamentals of the business remain very strong.
Okay, well, yeah, so well noted. Thanks for that, explaining that piece as well, Ameera, and wishing you all the best for all the acquisitions and organic growth as well. Thanks for taking the time out and joining us today. That's Ameera Shah on the UP acquisition and a longer term growth potential as well. The idea is that every pharma investor that we speak to is very constructive in the diagnostic space. It's great to talk to a company to try and understand how do they see the growth rates. Okay, Tamanna, some updates have come in. Credit access was one such update. So let's take it across to Harsh. Healthy growth per se, barring Karnataka, I believe, Harsh.
Well, yes, absolutely. So across geographies, you're seeing decent-ish traction build up, Neeraj, which is a positive because it likely signals that the bottom is here with regard to at least asset quality. Credit costs may continue to wane over the next quarter or two, and that's what my conversations with a couple of analysts also kind of translated to in terms of understanding. But let's talk about numbers first. Gross loan portfolio is up 2.5% versus December of 2024. So the last 2 months itself has seen decentish growth. Karnataka slightly sluggish on that count, 1% since December. In terms of new borrowers also, the growth clip is decently healthy, 1.5 lakh over the last couple of months added in terms of new borrowers. The portfolio at risk, ex-Karnataka, is falling, and that's one of the other key positives which is likely keeping the stock in focus. Excluding Karnataka, the portfolio at risk at day 0 has fallen to 7.3% versus 8% at the start of this quarter, and that's obviously a very key positive. With Karnataka, it's slightly elevated, so from 6.8% it's gone up to 7.5%. But Karnataka, in terms of collection efficiency, is bouncing back at the latter half of February. From around 99%, it declined to 95% at the start of February, first couple of weeks. Thereafter, towards the end, it started to pick up again. So 98% in the last week of February is what was clocked by Karnataka in terms of collection efficiency. So all of those parameters starting to bounce back. They've guided that in the next 1 to 2 months, which is by the end of this quarter itself, you'll start to see Karnataka bounce back and start to normalize pretty much fully, which is again another key positive, because that's the kind of number that the street will start to track at the end of this quarter. So lots of parameters looking positive. Credit costs over the next quarter or two will continue to weigh, but asset quality turning around.
Okay, so that's a good, that's actually very heartening, because Credit Access Grameen story might not be just Credit Access Grameen. It might be something that we're seeing in the space as well, 3% up on Credit Access Grameen, even as markets are not really holding on to gains. But having said that, there's no massive sell-off either, just about holding on. Nifty completely flat now in negative territory, but oscillating between the green and the red, as you can see. OMCs, I just want to see if the oil and gas, Nifty oil and gas is still doing okay, still holding up, Nifty energy is still holding up. Are those indices and key factors holding up? Because crude below 70 is really the story of the day, if you take a look at it. But another buzzing stock that is on focus is Route Mobile, which has recently announced a partnership with Nokia. Stock has been buzzing since pre-open, 6% up right now. Give us more details on this, Varsha.
Yeah, thank you for that. So yes, Route Mobile is buzzing on the back of, so it's a promoter company, that is Proximus and Telesign have partnered with Nokia to explore opportunities in network API, that is application programming interface. This solution is aimed at supporting developers when it comes to building new enterprise application, and the collaboration will enable both companies to expose their APIs in each other's marketplace, fostering greater integration when it comes to telecom system and various other industry segments. And this is the reason, this deal with Nokia is the reason why the Route is buzzing in trade today.
Okay, thanks a lot for that, Varsha. So, well, Route Mobile off the highs of the day, but still doing okay. The markets too off the highs of the day, flat really, but viewers, the small cap index 1.39% higher is doing remarkably well for itself. So keep that at the back of your mind when you're looking at the markets today. Banks too have completely cooled off. In fact, IT is outperforming banks. On that note, from Tamanna and me and the team that put India Market Open together, thank you so much for tuning in. Up next is Ask Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me, as always, is Mahima Vachrajani, and we'll take you through the next 1 hour of trade. Mahima, morning.
Morning, Alex.
Well, it's looking like a good Thursday so far, but the pretty picture that you saw at the start of trade, it's not as pretty as that because you've given up a little bit of gains. Of course, you have traded into lower territory for the Nifty 50, but we bounced back from the low point as well. We're trading with gains of just about 0.2% for the Nifty 50. Interestingly, the Nifty Next 50 is doing particularly well. So if you thought that large caps are underperforming, that isn't necessarily true because you have the Nifty Next 50 that's trading with gains of 1.3% or thereabouts at this point, and it builds on the outperformance that it had yesterday as well. You have the mid cap index that's trading with gains of about 1% or so, and the small cap index that's holding on to gains, trading higher by as much as 1.6% or so. And so quite a lot of strength in the broader markets at this point. You thought that the banks would be gaining in trade today, and it was a perfect expectation, but that hasn't really held true for the session so far, because you have the banks as a pack that are only about 0.1% higher, and of course the context is the liquidity measures that have been announced by the Reserve Bank of India that will push the system liquidity back into surplus. So you have quite a few banks that are gaining. Unfortunately, you have once again HDFC Bank that is proving to be a laggard and a drag, not just for the Nifty Bank, but also for the Nifty 50, as it was the case yesterday. But Mahima, let's go across to our guests straight away and let's kickstart the questions that we have. And why don't you keep your first one ready while I introduce them? Shahina Mukaddam, who's independent market expert, and Kush Bora, founder of kushbora.com, joining us this morning. Good morning to the both of you. Kush, very quickly, I'll come to you first. We saw some short covering yesterday, and you saw a broad-based up move. Some bit of fatigue maybe at the start today. I don't know how far we can take this rally upwards, and some people have also said that this move upwards might have been a dead cat bounce. What do you think, and what are the levels to watch out for the benchmark?
Hi, morning Alex, morning China. Well, no. I won't treat it that way. The reason we are seeing some sort of a muted performance today could well be attributed to the weekly options expiry. We did have massive call writing around the 22,300, 22,400, and even a bigger one at the 22,500 mark, and that's where the Nifty is turned from today as well. So I won't read too much into today's muted move. As long as we're staying positive, that's still a very welcome move. What is heartening to see is that the small cap and the mid cap traction that we saw kickstart 2 days ago, picked up steam yesterday and is continuing today as well. So if that's any indication to go by, then I think this rally is perhaps here to stay. Yesterday in the closing show, we discussed two levels, on the upside, which is 22,500 as the second target once 22,300 was achieved. And then the next one you're looking at is close to the 22,800 mark, where there is a gap to be filled, and also the 20-day moving average that needs to be tested and taken out for the index to move higher. So I think we're firmly on the rebound trade. Slightly early to call it reversal trade, but I would suggest there are signs for that as well. So yes, on the upside, look for a rebound to 22,500 again and 22,800. This rebound might just be here to stay for some time.
All right, so that's the view with respect to Nifty as a whole. But let's move on to the first query. Anvesh from Hyderabad has bought PTC India shares at an average price of 217, and he wants to know the prospects of holding this strong for a longer term perspective. Shaina, in terms of the Q3 performance for this counter, volume growth was good, but there is some regulatory overhang on this particular counter. What's the view like from a longer term perspective?
Well, I would say at current levels, it does look like there is a short-term bounce, given the fact that the stock has corrected substantially. At the same time, I think there was some disappointment in the third quarter numbers, and I would believe that for some time maybe that there could be softness. But if you're a long-term investor, it makes sense to continue to hold. You could see some consolidation because PTC, even if you compare it to something like an REC, is still more expensive. So to that extent, I would see the consolidation phase to be a bit longer, but I would say you can hold for the long term. If you have a short term view, then you can exit.
All right, I believe we've got our first caller of the day. Dheeraj is calling us from Hyderabad. Hi Dheeraj, good morning. How can we help you today?
Good morning, Alex. My query is regarding Medi Assist.
Okay.
I'm holding 220 shares of Medi Assist.
Bought at levels of 505, right?
Yeah, 505.
What was the thesis, Dheeraj?
A lot of FIs and DIs are adding Medi Assist in recent days.
Mm-hmm.
So, can we add at current levels again?
Okay, and what is your time frame?
For the next 6 months.
Okay, so relatively short term. 505 is a buy level, 459 is the current market price. Kush, what is the potential upside over the course of the next 6 months? I'm not sure about the volumes, I've not looked at it, but 3,236 crore market capitalization.
Firstly, I must say that it's not a bad level at which he's bought. It's still on the way down. I mean, the buying was on the way down, but not a bad level at all because the stock actually slipped from significantly higher levels of about 700 plus. So he still ventured or braved a trade at a significantly lower level. Now, yes, there is momentum on the upside. There is positive divergence, and that is playing out today. I won't be surprised to see the stock see his buying price and then move higher, close to 550 levels. And once that is taken on, perhaps even a 590 in the 6 month time frame that he holds. The reason for that is that on the way down, the volume started thinning. There was consolidation. So I think there is momentum building up in this stock. However, on the upside, you have to look at 485 as the key level. That's the 20-day moving average. Once that is taken out, then immediately 550 and 590 come into play. Also, because it's a trading position, a stop loss is a must, and that comes in at the low that the stock has recently made, close to the 430 mark. So keep that one in place. But there is definitely positive momentum building in this.
All right, so that's the view with respect to Medi Assist. The next counter that we're talking about is Bandhan Bank. Bhanu Prasad from Bengaluru has purchased 160 shares at an average price of 195, and he wants to know whether he should keep holding it or sell at the current levels. Shaina, with respect to this counter, what are the views like from a longer term perspective?
Yeah, Bandhan Bank, after going through a phase of a lot of corrective, they had a lot of NPAs, write-offs, also issues regarding their the location and the issues that were there surrounding the north. But now things are evened out, and I think valuation-wise, Bandhan Bank does look like quite attractive. So I think it is a hold from current levels. You can review it maybe couple of months down the line, but you can hold it as of now.
All right, so hold is the view coming in on Bandhan Bank. Our next caller, Surya from Karnataka, is calling in. Surya, very good morning to you. How can we help you?
Yeah, very good morning to each and everyone. Thanks for taking my call. So the query is on EMI Limited, and I would like to know the long-term prospects of this company after the income tax rebate given to middle class. So would like to know the long-term prospects of it.
Okay, so you've seen the fundamentals of the company already?
Yes, I did that.
All right, and did you just buy these shares because you're right now sitting on a loss of around 310 odd rupees?
No, I wanted to invest in this team, like a discretionary income will go up in the coming days for each and everyone alike. So on that basis, I thought let me take up this play.
Okay, got it. Got your point, Surya. Shahina, I'll come to you. The point that he's making is, absolutely correct, because with the tax, benefits that we've recently received in the budget, FY26 is when, all this starts to play. What's the view like? Because electronic marts so far in the past few quarters have, posted a sub-single-digit growth in terms of, its revenue. But in terms of longer-term prospect, what's the view like?
Well, it looks quite attractive. It's of course in the EMS space. It looks quite attractive in terms of valuation and in terms of numbers also. If you saw the last quarter also numbers, they are showing a decent growth. So I would say it's a hold from here. It's of course a small cap in the EMS space, but it's a hold.
Interesting. Just let me extend that a little bit further since we're talking about EMS. Would you say that some of the other players that may have seen a decline in the recent past are also looking a little more attractive than they were about 4 months back, maybe?
I would believe that we've seen a lot of correction that's happened in most of them, but even some of the smaller ones we've seen a bigger correction. I would prefer those over here like a Dixon. I would prefer something like a Cyient. There I would believe that even the next quarter may be dull, but if you look at it over the medium to longer term, I think a lot of the correction has happened or is it's behind us. So I would look at that as a alternate CMS space.
The next question is on Indigo Paints, and there is, of course, a positive tailwind for paint companies in the form of lower crude oil prices. This is very important from the perspective of their raw material costs. We've got Srujan, who's writing in from Hyderabad, that has bought 300 shares at a price of 1,580. Should he hold or sell is the question. It is a considerable loss that he's incurring right now. So I'm going to come back to you on this one, Shaina. On the fundamentals, there's a lot that's been said about pressure in the paint space, about pricing pressure, some of the larger players losing market share. Indigo Paint specifically, if you are incurring a significant loss, do you hold on?
I would say that you can hold now, but at the same time, the overall paint industry is going through a tough phase. And while raw material costs will come off because of crude oil prices coming off, to an extent, the competition is likely to increase and the overall revenue realization is going to be under pressure. So margins will remain under pressure. So, and also valuations for Indigo Paints is a bit on the higher side. If you look at it on price to book basis also, it's more than 5 times. So I would say if you're a short-term to medium-term investor, it's better to exit.
Our next caller is from Bengaluru. V. Murli is calling us. Hi Murli, good morning to you. And how can we help you?
Good morning.
Good morning.
Good morning, and thank you for taking up my query. I am holding 200 shares of Triveni Turbine.
Okay.
Purchased recently at the rate of 524.
Okay.
And the thing is, turbine, they are saying a lot of export orders, their order book is full, and they are doing consistently good performance. Though it is a little bit expensive in compared PE levels, considering the niche player, can I hold it or add more or switch?
Okay, switch. So, am I right in assuming that you bought it for the long term based on the fundamentals, based on the order book?
Yeah, for a period of 6 to 1 year. 6 months to 1 year.
6 months to 1 year. So, it's relatively short term. Okay. So, from that perspective, then, Kush, he is in the green. The stock is doing particularly well in trade today, up 8%. Where does this take us in the near term?
Well, even now as we speak, the stock is in a downward sloping channel. It's rebounded precisely from the lower band of the channel, which comes close to the 465 mark. Now, it is incidental that the 545, 550 zone is where the 20-day moving average is, and also the upper band of the downward sloping channel, that we just spoke of. So my suggestion would be, one, continue holding on to this one. Keep 500 as your, close moment. You should consider adding more because the stock will pick up momentum once this resistance zone of 550 is crossed. So on the way up, which is pyramiding, and which is the kind of trade that I usually like and suggest, is what you should consider. So currently the view is hold with a stop loss of 500, add more once the stock crosses the 550 mark.
So that's the view with respect to Triveni turbines. The next counter that we're talking about is ITC. Karthik from Hyderabad has bought it at the price of 405 and he's holding around 166 odd shares. He wants to know whether he should sell at the current levels or add more to average it out. Shahina, with respect to ITC, what's the view like? Now that ITC Hotels is separated, the focus is on FMCG growth as well as the cigarette volume growth.
So I think both in terms of growth as well as valuations, ITC continues to look attractive. Sorry. So you could look to add, but you could look to add at slightly lower levels. I mean, not much lower, maybe something close to about 390. You could look to add and then hold it for the longer term.
All right. So that's the view with respect to ITC. We have our next caller, Shankar from Chennai is calling in. Shankar, a very good morning to you. How can we help you?
Very good morning. Actually, I bought past 15 days, Narana Hizalaya, 5 shares, or 10 shares. My average buying rate is 14.
Okay.
Totally, I have at present 90 shares.
Okay.
I am waiting, I am still waiting for more than 5 to 10 years. Just I want to know, Narana Hizalaya will perform like Apollo Hospitals in share price.
Okay.
That means I want to question, is any chance to move to 6,000 rupees above in long term?
Okay, got your query. That's an aspirational target, I must say, Shankar. Shahina, he's saying that will Narayana Hrudayalaya perform the way Apollo Hospitals has, and will he achieve the target of 6,000 in the next 5 to 10 years is what he's asking.
Well, I don't know about 6 to whether in the 6 to 10 years time it will be like Apollo Hospitals. Apollo Hospitals hopefully will be multiple times what it is now, because I think if you look at the overall space, Apollo Hospitals in terms of valuations is still more attractive than all the others in the space, given the fact that not only is it the largest, but also it's got the largest number of hospital beds, and it has improved its balance sheet, etc. Narayana Healthcare by itself also definitely looks good. And I would say that if you're holding it for maybe a year or two also, you could see a price of close to about 1,650, 1,700. So there also the growth is coming. It's doing pretty well. They're going to add, I think, close to about 1,500 beds over the next, maybe couple of quarters across states like Bangalore, Kolkata, Raipur. So it is growing. It's a good management. So you could continue to hold by itself. If you want to add, you can add Apollo Hospitals also.
Add Apollo Hospitals. So why settle for the growth story of one company? And by the way, look at that divergence. It's quite stark over the last couple of months where Narayana Healthcare has just gone through the roof. And so the relative valuation picture that Shaina is laying out for you is quite relevant at this stage. Let's talk about the next question, and this is Garware, Technical Fibers, and this is a stock that is 7,000, nearly 8,000 crore market capitalization. Like the rest of the market, actually, it has dropped about 19% over the last 3 months, and we've got Shanta from Dubai, who wants to buy 300 shares at the current level for a period of 1 year and wants to know what the prospects are. Basis charts, Kush, is this a good idea?
My suggestion would be hold up just a bit, because 800 is the level which is not only a psychological mark but also medium-term resistance, and also at the moment, from a technical standpoint, there are the 200-day moving average and the 50-day moving average converging. So you could see some traction, around that level. If that level is not conquered, then the stock might consolidate, perhaps with a negative bias, and it's not too far off, right? So my suggestion: hold up just a bit. Let the stock close above the 800 mark. That's when you can start accumulating. And let's say from a year perspective, you're looking at targets of 860, perhaps even a 910. And in that case, the stop loss will come close to the 745 mark. So as I said, not too far. Wait for the 800 level to be crossed and give a closing above that level. That's when you can start considering Garware, Tech Fibers for a long position.
So keep an eye on the stock price, and it's not too far away from the level that Kush thinks that you should think of accumulating. Our next caller is also from Bengaluru. We're getting a lot of callers from Bengaluru. By the way, quick reminder, if you're watching this and you'd like to speak to us, that number at the bottom of your screen is where you can call us. Chetan is calling us. Good morning, Chetan, and how can we help you today?
Good morning, everyone. So I'm holding Jupiter Wagon.
Right.
P81 on an average of 281. And I just wanted to know for long term how it will be this stock. And I have one more stock of South Indian Bank.
No, so, Chetan, apologies. I'm going to stick to one stock because I need to take more queries. But then Jupiter Wagons, talk to me about when you bought this and what the thinking is. You aim to hold for the long term?
Yeah, I bought it recently. So I want to hold it for long term because of the recent news what we had in MP about the recent changes in the companies. So just wanted to check what is the long term view on this stock.
Okay. So it has seen a correction, and quite a considerable correction at that in the price, and valuations are looking better than they had. In fact, even 3 months back, the drop is as much as 40%, China. And so he is making a profit at this point. Should he add more to his position for the long term, and what are the prospects based on the fundamentals?
Well, I think it's extremely expensive, even though, we've seen this huge correction. They have actually indicated that they are going to raise further funds. They have indicated something like 3,000 crore odd QIP that they're looking at. And so till then, I think the stock will hold current levels. But at the same time, if you look at it compared to market cap, it's quite a percentage of the market cap. And the new projects that they have put in place, or that they're going to utilize these funds for, will take a couple of quarters at least, like maybe a year or year and a half, to start contributing to their numbers. So if you have a really long-term holding, then you can hold. Otherwise, I would say that you can start booking some profits. It is showing a bit of bounce, so you can take these levels and start booking some profits.
Booking profits is the view coming in on Jupiter Wagons. Next caller, Nikit from Hyderabad is calling in. Nikita, very good morning to you. I believe you have a query on another rail counter, that is Titagarh Rail.
Yeah.
Tell me, go ahead.
I bought it at 675.
Okay.
So I want to know, should I hold or can I add some more?
Okay. So Nikit, when you bought Titagarh, did you see the charts or did you see the fundamentals of the company?
No, I didn't see the fundamentals of the company. Actually, it got a very good correction. That's why I bought.
So you saw the charts. All right, Nikit. I'll take your question with Kush. Kush, Titagarh Rail is the counter. What are the charts looking like, and what are the supports and resistance that you're seeing?
Well, it's not a very compelling buy, just because the stock's fallen quite a bit of a deal from the high levels. Just because of that, it doesn't make a good buy. However, along with the market, this stock is seeing a rebound. So first, actually, kudos to him for buying at a fabulous level, to begin with. and having the courage to actually buy it when the market wasn't really all that great. So kudos on that. Now my suggestion would be don't add more because there aren't very strong signs of an up move on this one. So your buying price will now be your trailing stop loss. So hold with a trailing stop loss around the 675 mark, which is your buying price. We are already seeing volumes thin down on this one. So that could perhaps mean that the momentum might perhaps fizzle out a bit. But you could still see the stock surge to 760 level once that is taken out, perhaps even a 790. But around and close to those levels is where I will start booking my profit. So as I said, from a near-term perspective, it's a good trade to get into because of the price at which he's got into. Now use trailing stop losses and hold and keep booking profits around the 760 and 790 mark.
Okay. All right. Strides Pharma. Let's pull this up and look at the year-to-date chart. Actually, considering the kind of drop that you've seen in the broader markets, this is a stock that's dropped only about 9% or thereabouts over the last 3 months. And we got Mr. V.S. Bhatt, who's writing in from Bengaluru, who has bought 50 shares at a price of 696. So he has bought at slightly elevated levels because the stock is currently trading at 619. He hasn't specified his, actually he has, 1 to 2 years is his time horizon. Based on the fundamentals, we've seen more interest in the recent past, Shahina, on some of these pharma names or broad healthcare names. Would this be something that you would like to buy and hold?
Well, I think for the shorter term, it looks like it's going to continue its, downward trend. Basically, the numbers actually seen in the last quarter also were a bit disappointing. And we are likely to see some bit of duties kick in. I mean, of course, we'll hear all about it next couple of months, in the US market. And I think that will affect most of the CDM players, including Strides. So I don't think this is the right time to add average. If you're holding it, then I would also suggest that you could try to exit if you're not making too much loss.
Very quick follow up to that. If you are to exit, would you switch to another pharma stock, and if so, which?
I think as of now, some of the pharma stocks that look decent, despite having exposure to US market, are like something like a Biocon, where they have recently got approvals and there's some settlement regarding their manufacturing facilities. So to that extent, I think in terms of new product pipeline, Biocon looks good for the shorter to medium term. You could also add a Cipla or a Dr. Reddy. Dr. Reddy in terms of valuations look interesting, despite having a huge exposure to the US market.
Biocon got a few approvals just this week in the cancer treatment space, so it looked good. We have to slip in a very quick break. We've got more questions that we will ask on the other side, so I'd invite you to stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Alright, welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screens right now. The next query is on Adani Wilmar. Tarun Agrawal from Ranchi has bought 150 shares at 325 a piece and he wants to know whether he should add more or exit it. Shaina, I'll come to you on this one. In the recent news, it is acquired GD Foods. Plus, Adani Enterprises has decided to fully exit the Adani Wilmar JV, and Wilmar will increase its overall promoter holding to 75% to fill the gap of the overall ownership. What's the view like? Once the JV is exited, and what is the outlook like?
In terms of exiting the overall, Adani Wilmar exiting from Adani Wilmar, the Adani Group, it makes sense actually because it's not their core area. And also in terms of, the performance that we have not really seen the stock perform right from listing to now. And I would say that while the performance may improve, given the fact of the acquisition also they recently have made just last week, the announcement has come. I think the overhang of the stock, because still there will be some overhang because the two combined continue to hold, I think, 88% or so of the equity. So even after the dilution, there will be some overhang. So I would say it is better to avoid Adani Wilmar. Rather than that, better to buy something like an ITC.
All right, so that's the view with respect to Adani Wilmar. Satish from Bengaluru is our next caller. Satish, a very good morning to you. How can we help you?
Good morning, madam. Nice talking to you.
Nice talking to you as well.
Yeah. Actually, my query is on SDFC Life.
Okay.
I have purchased actually 250 shares at 649 rupees.
Okay.
And I'm making quite a loss actually.
Right.
So I just wanted to know actually what is the growth potential for the insurance sector as on a whole like.
Okay. Okay, got your query, Satish. Shaina, I'll quickly come to you. He's sitting on a loss of 8,000 odd rupees. What's the view like for HDFC Life, as well as what he's asking is that your take on the entire insurance space?
The insurance space is going through a lot of changes in terms of regulations, and there still may be some changes going further in terms of what is the amount of expenses that they can actually take into their books, as well as what commissions they can pay. So there is some regulations still that are likely to come in. I think the overall sector has been impacted by these regulatory changes that have been taking place over the last 1 year. In terms of valuation, also, I think HDFC Life is pretty expensive. So, at current levels, I would say it is better to book your loss and look for some other sector as of now. You could relook at this sector maybe next couple of quarters down the line, but as of now, I would not be invested in the sector.
Okay, all right. And that's a fair point, because there's quite a bit that could change in the way of selling of these products. The point that you made, Shahina, is well made. Let's talk about State Bank of India, and let's pull up the intraday chart. You have just about a flat move in trade today for State Bank of India, but there are more and more watchers of the market and technical analysts that are saying that State Bank of India is looking attractive at this point. I'm wondering whether Kush thinks the same as well, because we've got Dinesh who's contemplating adding more to his position. He's got 300 shares that he's bought at levels of 700, so he's in the green, and he's wondering whether to add more at the current point. Kush, what's the view?
Might not be a bad idea to add some more because the kind of move that the stock has seen on the back of recent volumes could well stretch up until the levels of 750, and once that is taken out, you're looking at the 780 kind of a level as well on the upside. So it depends on his time frame. But the first litmus test is the base formation that is in place around the 680 mark. The stock's seeing an up move on the back of good volume. The second one is the crossing of the 20-day moving average, which the stock did yesterday, closed above that, and the seeing a follow through of that. So it's got a few factors going for it. Plus, Bank Nifty, or at least the banking sector, relatively speaking, at least the big names have had, a relatively stable, if I can call it, compared to the Nifty and the mid cap, small cap space kind of move. So SBI too, with the kind of momentum and the base that's already there in place, could well continue on the upside. Levels, as I said, 750 and 780. You might just want to keep stop loss at your buying price now. In case the stock falls, you might want to get out at a no profit, no loss kind of situation.
So Kush has stipulated the litmus test for State Bank of India. Kush, googly question is red acid or base in a litmus test?
I have no idea. I gave up my science a long time ago.
Okay, all right. So maybe you can look it up in the meanwhile. But in any case, litmus test in the market is red or green. Let's talk about the next question, and this is coming in from Sanjay. Sanjay is calling us from Surat, and Sanjay, I believe you want to know about Avenue Supermarts.
Yeah, I'm holding Avenue Supermarket. Very good morning, first of all.
Good morning, Sanjay.
Yeah.
Please go ahead.
I have D-Mart, known as Avenue Supermarket.
Yes.
30 shares at the 1525 my buying price.
Okay. When did you buy
And
this?
I have been holding this stock at 2019. Since.
Okay.
So my first question is it possible to downgrade, or should I add more at this level?
Is it possible to? I didn't catch that question. Is it possible to add more?
Yeah, I want to add more.
Okay.
If there is no problem with any fundamental.
Okay. So it's a fair question to ask, and congratulations for the patience that you witnessed. Perhaps you would have been looking for more of an upside based on the prospects that were discussed at that time in 2019 for Avenue Supermarts. Shaina, a lot's been said about the space, right? You have certain large players that have entered the retail market very aggressively, that are having to dial back on the operations that they have rather. I'm talking about Reliance Industries. Avenue Supermarts though, valuations have never been cheap. Would you add more at the current price?
Add only at lower levels because as you mentioned, the competition is coming from all segments. You have the quick commerce that actually is putting a lot of pressure on Avenue Supermart. Also, in terms of the new competition, you have retail of Reliance, which is pretty aggressive, and you have others also that are there in the space and coming in. So the space is very competitive. Margins will remain under pressure. Of course, Avenue Supermart, given the quality of management, in the longer term, they will be able to manage and come out of it. But if you want to add closer to 3,200 levels. I don't think even current levels is a good time to add because you may see further time correction. Not so much price correction, but time correction. So you add it at dips.
And you know so much more about the nitty-gritties of Avenue Supermarts, right? So much of the consumption story is still expected to play out. So much of it will depend on the rural recovery, on the sustainability of the rural recovery, and urban, which is expected to come in the next year, right?
Absolutely, and also how all of these quick commerce platforms will play out in terms of their discounting pattern, because till now quick commerce, though going big on discounts and burning cashes, are still not able to match up to the discounts that Avenue Supermarts give. But Avenue Supermarts, after some point of time, will have to stop giving these discounts in order to maintain their margins. So it all comes down to how these discounts will be managed going forward. So that's the view with respect to Avenue Supermarts. But moving on, Ganesha Ecosphere is the next counter. Dilip from Hyderabad is holding 400 odd shares, bought at 1600 levels, and he wants to know whether he should hold or sell or make an average. He's sitting on a loss of around 80,000 odd rupees. Kush, I'll come to you. I know you'll say no to the average part, but hold or sell, what's the view like?
Well, there are scenarios, right, where it does make sense. And we are in a scenario in the market where averaging does make sense. If you've got a stock which has fallen just because the overall markets are actually, gone into a weakish kind of a territory, then buying that stock at a lower level makes sense. So this is one of the rare times where, averaging perhaps just might make sense. So yes, Ganesha Ecosphere is one stock which can be considered, for fresh additions at this level also, or in his case, he could consider an averaging, as well. Now, there is a double bottom formation near the 1300 mark, at least on closing basis. The volumes on the upside have started to pick up. My only concern here is that the 1420, 1430 zone might act as a bit of a resistance, but once that is taken out, the stock could catch up a steam, and 1650, could be the next level close to his fine price. So you could consider buying some at this level, but keep a very strict stop loss near the 1300 mark. If that is broken, then you might want to exit, because that's the near-term bottom or the medium-term bottom that the stock has made, and then any breach below this will negate the kind of up move that we're starting to see right now.
Okay, so add at the current levels, but with a strict stop loss of 1300 is the view coming on Ganesha Ecosphere. Suresh from Hyderabad is our next caller. Suresh, a very good morning to you. I believe you have a query on BEML.
Yes.
Go ahead with the query.
So BEML, I bought it 3,800 and around 50 shares. So I'm in loss. And few days back, I called to NDTV Profit and it said when it is come to 2,400 level, I think they were asked me to call again. Okay. So it recently tested 2,400 and it is bouncing back.
Right.
Can we average or hold it for some more time? So I'm a long term. I'm looking for an year or 2 years.
Okay, got your point, Suresh. I'll take your question with Shahina. He said that the stock is bouncing back from the levels that the analyst had suggested at that point of time. But he's a long-term investor, so what's the view like for the next 2 years for BEML?
Yeah, I think in terms of order book position, in terms of growth, the future looks to be brighter than what the past has been. Their numbers have been pretty disappointing. So I would say that considering the fact that capital expenditure will increase going forward, and BEML is very well capitalized, very well positioned to capitalize on the same. So if you're a long-term investor, yes, you can continue to hold, and in fact you can average at lower levels. Of course, you are seeing a bit of bounce, but hold for now. And maybe you can look at targets of, say, something close to 2,700 to actually book profits if you're looking at maybe a 6 month to 1 year holding period. Otherwise, you could look to hold it for the longer term and average at lower levels.
Now, we don't often talk about very high ticket price stocks because often it's difficult for retail investors to pick these up. But we have exceptions to the rule, of course, and Bhupendra Mehta is one of those. He's writing in asking about Honeywell, which he's bought at levels of 40,000, and he's bought 16 shares. The stock is currently trading just below 35,000. It's up and about. It's about 2% higher. Shahina, on the fundamentals, would you hold or exit when you have the opportunity?
These are stocks which actually you hold for the long term. They could be portfolio stocks, and as you see, there's a lot of new capacity that's going to come up in electricity, in renewables, and Honeywell is very well positioned to actually participate in those projects. So I would say you can continue to hold for the long term. I think shorter term you're going to see some bit of consolidation, maybe some time-wise type of correction, but you could continue to hold for the long term.
Okay, so hold is the view on Honeywell, by the way. And we've got a next caller. Nick is calling us from Hyderabad. Hi, Nick. I love your name. How can we help you today?
Good morning. I want to know about Wipro for the coming couple of months. I bought at 294
okay.
for 1,000 shares. So I just want to know what's going to happen in a couple of months.
Okay.
Hold, sell.
So help me understand why you purchased Wipro. And obviously, you've stipulated the time frame is just a couple of months, but what was the thinking behind it? You thought that IT would bounce back. You were expecting that things would settle on the global stage. Is that what you're thinking?
It's all because of Trump. He came back, and I thought, the IT thing, that's why.
Okay, all right. So it's a play on the IT space. Wipro bought at 294 levels, not too far away from the current market price of 285. Kush, on the charts, we've seen some subdued moves in the IT pack in the recent past, and that's understandable, I guess, because there are question marks, as Nick has just highlighted. How would you play this on the charts, though, for the next few months?
So, Alex, interestingly, Wipro is one of the large cap names which hasn't really fallen as much. It didn't really move as high as well, and that is also one of the factors why it hasn't really, given up too money or too much of the gain. But despite that, this is not one stock that regularly features on our buy list. Now, the good thing is that the stock's not too far away from his buying price. We've discussed in the past that the global, especially the US IT pack is also coming under pressure, and that might have a rub-off effect on the Indian names as well. So not very constructive on the overall IT space. Since the stock is very close to its buy price, my suggestion would be to keep a stop loss near the 270 mark. Any move closer to his buy price or about the 300 odd level should be taken as an opportunity to exit. If he does want to stick to the IT pack, FSL, First Source Limited, is one stock that has actually held its ground for the last month and a half in all the deluge that the market has seen, which is a sign of a relative strength. Now, a closing above the 370 mark will give it further momentum. So my suggestion would be to exit Wipro close to or just above his buying price and switch to something like an FSL. The stop loss on this one comes in at 335.
Okay, so that's the view with respect to Wipro, and sell is the view coming in. The next counter that we're talking about is CG Power. 2,000 shares held by Kanak Kothari from Ahmedabad at the levels of 593 a piece. He wants to know whether he should sell or hold at the current levels. Shahina has not mentioned what is his view in terms of long term or short term, but your view with respect to CG Power, what's the outlook like?
Yeah, I would say that it looks pretty decent in terms of performance, the financial performance going forward. They've got a lot of order books, but in terms of valuation, it is expensive. So I didn't get the buy price, but I think he can continue to hold. He can keep a stop loss of, deep stop loss, something close to about 550, and then he could hold it for the long term.
Alright, so that's the view with respect to CG Power. Our next caller, P. Somaya from Hyderabad, is calling in. A very good morning to you. How can we help you?
Good morning, madam.
Good morning.
I bought Birla Software at 690, 70 shares, sir.
Okay.
Can I hold or can I exit or can I add that?
Okay.
At present situation?
Okay, so you bought Birla Soft seeing the fundamentals, or did you see the charts, and how long have you been invested in this company? Mr. Somaya, can you hear me? Okay, I think Yes, can you hear me? Okay, I think we've lost his feed. If you can hear me, can you tell me how long have you been invested in this, and did you see the fundamentals of the company or the charts? Okay, I think we've lost him. No worries. Kush, I'll come to you. Birlasoft is the counter. What's the view like with respect to the charts?
Again, very similar to what we just discussed about Wipro. In fact, for Birlasoft, what happened is that the stock has taken, a massive beating, and not only in line with the market. The stock actually started falling somewhere early 2024. So the weakness has been, playing out ever since the last year and a half. The move that you're seeing in the last 2 to 3 sessions is actually a dead cat bounce, a rebound from deeply oversold territories. So my suggestion would be to exit Birlasoft at the moment. And like we discussed just a while ago, if he wants to consider something in the IT space in particular, FSL is a stock to go.
The next counter that we're talking about is a pretty small counter, 1,500 crore market capitalization. Carousel is the name of the company, Carousel Limited. I'm looking at it, and it is a manufacturer and trader of quartz kitchen sinks and stainless steel kitchen sinks, as well as bath products, tiles, kitchen appliances and accessories. I'm not sure if you have a view on this one, Shaina, but we've got Mr. Sankara Rao, who's writing in from Amravati, who's bought at levels of 707. The stock is currently trading at 533, and he's incurring a significant loss in this counter. Would you suggest that he holds on or shifts into something else?
I think as of now, given the bounce that we are seeing and the performance is, pretty average. There was some bit of softness in the last quarter. So if he is a short-term investor, I think he's going to continue to make losses. So we are seeing a bounce as of now. He could look to exit maybe, at slightly higher levels, 560 and odd. He can exit, and he can keep a stop loss of close to about 500. So I don't see too much happening. He can take this opportunity of the bounce to exit.
All right. So limited view, of course, on this counter, but then you might want to exit when you have the opportunities of view from Shahina. Shankar is calling us from Bengaluru. Hi, Shankar. Good morning. How can we help you? How can we help you today?
Good morning, sir. I am holding 55 Nilkamal Plastics share at 2056 because I have been making some money in that, buying and selling.
Sorry, are you still there?
Right.
Sorry, I lost you for a few seconds there, but you said that you bought it at a level of 2056.
Yeah.
You've been buying and selling this, you've been trading in this share.
Yeah, I have made some money on that stock. Because the price was going, I stopped at that 55. So it is at 2056.
Yes.
So whether because prospect is good. Normally I look for all the ratios, sales growth, quarterly growth, profitability, etc. I look at ROE, ROC, etc.
Sure.
I'm a banker by profession.
Right.
I was in trading treasury also.
Okay. So the question is for the long term, sir. You'd like to hold this for the long term? Okay. So Shahina, Nilkamal, and it's a household name. The stock has been under a tad bit of pressure though, down about 20% over the last 3 months. Would you hold on?
Yeah, you can continue to hold, but do keep a stop loss. I think he can keep a stop loss which is closer to his buy price, or maybe 1,550, just to be safe. But he can hold. The numbers last quarter were not that good, but at the same time, the balance sheet is pretty strong, and he can hold it. I would say the near term target could be something like 1,700. So hold it for 6 months, and probably he'll continue to make some money.
All right, hold it for 6 months is the view coming in on Nilkamal. Okay, the next caller that we're going to talk to is Pawan Kalyan, who is calling in from Vizag. Pawan, a very good morning to you. How can we help you?
Yeah, very good morning. I just brought a Medplus share at the rate of 735 a few months back.
Okay.
And I'm concerned about, is this right time to book harvest loss, or should I wait for long term, like 2 or 3 years?
Okay, so your outlook is for 2 to 3 years. So you have seen the fundamentals of the company, if I'm not wrong.
Yeah. For me, valuation-wise, it's too expensive right now, but for competition-wise, I feel better in this segment of Medplus. stuff like that.
All right, Pawan. Shahina, I'll come to you. He's done his homework well, but what's the view like when MedPlus comes into picture?
I don't really have too much of a long-term view on it, but I think in terms of price, this looks like it's in a corrective phase. So I will pass this question actually because I don't have too much information.
Okay, MedPlus on the charts. Kush, how is it faring?
What you're seeing is a bit of a consolidation and attempt at crossing above the 200-day moving average on a sustainable basis, which comes close to the 720 mark, which incidentally is also close to the buying price that he has. So my suggestion would be to hold this one. The momentum is missing. The volumes are fairly thin, if you ask me. So I am not expecting a very sharp kind of an up move on this one. But nonetheless, along with the market, this stock does kind of recover, then he could see some profit from this one. So keep a stop loss near the 695 mark. On the way up, a closing above 720 could push the stock to 740 and then perhaps even a 765 kind of levels. That's where you want to book profit. As I said, the volumes aren't great. The momentum might be missing. So you might want to exit, soon as you start doing some green.
It is a call on MedPlus. It's time for the rapid fire segment. China and Kush, you know what this means. We'll throw as many questions at you over the course of 2 minutes and do keep your answers as concise as possible. Nidhi's got the first question. She's writing in from Ambala. PFC is the name of the counter. She's bought at levels of 530. She's wondering whether to average at the current price. China, on the fundamentals, what should she do?
Yeah, hold and average also.
Okay.
All right, M&M
You
is
can buy. It's a buy.
Okay, buy is the view coming on PFC. M&M is the next counter bought on 5th September. Okay, Amara Raja is, my bad. Amara Raja is the next counter bought at the levels of 1447. 50 is the quantity. Should he hold or sell at the current levels? Kush, on the charts?
Continue to hold, keep a stop loss at 940.
Okay, IGIL is the name of the counter. 417 is the buy price. Venkat wants to know, should he add more at the current price? What are the long-term prospects, Shahina?
I would say avoid.
Okay, Swiggy is the next counter. 5,900 shares bought at the levels of 455. Avinash wants to know whether he should hold or exit. Shahina, what's the view?
I would say it's a hold.
3i Infotech is the name of the counter. Tara from Trichy wants to know, she's bought at levels of 500. Would you suggest a hold? Kush?
Sorry, what's the buying price?
36, sorry. 36, sorry, my bad. 36.
Sure. You could continue to hold, but keep a tight stop loss around the 21 mark.
Okay, Suzlon Energy is the next counter. 2,000 shares bought at 65 rupees. Should the person hold or exit? What's the view, Shahina?
I would say exit.
Okay, BHEL bought at levels of 322, currently trading at around 200, I believe. Okay, would you hold or exit? Joydeep wants to know. Kush?
Hold.
Okay, IRB Infra is the next stock. 657 is the quantity at an average price of 56. Should he hold or exit? China, what's the view?
It's a hold.
Okay, Ease My Trip very quickly. Would you hold or exit? This is Manikanta. I don't know the buy price, but a lot of negatives here. Shahina?
I would say it's a hold.
Okay. All right. On the next show, I'm going to ask you what you think and why you think that, but it's a hold for now.
Okay.
Thank you so much to the both of you for joining in, for answering all the questions that you did. Absolute pleasure having you on the program. All right, that brings us to the end of this edition of Ask Profit. We ended on a bit of a tantalizing note because we have to find out why Shahina thinks Ease My Trip is a hold, but we've got lots lined up for you on KYC. Do stay tuned for that. And this is NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And as has been the case this week, we're talking about yet another company which has been very recently listed. This one is from the consumption space, but it doesn't cater directly to the consumer. It actually does cater to a lot of the companies from the diamond and jewelry space, and that is none other than International Gemological Institute of India, IGIL as it is known as well. And this one basically, serves as a place from where you do get independent certification and accreditation services for, the fields in diamonds, gemstones, and jewelry. And it has about, pretty steady 65% market share in lab-grown diamonds particularly, and about 42% share in the jewelry certification segment. So it does have a lot of dominance in it, and it doesn't just have operations here in India, it has operations abroad as well. In fact, one of the objectives of the recently listed IPO for this particular company was also to take on the Netherlands and Belgium units under its own wing, which it bought over from its promoter. So, well, of course, we'll talk about that a little bit more detail a little later on. But for now, in terms of services that the company does offer, well, it includes diamond grading, quality evaluation, grading and assessment, and along with that, it also conducts educational programs. So, think of it as this way. Well, we do have rating agencies which actually takes on, rating of, well, several financial instruments of, say, for example, a corporate. And it assesses, makes the assessment, and then issues a certification based on the risk that may be associated with that particular security of a corporate. And that's the role of a rating agency. Similarly, what this particular company does, it actually rates, for example, a diamond or a set of stud jewelry, and, well, gives you that certification, and it gives you just that much more of, an accreditations which suggest the quality, will give you the quality of that particular piece of jewelry, or for that matter, the diamond or a precious metal that you are purchasing at that point in time. And this is not necessarily just for consumers, but also, it's more of a B2B process. But, now that I've made a mention of what the particular company does, well, let me also tell you about how we, in fact, can address this, take this forward in terms of what the company has done. So, as we always do, we consider the fundamentals of a company. So we talk about the income statement, we also address the balance sheet, cash flows and return ratios, some very interesting data coming through as far as these aspects are concerned, some very large changes coming in as well. Of course, we move beyond the financial statements, and then that's when we also address what's happening in shareholding, street credentials, valuations, as well as street coverage. It's a fairly newly listed company, so we don't have too much in terms of street coverage. Still, we have a handful of marquee brokerages who do in fact cover this particular company. We'll talk about that in detail as well. But as we always do, well, we start by taking a look at the fundamentals of the company, the financial statements particularly. And for that, well, let's get in Mahima Vachrajani, who will yet again shed more light into these fundamentals. So Mahima, good morning and thanks for joining in. Let's, as usual, start by taking a look at your operational metrics, particularly the top line and the bottom line, and the consequences.
Right. Good morning, Agam. So, before I move on to the metrics, just a quick clarification. This company follows calendar year. So, the comparison that we've made is calendar year 24 to calendar year 23. Now, in terms of the top line, revenue has seen a 3-year CAGR of around 42%. In terms of calendar year 24, the revenue stood at around 1,050 crores, and this was around 898 crores in calendar year 23. EBITDA has seen an overall 3-year CAGR of 35%, which stood at around 600 crores in calendar year 24. Margins have improved from 55.2% in calendar year 23 to 56.9% in calendar year 24. And net profit has also improved from 331 crore to 427 crore. And net profit has had a CAGR of around 35%, which is a 3-year CAGR. So in terms of 3-year CAGR performance and improvement as compared to calendar year 23, this is in terms of all 4 metrics, it's a thumbs up for the counter. In terms of the calendar year 24 performance, in terms of performance metrics, number of reports for them went up by 26%. But in terms of the Q4 performance, revenue growth and PAT growth overall were lower as compared to other jewelry companies. IGI's revenue growth stood at around 6%. This is the revenue growth, and PAT growth stood at 4%. But this as compared to jewelry companies like Titan, Kalyan and Senco, especially Q4 being a festive season and a wedding season, Titan clocked a revenue growth of 22% and a 48% growth in PAT. Kalyan saw a 20% growth in revenue and 68% growth in PAT. In terms of the overall Senco Gold, also revenue growth was at 37%. So in terms of all of these metrics, the revenue growth came lower for IGI as compared to these jewelry companies. The other aspect which was important to note in Q4 was the studded mix for jewelry companies, because there has been a downtrend. Titan studded mix was down by around 1% YOY. Senco Gold stud ratio was also lower on the back of impact of lab-grown diamonds. So this might, have a sequential impact on IGI, because they are the ones providing certification for natural diamonds and lab-grown diamonds. And if studded mix goes down for these jewelry companies, the number of certificates being issued by IGI will also go down. And lastly, in terms of Q4, muted revenue growth was probably led by high volumes in lab-grown diamonds compared to the natural segment. Company also claimed that they did not see any seasonality in terms of its revenue, but there was also a shutdown being observed for around 15 to 20 days in November to manage their inventory, which also impacted their overall revenue. So in terms of the four metrics, of course, it's a thumbs up, but Q4 was slightly saw a lower growth, and there was a shutdown as well.
So, we were actually on the fence on this one, or whether or not we should give this one a thumbs up or no. And look, there's no taking away the fact that the past few years have been very strong for the company. But Q4, particularly in this case, stood out. Firstly, because of the fact that they had to retract their statements and, reissue their financial statements for the fourth quarter of the calendar year gone by. The changes weren't very large. The changes were relatively small, but that, of course, was a concern. But more importantly, again, as Mahima has already mentioned, this is not a like-to-like comparison with all the other jewelry companies. It just shows you that if you do, in fact, have such strong growth for the jewelry companies, then why is it that this particular quarter has not been so good for IGI particularly? And of course, once again, as Mahima has mentioned about a handful of other aspects as well with respect to the studded mix, as well as, muted growth in the lab-grown diamond space. We need more clarity here. We need more of a picture in terms of how this mix has in fact changed with respect to the certifications as far as this particular company is concerned. So that's as far as your top line, your bottom line is concerned. And the hitch now is coming in the fourth quarter. Can there be an expectation of continuation here? Because we did see a lot of weakness after the company came out with its earnings. But, I talk about the balance sheet moving on, and it has, so firstly, its net worth, okay, that's the shareholders' value, has in fact gone from negative to positive over calendar year 2023. So that is, of course, a positive here. It does not have any gross debt, and in terms of cash in bank, those numbers have improved as well. But we'd also be very curious to understand how this particular net worth has gone from a negative 600 odd crores to a positive 1,000 odd crores. So that's something that we're going to keep an eye on. There is another aspect that we do need to address as far as its receivables are concerned. We would have given this one a thumbs up, but given the fact that we are also looking at a sharp increase in receivables. Firstly, in calendar year 23, there was 100% growth in receivables on a year-on-year basis at around 126. And even in calendar year 24, the receivables have moved up even higher to around 164. One might suggest that this is actually an implication of the growth in business. We do take that point. However, the fact that your receivables are growing and they're actually outpacing the kind of growth that you're seeing is a little bit of a concern just at this moment, which is why, of course, we're not going to give this a thumbs down. It's just one of the parameters we thought that we should highlight before we bring in your overall balance sheet details. So, and hence, it's going to be a neutral here. How are cash flows looking, Mahima?
Right. So, for cash flows, in terms of cash flow from operations, they have been improving. As compared to calendar year 23, where cash flow stood at around 303 odd crores, it has increased to 393 crores. This could have been a better number in terms of calendar year 24 if trade receivables did not, increase by the bit that we talked about. But still, cash flow from operations is a growing number. But in terms of net cash flow, The net cash flow in calendar year 23 stood at 55 crores, which was a positive number, but that has turned to negative 60 crore, and this is because of a 1600 odd crore cash outflow in the investment activities.
Right.
So we'll have to, even go to the management and see that where this money has been spent and why the cash flow has been negative in terms of calendar year 24, which is a 60 crore negative number. So because of that, negative 60 crore number, we've given it a neutral rating.
Yeah.
But overall, cash flow from operations have improved in comparison to calendar year 23.
Right, absolutely. So that's as far as, this aspect's concerned. We talk about the return ratios too. Again, very healthy return ratios of around 48-50% for both ROEs and ROCEs. So there's no problem here. Given the fact that it has a very strong operational metrics in terms of your operating margins as well, these numbers are expected to remain higher. But let's talk about shareholding as well, Mahima. That's another interesting one here.
Right. So in terms of shareholding, this parameter we've given a thumbs up because promoters have a strong holding of 76.55%, and this of course will come down to the 75% threshold that is required by law. But FIs are holding around 9%, DIs are holding around 5.8%, and around 8.5% is held by public. So in terms of the overall free float that is available to public, that's around 8.5%. But in terms of the pledge that we were talking about, just before the IPO, the fresh issue was for approximately 1475 odd crores, out of which 1300 crore was for paying off the promoters for buying off the Belgium and Netherlands part of the company, and the promoters had their pledge against that holdings, and that pledge is now, the encumbrance has now been removed if we check the as of March data. Right. So that has that's probably a big positive coming in for the company.
And who's the promoter, Mahima?
For them, the promoters are, if I'm not wrong,
it's Blackstone.
Blackstone, yeah. So Blackstone are the promoters, and so that's how the entire transaction has taken place, and which is why we've given a thumbs up for this particular counter.
Right. I just want to mention one more thing. There are a handful of sovereign authorities who also own stake in the company. So you do have Abu Dhabi as well as the Singapore, sovereign entities, which in fact do own about 1 to 1.5% as far as this particular company is concerned. Besides that, there are plenty of marquee AMCs in India as well who do have ownership in this particular company. So we have a well-rounded institutional involvement in this particular company as well, notwithstanding Blackstone. The only issue that we perhaps need to understand is that the shareholding still shows encumbrance. And of course, this is shares pledged to Deutsche Bank. So we will get more details and clarity from the management on this one as well. But moving on, I will talk about street credentials. And when it comes to this one, look, we know that it's been a tough period for the mid-cap and the small-cap companies here as such. And this company has also been a victim of this precipitation that we've seen over the span of the last 5 months. The stock has, of course, listed at 510 on the NSE, and that was at a premium of around 22%. And since then, it has come off quite a bit. In fact, today, it's trading at a little over 320 odd rupees per share. So as you can imagine that we have seen that correction, a very sharp correction as well. And one of those companies which in fact have taken it up the chin, along with a lot of the other IPOs, which did show a premium on listing day, but have since come off significantly from not just their issue price, but also their listing price, whether if you consider the high or the low. But, in general, otherwise, not much to talk about. That's how, street credentials are. Mahima, how are valuations looking?
Right. So, for valuations bit, if we see the estimates for 2025 as well as 2026, the PE ratio for IGI for 2025 estimates suggest that it's at around 42 times, and this will go to around 36 times. So not looking very cheap, although IGI has no direct competitor. So there is no peer comparison for this particular counter. But overall, if we see the kind of valuations that are being pegged at in terms of estimates, the EPS growth suggests a 20% growth versus that of a valuation of 42 times and 36 26 times in 2026. Revenue growth is pegged at around 15% and overall FY26 estimated price to earning growth is just at 1%. So, if we see all of these metrics, the counter looks a bit expensive, which is why we've given it a neutral rating for now.
All right. Well, there you have it. So that's your, price to earnings valuation. Of course, as Mahima mentioned, the PEG ratio is at around 1. So it's a fairly neutral one, keeping the growth in mind. And we're penciling at about 20% growth here. Well, that's as far as your PEG ratio is concerned. That is price to earnings to growth. But finally, actually, Mahima, why don't you take us through the analyst recommendations as well? We just have one right now, Morgan Stanley, who incidentally, by the way, were also their book running lead managers here. They have, in fact, after, a few weeks after the company listed, have also made an initiated note on this one. What are they saying, Mahima?
Right. So Morgan Stanley has initiated coverage, as you rightly mentioned, and the target price that they've given is 617 for this particular counter. What they're saying is that for IGI, there are high barriers to entry, and that is the key moat. In terms of an India production story, in terms of lab-grown diamonds, they are not there yet. But overall, India consumption story for natural diamond remains intact. They're expecting IGI to deliver a 15% and 20% revenue and PAT CAGR over calendar year 24 to 26 estimates. They're expecting EBITDA margin expansion from 54.6, that is in calendar year 24, to around 56.9 in calendar year 26. And, just to mention, they've already done margins of around 56.9% in calendar year 24 itself. In terms of PE, the target PE is of 60.2 times, 47.5 times and 23.8 times is the bull base as well as bear case scenario for this particular counter. So overall, they are bullish when it comes to this counter, and which is why we've given a thumbs up. This is the only broker that right now kind of has a coverage on this particular counter because it's a recent listing, and so overall, because they've initiated and they're overweight on this particular counter, we've given it a thumbs up.
Okay. All right. So I reckon that this is a good time to get the management in. And we, in fact, do have Temas Printer. He is the MD and CEO of the company, along with Ishwar Iyer, the CFO, who is joining us on the show. Good morning to both of you, and thanks so much for joining us here. And Temas, I'll start with you. Now, overall, over the last 3 years, we've seen stupendous growth for your company in terms of your top line as well as the bottom line. It has been very evident, the growth. But the question really is that the fourth quarter did throw a little bit of a concern with respect to at least the near-term growth looking forward. I know that this is not a like-to-like growth. While the industry and the jewelry retailers have done very well, that hasn't exactly translated for the growth of the quarter gone by. I'm not talking about the entire financial year. One, is this a good way to look at things? And two, if you could also tell us about what has contributed to the growth, or rather the at least perceived lack of growth in the fourth quarter. If you could give us a little bit more detail here.
So basically, IGI is a growth story. We have delivered growth over the last many years. And if you see the year on year, our growth is at the levels that we specified, even initially. So it's just in the last quarter, there was some bit of correction because, the LG prices, LG diamond prices were at, they were under pressure and, we were holding on to our certification costs for at least 6-7 months. And finally, last year, in around April, May, we had to take a 20% cut to correct the incremental certification cost per LG diamond. So initially, while we used to certify 30 pointers, the demand, because of the affordability of the LG lab-grown diamonds, we are now averaging 1.5 to 2 carat plus. So the bulk of the certification now is coming through the higher weight of the lab-grown diamonds. So while there has been a price correction, at the tail end of the year, we have adjusted. But if you see the overall picture, we are on par and in fact going beyond.
Okay, so at the moment, Themas, my question then is that are you likely to see more of a shift towards certification of lab-grown diamonds as compared to your traditional sources? And keeping that in mind, do you think that there could be any issue with respect to profitability, and by that I mean your operational metrics?
See, the thing is, both are diamonds. You have to understand that lab-grown is a new kid on the block. It's a disruptor. The diamond market never had a disruptor in the last 100 years. Okay, and at IGI, we were very cognizant of the fact that we are an independent international certification body, and we will give analysis of any stone, gemstone that we are paid the fee. We will honor it. It's our integrity that counts. So it's not that we have a bias towards natural or towards lab grown. And because of this factor, we have taken the lead in the lab grown sector. And we have today around 65% of the global certified diamonds or lab grown certified by IGI. At the same time, we are not B grade diamonds. So natural is also for us. Lab grown is also for us. The most important factor here is to determine the origin of the diamond, and which we have a legacy of 50 years and we have the expertise. Because both the diamonds, chemically, physically, crystallography, both are made of carbon. You and me are made of carbon. So everything is very similar. Is the same rather, not even similar. So to identify the different origin, one is earth mined, one is man-made. And that requires a lot of expertise, and IGI has that. And we have used this expertise because the only difference really between the two diamonds is the commercial value. One is considerably affordable and one is very expensive. So, what lab grown is actually doing right now, is increasing the consumer base. The millennials and the Z generations, all aspire to have a diamond. And today they have an affordable alternative. They have an affordable diamond. That's what I'm trying to say. And this is where we see the industry progressing with a huge number of consumers coming into the fray. If you see statistically, 1.5% of the Earth's population buys diamonds.
Right.
And these are all natural.
Got it.
Today, the price points and affordability of lab growns,
right.
This is fast expanding.
Got your point. Right. Got your point, Themas. Ishwar, I'll come to you. Right now, what is the mix like, lab-grown diamonds versus natural diamonds? I just want to get my facts straight here. What's the mix like, one thing, and what is the actual difference in terms of percentage when it comes to, the price that you're charging for a certification of a lab-grown diamond versus that of a natural diamond? Because then I want to understand the overall impact on your bottom line.
Okay, so Mahima, I've been listening to the detailed analysis that you were presenting. It's very, very comprehensive. So, it's awesome analysis that you've actually done on the IGI performance. Okay, so let me just set a few things in context before we get into the nitty-gritties of the questions that you asked. Okay. There was one discussion point. I'll just move away from the financials for a moment in terms of the shares that is being pledged by Blackstone. There was a clarification that we had given even to SEBI prior to our listing. There is at the moment, or even in the past, shares that are never been pledged by Blackstone. So I just want to put that record straight so that there is clarity amongst everybody who is watching the show. So there are no shares have been pledged by Blackstone, and Blackstone holds close to 76% of the company post the IPO. Yeah. So number two, in terms of what's happened for the business for the last 12 months, and then we'll talk of the quarter. The business, there was a couple of things that we did as part of the IPO process. There was, as Themas did mention, we have been in this business for over 50 years. We operate in 8 to 10 countries. We had 3 holding structures. We had a holding structure in India, and Belgium and Netherlands. As part of the IPO, process. IGI India is now the holding company for the group. We've acquired both the IGI Belgium as well as the IGI Netherlands business as part of the commitments that we made in the RHP. So close to 1350 crores of funds that is which came in from the IPO. We used that around 1300 crores of that plus another 60 crores from our bank to fund the acquisition of both Netherlands and Belgium. A critical aspect here is the brand was always owned by Belgium because that's where the business started. And through this acquisition, now we have also the brand directly under the ownership of the listed company in India. Okay, so that's an important point that I just wanted to bring to your attention.
Right.
Now coming financial performance, of course, we've grown close to 17% from a revenue standpoint for the full year. And that is on the back of about 27% volume growth. So the key volume growth that's happened for us over the last 2-3 years is driven by the lab-grown segment, which Tehma's mentioned being the new disruptor. So that's become, it's a category which is affordable with the pricing structures that is available there. So that is the key driver of the volume growth as well as corresponding revenue growth.
Right.
Now, of course, what's happened is because of the nature of the industry, while natural diamonds are scarcer, it takes over 1 billion years for it to build up in the Earth's crust, etc. Then lab-grown diamonds is man-made. So we have equation of demand and supply, therefore playing out as far as lab-grown diamonds are concerned. And the lab-grown diamond therefore saw a correction on pricing, either from the Q4 of 2023 till the first quarter of 2024. Corresponding to that, we had to therefore correct our certification pricing. And to just answer to what Mahima just mentioned, our pricing, our certification is around 3 to 5% is what we charge as certification if you were to compare to the pricing at the wholesale level.
Right.
So pricing, impact which we took in the month of April, May, consequent to the price correction of the lab wholesale level is what caused a little bit of softness in Q4 because the Q4 of 2023 was also extremely strong from a volume standpoint.
Right.
And the other point that Mahima asked is in terms of our business mix at the moment. Equally between lab-grown as well as natural diamonds.
Okay, well, Ishwar, unfortunately, we are completely out of time. So we've registered all the clarification that you've made with respect to encumbrance as well as, how business has shifted and also the kind of correction that we've seen in terms of, the price correction that you have taken. So all the points taken on board. But at this point in time, we are completely out of time on this edition. So thanking both of you for joining us and taking us through, all the parameters with respect to your business. But on that note, it is also a wrap on this edition of KYC. Lots more lined up on the other side. Stay tuned in.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit,
Welcome, good afternoon. This is Markets at 12 and I am Malika Mishra. Let's see how the markets are faring first. We've had a seesaw session since morning. Benchmark indices are slightly up in the green as Nifty hovers around 22,400 and Sensex trades around 73,900 levels. Broader markets are outperforming the benchmark indices with Nifty Mid-Cap 150 up close to 1% and around 4% up this week so far. And Nifty Small Cap 250 is up over 1.5% or roughly thereabouts. Now, speaking of the stocks contributing to the rise, we have RIL, HUL, Bajaj Finance, Asian Paints are all pulling up the market. And what's adding pressure? Well, there is HDFC, Trent, ITC, Maruti and Tech Mahindra amongst others, which are putting some extra added weight. Now, but all the sectors, let's take a look at the sectoral map and you would see that all the sectors are doing well and are up in the green with banks, IT, auto, finance, realty and FMCG leading the sectoral pack. And let's also take a look at the advance decline ratio to see the gap in between the advances and the declines. And you'd see that the breadth of the market currently is highly skewed in favor of the advances at the moment. Let's also take a look at how Coforge is doing after, it shot up yesterday close to 10% on back of a huge order win. And the stock has now largely pared its gains. It is in fact down about 1.5%. Let's also take a look at some stocks of the oil marketing companies as crude prices hit 6-month low, like Chennai Petro, MRPL and HPCL. And if you look at the charts flashing on your screen, you'll be able to see that they're all up in trade and they look like they're in good health. Now, speaking of OMCs, Brent crude prices have dropped 17%, as I was mentioning before, from its 2025 high. Let's understand from Somit, my colleague, he's standing by, what kind of effect India will benefit, what kind of a benefit will India, get out of the price drop, and what would the impact of lower crude prices be on various industries? But first, Somit, could you please explain what are the consequences of these price drop on India?
Well, yes, Brent crude has dropped to around $68.3, which was the yesterday's low price, which was the lowest that we have seen since December 2021. Now, Brent crude is down for the second consecutive month. In fact, for the month of Feb, it was down around 4.7%, and so far in March 2025, it has declined nearly 5% in trade. From 2025 high, Brent crude has come down by nearly 17%. And what are the reasons behind this? Firstly, the rising dollar index was one of the major reasons which had led to this drop in crude oil prices. Apart from that is the heightened global uncertainty because of Trump tariff, which has also impacted crude prices. And the third and the most important reason is the fact that OPEC Plus is considering increase in production from April 2025 amid the fact that there has been a demand slowdown coming in for crude. So this have been broadly the reason which has led to the fall in crude oil prices. Now, how does it benefit India? Now, for India, crude is one of the major energy source. Nearly 85% of our oil consumption needs are met via imports. However, the intensity of oil dependence has come down for India, because if you look at back when we had just hit the $1 trillion economy, at that point of time we used to import nearly 900 million barrels of crude every day, which was nearly 8% of the GDP. And currently, when we are more than $3.5 trillion economy, we are importing around 1.7 billion barrels of oil, which is just 4% of the GDP. So the intensity has come down, but still it is a major beneficiary for India, given the fact that in inflation, if you look at in CPI, fuel accounts for nearly 4.4% of the weightage, while in WPI it accounts for nearly 8% of the weightage. And every 10% drop in crude oil prices lowers the CPI and WPI number by nearly 40 to 80 basis points. So that's one benefit coming in for from lower crude oil prices. Apart from that, if you look at the current account deficit, oil accounts for nearly 26.5% of the total oil imports and 61% of the commodity imports. And every 10% drop in oil prices lowers our current account deficit, or narrows our current account deficit by nearly 30 basis points. And lastly, when it comes to growth, generally falling oil prices is beneficial or can lead to higher growth, given the fact that the inflation goes down, the financial conditions also improve, and robust business sentiment. So these factors generally lead to higher growth whenever we have seen a drop in crude oil prices.
Right, Swamit. And as you mentioned that 85% of oil consumption needs are being met via imports, largely because of imports. And although, our dependence on oil imports have dropped, I would want to understand the effect of these price drops on various industries.
A host of companies stand to benefit, in fact, because of lower crude oil prices. Firstly, to start off with, oil marketing companies. Now, generally, public tend to see that the lower oil prices are beneficial for oil marketing companies because it leads to higher gross marketing margin. But on the flip side, a sharp drop, whenever we have seen a sharp drop in crude oil prices, it also leads to huge inventory losses for oil marketing companies. And this has been something that we have seen every time in the past. But people tend to take it positively, and that is because of because of the fact that it will aid the marketing margin. On the marketing margin, if you look at every 0.5 rupees per litre increase in crude oil prices increases the EBITDA of IOCL, BPCL and HPCL by anywhere between 7 to 11 odd %. And other sectors like paint. Now, for paint, nearly 40% of the raw material cost is either crude and crude derivative linked. And with the fall in crude oil prices, the raw material cost will also come down. Obviously, this will happen with a lag impact. Apart from that, there is aviation. A major raw material is fuel, which is around 40% of the total cost. For lubricant manufacturers, it's positive because 50% of the raw material cost is crude and crude derivative. Apart from that, there is tire company. Now, for tire companies, synthetic rubber, carbon black and chemical, all the prices of these chemicals are linked to crude oil prices, and a drop in crude oil prices will also lead to drop in this raw material prices, which is nearly 40% of the total raw material basket. Then there are cement companies. Now, for cement companies, nearly 40 to 50% of the total cost is either directly or indirectly linked to crude, and a drop in crude oil prices will also lower the cost for these companies as well. For specialty companies, a host of specialty chemical companies are dependent on crude or crude related product as the key raw material, and these companies will also stand to benefit. And lastly, on the negative side, oil explorers like ONGC, Oil India, Vedanta and HOEC could stand to lose, given the fact that oil is one of the key products for them, and with a drop in crude oil prices, their realizations are expected to come down, and ONGC and Oil India will be the major losers in this because they produce most of the oil in India, and generally a $5 per barrel drop in crude oil prices impacts ONGC and Oil India's EPS by around 7 to 12 odd %. So keep an eye out for these companies in trade.
Thank you so much for explaining that in such detail, Amit. And our next stock in focus is Gensol Engineering after the company came out with its statement responding to rating downgrades. My colleague Mihika is joining us with more details. Over to you, Mihika.
Yeah. Gensol has responded with, talking about how it's going to lower its debt, but that's not seemed to make an impact on the market sentiment. The stock is down 10% today, 40% in the last 5 days, and this the weakness is mainly because of the credit rating downgrades made by CareEdge and ICRA Ratings, and these downgrades were done because on the short-term liquidity mismatch. Now, the company's released a statement stating that they understand the concerns that the downgrade have raised, and they're committed to addressing concerns to all the stakeholders, but they do deny any involvement in the falsification claims. These claims were made by ICRA, talking about how Gensol was falsifying its debt obligation payments, and they're going to set up a committee to review the matter. In terms of the current debt picture, Gensol says that the total current debt stands at 1,146 crores and the debt ratio stands at 1.95, and the company has reduced its debt obligation by 230 crores in FY25 so far. In terms of entity-wise, their standalone fund-based capital limit for solar EPC stands at 249 crores. Their standalone term loan for EV vehicles stands at 645 crores, and their current term loan for the EV leasing subsidiary stands at 252 crores. They've also stated that they're going to reduce the debt by 655 crores via two divestments. One is by selling 2,997 electric vehicles worth 315 crores, and to also sell their wholly owned Gensol subsidiaries company for 350 crores. In terms of their key financial numbers reported, they did state that their order book is more than 7,000 crores, which shows revenue visibility. Their revenue is up 42% year on year to 1,056 crores in 9 months FY25, and EBITDA and net profit have also seen an 89% and a 34% annual uptick respectively.
Right, Mihika. So, as far as I understand, is that although they have noted concerns regarding downgrades increasing, but they are taking various measures to improve their current positioning. Now, another stock in focus is Zydus Life Sciences, but after the company gets a nod from US FDA for its cancer drug. Varsha is joining us with more details on the approval and the future outlook of the company.
Zydus has received an approval for a cancer product called dasatinib, which has almost $180 million of sales in US, and this product will be manufactured in Zydus Ahmedabad facility. Now, if I were to talk about the market strategy and future outlook, company is expected to improve its EBITDA margin by 100 to 150 basis points for FY25, and they are expecting double-digit growth when it comes to US business. And lastly, they aim to launch 25 to 30 products in US and FY25 as well.
Right. Now, keeping it with pharma, earlier today we spoke to Ameera Shah of Metropolis Healthcare about the company's recent acquisition and expansion plans in North India. Let's hear her.
It's the leading chain in Agra, but it's about 26 crores in revenue in the year 24-25, and it's a profitable entity. So, it will be a little bit higher than the Metropolis margin profile. So obviously that will get fully added into the 25-26 number, and obviously whatever growth that we see, from the base of 26 crores in the year 25-26. So while it's not adding anything very large into the revenue, but it is a great entry point. And, we've done this many times before, where we've acquired the leading player in a city, and then we've really grown them out, in a significant way over the next 5-10 years, across the entire region. And we're hoping to do the same thing with scientific pathology. I think across North India, there are some markets in which we believe that we would continue to like to get deeper. We're quite strong in Punjab, where, now, of course, in UP, we've made a great entry. We have a fair amount of business in Delhi, but, even markets like Haryana, Rajasthan, Uttaranchal, Uttarakhand, I think these are all markets in which we would love to, have, again, good entry points and grow from there. So certainly keeping our eyes open and continuing to watch, how we can incorporate the best quality of labs across India under the Metropolis umbrella.
Right. And now next up, we have Credit Access Grameen, which is in the spotlight as it just came up with its interim business update, where the company did say that although the loan growth in most states look healthy, but Karnataka particularly has shown the poorest asset quality. I have my colleague Harsh joining us with more details on the same.
So across geographies, you're seeing decentish traction build up, Neeraj, which is a positive because it likely signals that the bottom is here with regard to at least asset quality. Credit costs may continue to wane over the next quarter or two, and that's what my conversations with a couple of analysts also kind of translated to in terms of understanding. But let's talk about numbers first. Gross loan portfolio is up 2.5% versus December of 2024. So the last 2 months itself has seen decentish growth. Karnataka slightly sluggish on that count, 1% since December. In terms of new borrowers also, the growth clip is decently healthy, 1.5 lakh over the last couple of months added in terms of new borrowers. The portfolio at risk ex-Karnataka is falling, and that's one of the other key positives which is likely keeping the stock in focus. Excluding Karnataka, the portfolio at risk at day 0 has fallen to 7.3% versus 8% at the start of this quarter, and that's obviously a very key positive. With Karnataka, it's slightly elevated, so from 6.8% it's gone up to 7.5%. But Karnataka, in terms of collection efficiency, is bouncing back at the latter half of February. From around 99%, it declined to 95% at the start of February, first couple of weeks. Thereafter, towards the end, it started to pick up again. So 98% in the last week of February is what was clocked by Karnataka in terms of collection efficiency. So all of those parameters starting to bounce back. They've guided that in the next 1 to 2 months, which is by the end of this quarter itself, you'll start to see Karnataka bounce back and start to normalize pretty much fully, which is again another key positive, because that's the kind of number that the street will start to track at the end of this quarter. So lots of parameters looking positive. Credit costs over the next quarter or two will continue to weigh, but asset quality turning around.
Right, so a high probability of Karnataka bouncing back in the next couple of months for Credit Access Grameen. And now let's talk about how things are looking for clean fuel transition over the next few years. Well, my colleagues Neeraj and Tamanna spoke to Ashu Shinghal, MD of Mahanagar Gas Limited, about this, and he says that the company expects double-digit volume growth for the next 3 years. Listen in.
See, we are very much geared up to this transition for the cleaner fuel to happen, because as compared to diesel and petrol, CNG is much cleaner in terms of both carbon dioxide emission and NOx, SOx also, plus PM 2.5 is main ingredient which causes pollution. So we have been laying a lot of infrastructure. In last year, 50 stations have been added in MGL geographies and 35 more in our Unison acquisition. So 85 have been added in a base of 410 stations. So there is an addition of around more than 20% addition. And every next year also we have similar plans. So that is one part of it. We are laying a lot of infrastructure. Pipelines are also being laid. The second part is we have given a lot of stability to the CNG prices also. We are one of the cheapest in the country. And despite the fact that the deallocation happened in October and November, but we did not raise the prices immediately. We did some portfolio management to get what is the actual cost of procurement. We did some adjustment. We absorbed some cost. And in January, the deallocation was restored to the 50% level. So we raised some prices, 3 rupees, but as you rightly said, it is quite inelastic in the sense that a owner which already has CNG will always run on CNG. For petrol, it is different because petrol is a dual fuel. You can run the same vehicle on petrol or CNG. But we are launching various schemes also for diesel vehicles. A person, when they are going to purchase a vehicle, so we are almost funding 50% of the differential cost between diesel and a CNG vehicle by way of our CNG Mahotsav schemes. So that has also given traction. So overall, we find that we will be able to maintain, because of low prices, more infrastructure. And if currently, if you see the prices of petrol are, CNG is 45% cheaper than petrol and 18% cheaper than diesel.
Okay.
So which is a good traction to convert to these CNG vehicles.
So then, therefore, if I were to ask you, and we'll get to the minutiae in a bit, but if I were to ask you that if you were to look 3 years out, 5 years out, depending on whatever vision you may have, where do you see MGL then versus where you might be at the start of 2025, assuming follow a calendar year? Or let's say at the end of FY25, you're at a particular level, where do you see yourself at the end of FY28?
See, the physical volumes are growing. And if the physical volumes grow, the financial numbers will take care of itself. See, we are having a good margin also.
Growth can be 1% also, sir.
No, that's right. You are right.
Also.
If you see last decade or so, we have been growing traditionally with a CAGR of 5%, 4.5% to 5%. This year in 9 months, we have seen a growth of 11%. So definitely there is a momentum which has started picking up. If we take Q4 also, there can be another 1-2% addition. So year on year, last year it was 5.5%. This year could be 13%. So as you asked, that next 3 years, we can see the movement at least double-digit growth every year.
Another stock that's buzzing in trade today is Route Mobile, which has recently announced partnership with Nokia. And Marsha is joining us to give us more details of this partnership. Take a look.
Route Mobile is buzzing on the back of, so it's a promoter company that is Proximus and Telesign have partnered with Nokia to explore opportunities in network API, that is application programming interface. This solution is aimed at supporting developers when it comes to building new enterprise application, and the collaboration will enable both companies to expose their APIs in each other's marketplace, fostering greater integration when it comes to telecom system and various other industry segments. And this is the reason, this deal with Nokia is the reason why the Route is buzzing in trade today.
Now, in the wake of Tesla's impending entry into India, there might be certain ramifications with regards to US's tariff policy as well as India's own EV policy. My colleague Puneet is joining us to bring us more details on this.
Well, thanks for that. So it's one of the biggest updates that's coming out according to certain reports is that US is actually eyeing a zero tariff from India on import of cars currently from these foreign automakers, and that's a big step coming into this particular update. Apart from that, if you give some context, India currently taxes 110% import duty on the cost of the car to import it into India. That is what US is asking to be reduced to 0%, and that's a big statement coming in. Apart from that, Trump has warned of reciprocal tariffs coming in against India's auto exports to the USA as well. Currently, India has mentioned that it is reluctant to consider immediately bring down such a big relief on these on the import duty of the cars. Even it could consider some further cuts as well. Now, just to give some more context, India unveiled a new EV policy back in March of 2024, where the import duty would be reduced to 15%, albeit if these companies come in and set up a manufacturing plant in India. Now, Tesla will of course enter via its showroom in Mumbai, VKC, later sometime this year, and they've already signed a 5-year lease as well. So it'll be interesting to see if they decide to pursue this particular policy and take the lower import duty as well. According to this particular report, government has been, priming the industry to prepare for a lower tariff for these imports, and they see that, Tata Motors as well as Mahindra have mentioned that they've especially lobbied against lowering these kind of import duty taxes. Finally, just, on this new EV policy scheme, it ensures that foreign car makers will invest roughly 4,150 crores in India. In return, they will have to set up their manufacturing plant within 3 years of entering the country, and in that time the import duty will be reduced to 15%. So there is a lot of conditions to get this 15% import duty, and if so, if that does comes in place, it could be reduced to 0%. That's what US is hoping for.
Now, in the wake of sharp corrections, MK has come out with a list of stocks and potential winners from a valuation standpoint of view. What stocks are, MK bullish on? Mahima is joining us to give us that list.
Right. So, very interesting note out by MK. What they're saying is that key to market recovery is earnings stability, and they expect FY26 forecast to be resilient going forward. Now, what they've done is they've given 2 screeners to pick stocks from this kind of market move. The first one is growth at reasonable price screening criteria, in which they've put down 5 different pointers. First one, the pick stocks where FY26 EPS growth is greater than FY25 EPS growth. The second criteria is 1 year forward PE. The PE ratio ratio should be at a discount to 5-year averages. The third criteria is that the stocks have corrected over 35% from their 52-week high. The fourth criteria is that stocks with EPS CAGR of over FY22 to 24 should be greater than 12%, and overall FY26 ROE should be greater than 15%. And stocks which make it to this filter include Motherson Sumi Wiring, Adani Green Energy, JK Tyre, as well as BKG Foods. Now, in terms of the second criteria that they're talking about is based on quality at a reasonable price. Now, for this screening, the criteria that they've mentioned is that the operating cash flow per EBITDA for FY26 should be greater than FY23 to 25 average. In terms of the positive free cash flow, that should be either in FY25 or FY26. The ROCE, that is your return on capital employed, should be consistently about 10% from FY23 to FY27. The working capital days for any particular counter should be less than 90. And in terms of the 1-year forward P, that should be less than 5-year average. So this is the same criteria that was there in the previous screener as well. And lastly, stocks should have corrected at least 35% from their 52-week high. And the stocks that make it through all of these 6 filters include Motherson Sumi Wiring, JK Tyre, Colgate Palm Olive, and Kajaria Ceramics. So these are their top picks and the screeners that they've used to, pick these top picks.
Thank you for giving us that list. And viewers, that's all the time we had on this show. But do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I'm Hiral Datia and with me is Mika Barve. Mika, good afternoon. Interesting day of trade. Second day in a row where we're seeing some good moves coming in terms of markets. And if this continues to hold, it's going to be very interesting to see where from here on. But if you see in terms of Nifty 50 as well, let's quickly pull up the charts and see what the markets are doing. We're nearing the day's highs. We're above the 22,400 mark. We've hit a high so far of 22,491. So we're again 50 points away from the highest levels of the day so far. Let's pull up the Sensex as well as Bank Nifty post that, and then we'll look at the sectoral heat map as well. If you see in terms of the Sensex, almost a 300 points gain coming in as we speak, 0.4% higher. And Bank Nifty as well, 0.2% higher, but slightly underperforming what the benchmark indices are doing in trade. But the positivity does continue. Let's quickly look at the sectoral heat map and see where the strength is lying. Is it across sectors? There you go. It's only IT which is pretty much on the borderline. But apart from that, metals, oil and gas, energy, pharma, these are the top gaining sectors in trade today. So that's what we are watching out for. Bank Nifty is also in the positive to the tune of around 0.2%. Private banks are seeing some gains. Real estate seeing 0.5% is the kind of gains. So that's with regards to the sectoral heat map. And if you see the advance decline ratio as well on Nifty 50, you have 33 advances versus 16 declines. And if you see in terms of NSE stats itself, literally 1900 advances versus 300 declines coming in there. So 6 times the advances in terms of the declines. Overall, let's look at in individual stocks. If we can get a heat map of the stocks that are contributing to the kind of up move today. That's the Nifty heat map. So you have Asian Paints, BPCL, Tata Steel, Coal India and Hindalco, which are the top gainers in trade today. What's losing? Trent under pressure. Yesterday as well, the stock was under pressure. Tech Mahindra, HDFC Life, Tata Consumers, as well as the HDFC, which are down and about in trade. Let's look at this, the contributing factors in terms of the stocks as well, if we can get that heat map. There you go. Reliance, Axis Bank, HUL, Asian Paints, these are the ones which are contributing to the kind of up move in today's session. What is keeping the markets under checks? You have a HDFC Bank, which is contributing almost 12 to 13 points there. But apart from that, smaller contributions coming in from a Trent, Kotak Mahindra Bank, ITC, and the others. So that's the overall numbers that we are watching out for in terms of at least what the large caps are doing in trade. But clearly, all sectors barring IT are gaining so far. So clearly, what you're seeing in terms of the large cap space, yesterday's session is what I think the markets are mirroring today as well, Mihika. what was interesting yesterday was that the broader markets were somewhere still outperforming the benchmark indices.
And they continue to do so even today.
So I think that buying interest apparently has started to come in again.
It has. And, you know, this is something that we've seen all week. They have bucked up. If you just look at today, the Nifty Mid-Cap 150 up about 1%. The Nifty Small-Cap 250 are seeing gains of 1.5%. And if you look at the Nifty Small-Cap 250, which is the clear outperformer in today's day of trade, you have 202 stocks gaining versus just 39 declining. You have Castrol up 11.5%. We'll talk about why in just a bit. Chennai Petroleum, Credit Access, Sapphire Foods, all of these counters seeing, you know, 8 to 10%, you know, of growth. You have Credit Access, something that they did give certain key updates. Loan growth is healthy in most states. They've added 1.5 lakh borrowers in Jan and February, and over, you know, 40% customers in at-risk portfolios are making part payments to what they are, you know, they have to pay. Something that's not doing well on the Nifty Small Cap is a JB Chemicals, MedPlus Health, and a Craftsman Auto seeing cuts of 2 to 3% in trade. But, you know, like I said earlier, the broader markets have bucked up. You know, the Nifty Mid-Cap 150 is up almost 4% this week. It's shown some strength. The Nifty Small-Cap 250 is up over 4.7% this week. So both the broader indices have shown, you know, strength this week. Most of this coming from yesterday and today. In terms of your market cap gain, if I just take the last, if I take this week or the last 2 days, you have mid-caps gaining 2.85 lakh crores in market cap, small caps gaining 2.23 lakh crores in market cap. And if you look at the top gainers in terms of market capitalization this week, you have, in the mid-cap, you have something like an HPCL, which is up in trade as today as well, a Hitachi Energy and a Union Bank. HPCL and Hitachi is, you know, almost up 3 to 4% right now as well. And in the small cap space, you have Jyoti CNC Automation, which is also, you know, buzzed in trade today, followed by a KPR Mill and a Laurus Labs. All of the three counters are the ones that have gained the most market cap this week. But Hiral, there are these 5 Nifty 50 stocks that are very close to their 52-week high.
Yeah, I mean, yeah, you have names like Kotak, Bajaj Finance, JSW Steel, Bharti Airtel, Eicher. Let's just quickly pull up these stocks on the screens and see what they are doing in trade. If you see in terms of the percentage that they are away, it ranges between almost 3 to 10%, wherein Kotak, Bajaj Finance and JSW Steel are the closest to their 52-week highs as well. So these are going to be interesting moves that the street is absolutely going to be watching out for as well. In fact, the markets are actually watching out for what happens with regards to the consumption side of the story from here on, because post the budget, the decrease in terms of the tax bracket, the 1.2, the entire gap that the government has given out in terms of spends, that is what everyone is anticipating will move towards consumption. In fact, earlier during the day, we also spoke to Dalal Brocha's Milind Karmarkar about what he likes from this consumption space. First, let's listen into a quick to that bite conversation.
So retail is my most favorite. Then comes platform companies. FMCG currently, we normally don't invest because we have seen that, say for example, in the United States, when organized retail just started, at that point in time, the top 5 companies in the US were FMCG companies. 20 years later, top 5 companies were all retailing companies, because the pattern of control over prices moves from FMCG to retail. That's what happens. And that is also likely to happen in India. So in India, most of these large companies like FMCG companies, like whether it's HUL or these are mature companies, and they are likely to grow at 8 to 10%. But beyond that, whether they will grow, I don't know. And since we focus on only those companies or those sectors which can grow higher than the nominal GDP growth, we would be underweight, or we may not own these companies.
Right. So that's with regards to where, you know, what Milind had to say as well clearly. But let's quickly look at the key themes that we should be watching out for. On number 1, you have the chemical stocks which are in focus. Galaxy Surfactants, IOL Chemicals, they've got a certificate approval for drugs used for treating various mental health disorders and to export it to other countries. In fact, Castrol India is in focus as well in today's day of trade. My colleague Varsha joins us with more details. So that's the first theme that we are watching out for so far. Varsha, over to you.
Yes, thank you for that. Let me start with Galaxy Surfactants, which is buzzing because company will provide EPC services to one of its global customers. The services include process, design, commissioning, procurement, engineering, construction of the plant. Now the plant is for performance surfactants and also the specialty ingredients. Discussions are also going to expand this collaboration post commissioning as well, and this aligns with the company's growth vision to expand geographically. If I were to talk about the outlook given by the company, they are expecting EBITDA of around 19,500 to 20,000 per ton, per metric ton for FY25, and they are expecting volume growth of 6% to 8%, even though despite the challenging environment that they are going through. On the next, I have IOL Chemicals and Pharmaceuticals, wherein they have received a certificate of suitability. Now this is from European Directorate for the Quality of Medicines and Healthcare. Now this will allow company to export one of their API product, which is used to treat mental health disorders. So they're going to export this product, which will actually help them to aid the revenues going forward. If I were to talk about outlook for the company, they're expecting overall EBITDA margin target of around 13 to 15% for the next 2 to 3 years, and the pricing pressure and stagnating demand will persist in Q4 FY25. That's the reason they're expecting flat Q4 FY25. This is on IOL Chemicals. Last on my list is Castrol India. The stock is buzzing because essentially Saudi Aramco, a major oil company, is looking to expand its lubricant business by potentially acquiring Castrol from BP. Now Aramco aims to combine Castrol with its existing Valvoline lubricants, which it acquired at $2.65 billion in 2023, and is particularly interested in Castrol's operation in India and other fast-growing markets. Now, BP is actually conducting a strategic review of Castrol with an estimated valuation of around $10 billion, and discussions are in early stages, though the bid has not been finalized. But Castrol has also attracted investors from other potential bidders as well.
Thanks, Varsha, for getting us the details. So IOL Chemicals, Galaxy Surfactants, as well as Castrol, 3 stocks that we are focusing on. In fact, let me also welcome in Astha Jain, Senior Research Analyst at Hem Securities. Astha, good afternoon and welcome to the show. How are you looking at these 3 stocks, because all of them buzzing in trade today?
Hi, good afternoon. See, talking about Galaxy Surfactants, definitely it is buzzing in the trade today. So would like to start with our target for the Galaxy Surfactants, which is at around 2,530 at the initial levels. So if I talk about this counter, what I feel that their quarterly performance in the Q3 of FY25 was strong, and what the company has seen, that they have seen a strong demand across Europe, Asia, Pacific, as well as I should say American markets. So company has already seen a strong demand. They have already posted a very good set of numbers. And now with these type of news which are coming in right now, definitely this stock is poised for more upside from here. So our stance here is to stay invested in this counter with a price target of 25.30 at the initial level.
Got it, Astha. So a positive view coming on from Galaxy Surfactants, and the stock has done very well today as well. But moving on to the second theme for the day, and that's Gensol Engineering. Now this is a stock that is down 10%. It's hit its lower circuit today, and that's been revised, by the way. And the stock is down 40% in the last 5 days. Now one of the main reasons why the stock is under pressure is because it got credit rating downgrades by both CareEdge Ratings as well as ICRA Ratings, and the ratings downgrade happened due to short-term liquidity mismatch and failure to pay debt obligations. Now, the company has released a statement yesterday regarding the rating downgrades, and they stated that they do understand the concerns that the downgrades have been raised. They're committed to addressing the concerns to all their stakeholders, but they have denied any involvement in falsification claims, and they're going to set up a committee to review the matter. Now, the falsification claim was made by ICRA Ratings that stated that the company falsified its documents on debt serving and stated that they've been sharing no default statements with the brokerage at the beginning of every month, and this suggested timely debt servicing. Now, the company is also given a better understanding of their current debt picture. Their total current debt stands at 1,146 crores, debt ratio of 1.95 and a debt to equity ratio. And the company has also reduced their debt obligations by 230 crores in FY25 so far. In terms of their entity wise, so for their solar EPC entity, their standalone fund based capital limit stands at 249 crores. The standalone term loan for their EV segment stands at 645 crores, and their current term loan for their EV leasing subsidiary stands at 252 crores. The company has also noted that they will be reducing their debt by 655 crores via mainly two divestments. They're going to sell 2,997 electric vehicles for a total of 315 crores, and they will also sell their wholly owned Gensol subsidiary company for 350 crores, and this is expected to reduce debt and get the debt to equity ratio to around 0.8. Lastly, they've also noted some key financial numbers reported. The order book stands more than 7,000 crores, which gives the company revenue visibility. They've also noted their financial performance in 9-month FY25. Revenue is up 42% on a year-on-year basis. EBITDA is up 89% on a year-on-year basis. And we've also seen net profits see a 34% uptick. However, despite these claims coming forward, the sentiment on the street is not very positive. The stock is stuck in lower circuit. Astha, I'll come to you. Do you have any views on Gensol Engineering? On one end, you have all these downgrade ratings to a default by something like a carriage, and then Gensol clarifying and talking about its divestment efforts.
So one thing which I would like to highlight here is that their promoter pledge is around 81%. So already the promoter holding is 62% in the share, but out of that 62%, they have kept 81% as a pledge. So I think that is one of the higher percentages of pledge which we have seen in the recent times. So that is also creating concern about the company. Now, if I talk about the financial performance, it was a okay set of performance, just a 3 or 4% rise in the bottom line. But the whole point here is that, yes, the company is in a high leverage position because we know that their debt to equity ratio is more. Here, the reserves are only 500 crores, whereas their long-term borrowing is 700 and short-term borrowing is 500 crores. This is the figure which I have taken for the September ending 2024. That is the half-yearly, balance sheet figures. So all in all, even I'm not very much liking this type of a leveraged balance sheet, and the concerns which are coming in right now and the downgrades which they are seeing. So definitely it is a concern. Our idea is to stay away from this counter as of now, since the pledging is also very high. 81% is counted to be a very high pledging in the promoters holding.
Right, so that's with regards to where Gensol Engineering goes. The stock is locked in lower circuit. But moving on, talking about OMCs, you have Brent crude prices which have actually dropped 17% from its 2025 highs. Now, let's understand first from Somit if India will benefit from the price drop, and if so, what would the impact of low crude prices be on various industries? But first, what are the consequences on India? Somit, over to you.
Well, yes, Brent crude prices have come off sharply. In fact, yesterday's low point, if you see, it was at around $68.3 per barrel, which is the lowest level that we have seen since December 2021. In fact, for second consecutive month, we have seen a drop coming in when it comes to Brent crude. In February, it was down around 4.7%, and in March so far, it has declined a little bit more than 5% in trade. And from 2025 high, Brent crude is down nearly 17%. So what are the reasons that have led to this fall in, the sharp fall in crude oil prices? Firstly, it's the rising dollar index that led to the correction in the crude oil prices. Apart from that is the heightened global uncertainty on the back of Trump tariff, which has led to this fall in crude oil prices. And lastly, which is the most important reason, is the fact that the OPEC Plus is looking to increase their production output from April 2025 amid the slowing demand for crude that we are seeing is also led to this fall in crude oil prices. Now, why is it important for India? Yes, for India, it is most important because oil is one of the key energy source for the country, and 85% of the oil consumption needs are met via export. However, the intensity of oil's dependence in India's economy has come down, because if you look at when we had hit the $1 trillion economy, India used to import around 900 million barrels of crude, which was nearly 8% of the GDP, and when we are now at around $3.5 trillion of economy, we are importing around 1.7 billion barrels of crude, which is just 4% of the GDP. Now, how does it benefit the India as a country? Because if you look at the inflation number, fuel's weightage, direct weightage in CPI is around 4.4%, and direct direct weightage in WPI is around 8 odd percent, and every 10% drop in crude oil prices increases the CPI or reduces the CPI and WPI by around 40 to 80 basis points. The second benefit comes in on the current account deficit. Oil accounts for nearly 61% of the total commodity imports and 26.5% of the total imports of the country, and every 10% drop in crude oil prices lowers or narrows the current account deficit by nearly 30 basis points. And generally, growth is something that we see when there is a drop in crude oil prices because of lower inflation, looser financial conditions, and robust business sentiment that also leads to higher growth whenever crude oil prices have come off sharply from their highs.
Right. Thanks, Amit, for that. But what about the effect of, the fall in crude prices on various industries? Is it largely positive, or is there a negative impact as well?
Well, it's kind of mixed, but positives are much more when compared to negative. On the first and the foremost sector that stands to get impacted is the oil marketing companies. Now, largely it's a neutral impact, but the street considers it as a positive impact given the fact that lower oil prices leads to higher marketing margin. But why a neutral impact? Because whenever we have seen a sharp drop coming in the crude oil prices, there are huge inventory losses reported by oil marketing companies in that quarter, and that can be similar. That is something that we can expect in the fourth quarter as well. But generally, lower crude oil prices leads to higher marketing margin, and a 0.5 rupees per litre increase in the marketing margin increases IOCL, BPCL and HPCL's EBITDA by anywhere between 8 to 11%. So that is a positive impact coming in. But on the negative side, there could be inventory losses. Apart from that, there are various sectors that stand to benefit. Firstly, it's the paint companies or paint sector that benefits because nearly 40% of the raw material cost is oil and oil derivatives, and a lower crude oil prices could lead to lower raw material costs for them. However, it will come with a lag impact. Similarly, for aviation companies, major raw material is fuel, which is around 40%. For lubricant manufacturers, 50% of the raw material cost is crude derivative, and both these sectors will benefit with lower crude oil prices because their margins could expand going forward. Apart from that is the tire companies, for which if you look at various chemicals like synthetic rubber, carbon black and other chemicals, these form nearly 50% or 40% of the raw material basket, and a lower crude oil prices could lead to higher margins for the tire companies as well. Apart from that is the cement companies. Nearly 40 to 50% of their cost is either directly or indirectly linked to crude, and lower crude oil prices will benefit them as well. Then there are specialty chemical, in fact a host of specialty chemical, it will be positive because crude or crude related derivatives are one of the key raw materials for them. On the negative side, if you look at, is the oil explorers like ONGC, Oil India, Vedanta and HOEC that get negatively impacted because crude is one of their key selling key product, and a lower crude oil prices means lower realization. But ONGC and Oil India get impacted the most because they are the largest oil explorers in India, and generally a $5 per barrel drop in crude oil prices lowers ONGC and Oil India's EPS by anywhere between 7 to 12%. But do remember, this is the most important point here, that for any benefit to realize, even for the country or for this company's crude oil prices need to sustain at these levels. These kind of short-term fluctuations actually don't impact the country or the companies. There won't be any much benefit or losing out that we can see if crude oil prices do not sustain at the current levels that we are seeing currently, that is below $70 per barrel.
Right. Thanks for getting us the details, Somit. So that's the kind of impact that various sectors could take. Asta, Somit took us through, the kind of impact that Brent crude drop could have, because we're already at a 3-year low below that $70 per barrel mark. From the sectors and the companies that he mentioned, does that tell you that you should be buying any or selling any of the stocks? What would your view be?
So at this point of time, we are liking OMCs, that is oil marketing company, and among that, HPCL is our preferable choice. Now, if I talk about discounter, first of all, would like to give the target. It can be somewhere at around 370 to 380. Now, why HPCL? First of all, we have seen their quarterly performance was good. Now, this was better as compared to IOCL and BPCL. Secondly, we are seeing that now there is a chance of demerger and the listing of their lubricant business. So that can be acted in a positive manner for the company. Thirdly, they are about to start one of the refinery in the Rajasthan, which I think which will be for the calendar year 25. So I think all these will work in a favor of the company along with the strong financial performance. So among OMC counters, I'm liking HPCL, giving a buy on this counter with a price target of 370 to 380. Talking about paints and the tire sector, so still we want to see how these counters will be performing, because financial performance was not very satisfactory. So we would really like to see their Q4 of FY25 numbers and then want to make any sort of re-rating in the paint counters as well as tire industries. Although among tire stocks, Apollo Tire looks quite decent to us. And in the chemical space, we are positive, keeping our buy view on Navin Fluorine.
Got it. Thank you, Astha. So a positive on something like an Apollo Tire, Navin Fluorine, HPCL is what's on Astha's list in this space for people who, companies who will benefit from lower crude prices. But let's stick to the oil and gas theme, but shift to the gas company, and we're going to talk about Mahanagar Gas. And we actually spoke to the MD of the company, Mr. Ashish Singhal, exclusively today, and he mentioned a few things to NDTV Profit. Now, on infrastructure expansion, the company has added 50 stations in MGL geographies in the last 1 year, 35 stations in Unison geographies in the last 1 year, and they expect the CNG station addition to continue in a similar space. However, they are finding CNG station expansion difficult in the Mumbai region, but anything outside Mumbai has been strong. On volumes, they do expect a volume growth for the next 3 years to be in double digit. We've seen a strong volume show quarter-on-quarter basis in the last few quarters. And lastly, on gas sourcing, which has been a key question, following the whole APM allocation debacle. 51% of CNG requirement is coming via APM allocation, but the company will be signing up for more LNG contracts in the coming years. But, we're shifting focus, and lastly, a key metric for Mahanagar Gas's profitability, which is their unit EBITDA. We did have a conversation with MD Ashish Singhal on how the APM allocation looks like, whether he needs price hikes, and what could be the unit EBITDA guidance. Do listen in.
Margins have come down.
Yeah.
Earlier we were having a margins of say 13 rupees. Now it has come down to 8.5 rupees.
Yeah.
And we had an impact of around 6 rupees per SCM. So 3 rupees we have increased the prices, and the restoration has happened by the 50%. So now we are at par. Now with portfolio management, and we expect that the prices of LNG to keep low, we expect that stability will be there in the CNG prices.
Will you need to take more price hikes?
May not be. Because as of now, we are at par.
Okay.
Pre-cut level and current level are at par. We have taken some price hike, and some readjustment in the restoration has happened. So we are at comfortable at that current levels. If it goes further down, then we may think about it.
For bookkeeping purposes, so unit EBITDA, which was had slipped to higher single digits, back to double digits in quarter
yeah,
four?
I mean, if you see last 5-6 years, we have been having an EBITDA of 7 to 8 rupees. Last financial year was pretty good. We were having 13 rupees and slightly higher than that. Then we gave a guidance of 10 to 12 rupees.
Right.
Now perhaps maybe we put down one number, 1 rupee. So 9 to 11 rupees could be a new guidance.
Okay, because the number that we had was that Q3 was about 8.3, right?
That's right.
So you're saying it could be now between 9 and 11.
Correct.
It could be double digit as well in quarter four.
Q3 was slightly low because we did not raise the prices for some time.
Exactly.
Yeah.
So back to double digits likely. Could be.
Could be, yeah. 9 to 11.
9 to 11.
Somewhere 9.5 to 10.5 rupees or something like that.
Well, if you didn't catch that entire conversation, you can catch it on our YouTube or our website. But it's key to note that the management did guide a unit EBITDA guidance of 9 to 11 rupees per standard cubic meter. But Astha, I'll come to you, Mahanagar Gas, even if you see all the other gas stocks, you have IGL, Adani, Total Gas, Gujarat Gas, all up in trade today. If you had to see an MGL versus IGL and a Gujarat Gas, what would your pick be?
So definitely I would like to go with MGL as of now. And our price target is somewhere at around 1,380 to 1,400 odd levels. Now, talking about this counter, we all know the sourcing for them is little cheaper as compared to the other peers. I'm talking about gas sourcing. So I think because their dependence is low on costly LNG sourcing, so I think that can act in the favor of this company, and that is why we can see that this company can outperform its peer over the period of a time. So among the whole city gas distribution space, I'm liking MGL the most.
Astha, for giving us those views. MGL is still a topic among the gas stocks. But on that note, let's take a quick break. But do stay tuned. Lots more lined up on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Welcome back. You're watching NDTV Profit. Our next theme for today is copper prices and the kind of impact it could have as well. Clearly, you have copper prices which are on an uptrend, and clearly the beneficiary over here becomes a Hindustan Copper. Now, one, How does Hindustan Copper benefit? Because if you see in terms of the stock as well, it's up nearly 8.5% in the last 5 trading sessions. Today itself, it's seen gains of almost 3.5%. Mika, you have been tracking this space pretty closely. Hindustan Copper is a stock, if you see year to date, a double digit, just initial double digit is the kind of gains that an investor has seen. But clearly, with copper prices increasing, how does it benefit a Hindustan Copper and why are copper prices
There's
increasing?
a financial as well as stock market impact from what past history has shown. If you just look at Hindustan Copper, it's up intraday high of 5%, stock up 8.5% in the last 5 days. And this is because of MCX copper future prices, which have gained. If you look at the time period, copper prices in the past 1 week are up 3%, year to date up 11%, and 1 year they're up 20%. Now, a lot of this gain in the past week at least is because of the China stimulus measures that have been announced, and it matters for metals. China is the world's largest consumer of base metal. This includes your copper, zinc, aluminium, etc., and is key influence of global demand for metals in general. When you look at China measures, they have been meeting, if China meets the measures in a successful way, it will aid global demand as well as prices for metals. And Indian companies do struggle when Chinese demand is low because the negative pricing does peep in. Lastly, on impact of Hindustan Copper, higher copper prices have a direct positive impact for the company. They lead to a rise in realization, which seeps through profitability. And if historical data also shows, Hindustan Copper share price has always tracked global prices, and they've always gained when global prices have been on an uptick because there's a financial impact as well.
Right, so this is going to be interesting with regards to your Q4 numbers as well, how they pan out. In fact, let me head across to Asta as to understand as well with regards to what the impact will be, because and then I will go across to Osho as well. But Asta, your view in terms of Hindustan Copper.
So we should know that copper is basically used in the EV batteries and clean energy technologies, etc. Now, if I talk about the China, the China control half of the world's copper demand. This is what I believe. So definitely, this news which has come is a positive for the Hindustan Copper. Although we have seen this financial performance was not in that very much positive side, but this news definitely can act as a beneficiary to the stock price performance, and we are recommending just a hold on the Hindustan Copper, not a buy. It's just a hold with a price target of somewhere at around 240 to 245.
Right, so that's a hold, but 242 to 245 is the target price that Asta is looking at. In fact, with this, let me also welcome in Osho Krishnan from Angel One. Osho, your views, what are charts indicating with regards to Hindustan Copper? Because YTD, 11 to 12% is the kind of up move that we've seen. Good move in today's session as well. What would you advise investors to do?
Well, very good afternoon to all of you. Looking at the technical perspective of Hind Copper, then this counter has been hovering below the 20-day exponential moving average. However, there has been certain attempts in the past also that it has tried to move beyond the zone of 20-day exponential moving average, but has failed so. So it has lived a very short-term period over the zone of 20-day exponential moving average. So I'm expecting until we see a very decisive and sustainable emergence beyond the zone of 230 on the technical charts. Until that time, it's better to stay cautious in this counter. However, on the technical parameters front, the RSI is also on the verge of consolidation breakout. So if there will be continuity on the higher end towards the zone of 230, that can comply very well for the bullish trend in this counter, and one can expect a decent rally in the short-term period. But again, on the higher end, I am expecting a target of nearly 245 to 250 only once it emerges above the zone of 228 on a closing basis.
Right, so that's with regards to Hindustan Copper as well. But let's quickly address the FADA data that has come in for the auto sales numbers as well. What is interesting is the higher double-digit plunge that has happened in the passenger vehicle segment. And that is something which is concerning over here, because if you see in terms of the overall retail sales, that is down around 7% on a year-on-year basis in the month of February. But you have the passenger vehicle retail sales which have gone down 10.3% this time around. Apart from that, if you see in terms of the commercial vehicle retail sales, that is down around 8.6%, and the two-wheeler sales has seen a dip of around 6.3%. So that's the numbers that we are picking up. CV sales also is interesting. 14.5% is the kind of downtick that we've seen in the month of February. Let's quickly look at all the companies, from an M&M to a Tata Motors to a Maruti Suzuki. Let's just pull up all the charts and see what the impact is, because this is absolutely concerning, because these are giving you signs of a slowdown that is probably coming in. Maruti Suzuki again trading in the red. Tata Motors continues to trade in the red with minor cuts coming in there. M&M is one of the upticks, is a stock which is in the positive with gains of around 0.5% on that one. But apart from that, let's look at a Bajaj Auto as well. You know, what they've indicated is, in terms of the inventory levels, is that has remained sticky at around 50 to 52 days. And that is what is underscoring the mismatch between the retail as well as the wholesale numbers. So that is the key. That's the key that is coming in terms of where the auto sales numbers go. Very quickly, Astha, anything that you can give us in terms of the FADA data that has come in, because clearly there is a downtick. Your passenger vehicles are seen, I mean, it's really little over 10%. CVs is also in double digits. And an indication that yes, there is some bit of a slowdown that is coming in there. Your car inventory levels have remained sticky in that 50 to 52 days window, and there is an underscoring mismatch between retail as well as the wholesale numbers.
Right. So among that pack, I would like to go with one counter, which is Eicher Motors. If I look after that counter looks to be pretty decent if I compare it to the other counters, whether it is M&M or TVS Motor or Maruti for that sake. So here, only Eicher Motor is the counter which I'm liking at present moment of a time in the automobile space, and recommending a hold as well as buy on dips can be done with a price target of 5,300 to 5,400.
Right. Osho, any stocks that you prefer, or would you see selling pressure in any of the counters? Are you seeing weakness?
From the auto space, overall, majority of the counters are into a spree of continuation towards the selling spree. So I'm expecting that until there is a kind of a reversal that can be seen specifically in the heavyweight counters like Tata Motors and Maruti, until that time one should remain cautious. But in between, there is opportunity in some of the counters like Ashok Leyland is placed at a very decent support zone. So I'm expecting that this counter can see some kind of bounce in the coming period. And historical trend also suggests that the zone of 200, 205 has supported the counter, and one can expect a decent bounce in the coming period. So one should continue their focus on the stock specific front, but the overall sector is not looking aggressive or bullish as of now. If there will be any kind of reversal in the heavyweights, which I mentioned, like Tata Motors or Maruti, then only we can see some kind of momentum coming back in the counter. Till that time, one should maintain their stock specific front and maintain a caution on the whole sector.
Got it. But let's stick to the auto space, and it's great news for auto fans. It's official that Tesla is set to open its first showroom in Mumbai's BKC. The company has put down rupees 2.11 crore as a security deposit for the 4,000 square feet showroom space. And my colleague Tushar joins us with more details. Over to you, Tushar.
They're outside the Maker Max City building in Bandra Kurla complex in Mumbai, where Tesla is set to open its first India showroom. Tesla has actually leased 4,003 square feet space in the ground floor of this building at 881 rupees per square feet, making it the biggest or the most expensive commercial real estate deal in India. Second only, or actually more expensive than the Apple BKC store, which is also behind me at this point of time. A total of 2.11 crore rupees has been deposited as a security deposit, while the rent is set at 36.25 lakh rupees per month. The rent will increase at 5% per annum. The total lease is for a total of 5 years. Tesla is expected to open a second showroom at AeroCity in Delhi. The first model that is likely to come into India is the Model Y at about 60 to 70 lakhs. The other model that can come in if Tesla is more aggressive with the expansion would be the Model 3 at about 30 to 40 lakh rupees in India.
Got it. Thank you, Tushar, for giving us those details. But now, in the wake of Tesla's impending entry to India, there might be certain, ramifications with regards to the US tariff policy as well as India's own EV policy. Puneet joins us to bring us the details.
one of the biggest updates that's coming out according to certain reports is that US is actually eyeing a zero tariff from India on import of cars currently from these foreign automakers, and that's a big step coming into this particular update. Apart from that, if you give some context, India currently taxes 110% import duty on the cost of the car to import it into India. That is what US is asking to be reduced to 0%, and that's a big statement coming in. Apart from that, Trump has warned of reciprocal tariffs coming in against India's auto exports to the USA as well. Currently, India has mentioned that it is reluctant to consider immediately bring down such a big relief on these on the import duty of the cars. Even it could consider some further cuts as well. Now, just to give some more context, India unveiled a new EV policy back in March of 2024, where the import duty would be reduced to 15%, albeit if these companies come in and set up a manufacturing plant in India. Now, Tesla will of course enter via its showroom in Mumbai VKC, later sometime this year, and they've already signed a 5-year lease as well. So it'll be interesting to see if they decide to pursue this particular policy and take the lower import duty as well. According to this particular report, government has been priming the industry to prepare for a lower tariff for these imports, and they see that Tata Motors as well as Mahindra have mentioned that they've especially lobbied against lowering these kind of import duty taxes. Finally, just on this new EV policy scheme, it ensures that foreign car makers will invest roughly 4,150 crores in India. In return, they will have to set up their manufacturing plant within 3 years of entering the country, and in that time the import duty will be reduced to 15%. So there is a lot of conditions to get this 15% import duty, and if so, if that does comes in place, it could be reduced to 0%. That's what US is hoping for.
This is going to be an interesting move, and how the landscape of the EV industry changes in the country as well, because M&M has actually come up as compared to what the peers are doing between Maruti as well as Tata Motors. And now you have a Tesla that could be coming in, but obviously it is going to be the premium segment that Tesla will be targeting as well when you talk about EVs as a whole. But moving on from the auto to the pharma pack, you have Zydus Life Science. They've actually got ahead a nod from US FDA for its cancer drug. The stock is up almost 2.5%. Varsha is joining us with the details of what do the approvals mean, what's the outlook, what's the potential opportunity that Zydus is sitting on. Varsha, over to you.
Zydus has received an approval for a cancer product called dasatinib, which has almost $180 million of sales in US, and this product will be manufactured in Zydus Ahmedabad facility. Now, if I were to talk about the market strategy and future outlook, company is expected to improve its EBITDA margin by 100 to 150 basis points for FY25, and they are expecting double-digit growth when it comes to US business. And lastly, they aim to launch 25 to 30 products in US and FY25 as well.
Right, so that's with regards to Zydus. Osho, what are charts indicating with regards to where Zydus goes? And apart from Zydus, any other topics coming in for you from the pharma pack?
See, firstly, from Zydus, this counter has seen a kind of a breakdown from the zone of 950, but in the last 3 trading sessions, there has been a kind of recovery also that can be seen in this counter. So currently it is hovering in a range of 870 to 950, and I'm expecting that once it breaches the zone of 950 on a decisive manner, then only we can see some kind of mojo coming back in this counter. Till that time, there can be some range bound movement in this counter, because after a very long period, this counter have emerged above the 20-day exponential moving average. So for now, it's better to stay sidelined from Zydus. Once it breaches the zone of 950, that will be implying a good opportunity to accumulate. But from pharma space, majority of the other counters are looking very positive to me. Firstly, Lupin has given a very strong breakout. So that is a counter that one can expect to give a very good returns in the short-term period. It has rebounded from the zone of 1900, and I'm expecting approximately 2150 as a positional target in this counter. So one can expect a decent return in Lupin and can start accumulating it from a short to medium term perspective. Apart from it, Biocon is also looking good. Biocon has seen a very strong resurgence in the last 3 trading sessions and is likely to emerge above the 20-day exponential moving average. So I'm expecting that one can even stay or one can keep this counter in their watch list. 320 is a very strong support zone, while on the higher end, 345 to 50 is the immediate resistance that can be seen in Biocon also.
Right. So Biocon as well as Lupin are picks coming in from the technical side. Asta, your view with regards to pharma, if you have to look at the domestic market as well as the export opportunities, and you're talking about the tariffs that could be looming from here on, specifically the reciprocal tariffs that we're talking about. Your view on the sector and any recommendations?
So view on the sector is positive because I feel that this sector is poised to perform strongly going ahead also, although I know there are few concerns related to tariff, etc. But still, those concerns will not impact, the profitability of the companies in that degree or a manner at which it is anticipated right now. Now, talking about this whole pack, first of all, Zydus Life, as we were discussing that counter earlier, I think that counter has shown an impressive financial performance on the way, on the basis of some volume-led expansion, strategic product launches, and the favorable product mix also. But talking about right now the stock price momentum, I think this is a good long-term story to bet upon. So maybe a buying on dip strategy can be applied to Zydus Life at the lower levels, not at the current level. And among the whole pack, EBIT India is still my favorite choice. We are positive on EBIT India because it has got 8 out of 10 brands which are category leader, and no single brand is holding the portfolio concentration with more than 24 or 25% share. So this is our preferable choice. Our price target for EBIT is 32,500 to 32,700 in the medium term.
Got it. Let's shift our focus to something as like a Route Mobile, which is also buzzing in trade, and this is on the back of a new partnership. We have Varsha joining us to tell us more about the same.
Route Mobile is buzzing on the back of, so it's a promoter company that is Proximus and Telesign have partnered with Nokia to explore opportunities in network API, that is application programming interface. This solution is aimed at supporting developers when it comes to building new enterprise application, and the collaboration will enable both companies to expose their APIs in each other's marketplace, fostering greater integration when it comes to telecom system and various other industry segments. And this is the reason, this deal with Nokia is the reason why the Route is buzzing in trade today.
Got it. Thank you, Varsha. Osha, I'll come to you. Route Mobile, what do the charts say?
See, overall, this counter is into a very steep correction, and there has been, today is the first day where we are witnessing some kind of respite. Overall, the counter has given a breakdown from the zone of 1200, and until it reclaims the zone of 1200, one should stay cautious in this counter. But for short-term traders, as today move has been backed by very strong volume, so for short-term traders, one may take this as an opportunity for a higher target of 1200, but definitely keeping a strict stop loss of today's low, approximately 1030 should be advisable to keep a strict stop loss in this counter for immediate target of 1200. But conviction will come only once it breaches the zone of 1200 on the higher end.
Got it. Thank you, Osha, for giving us those details. But the next stock that we have in focus is an Angel One. Now, it's regarding their Feb business update, and we have Harsh joining us to tell us what went wrong.
Angel One coming out with an update for February. It's sort of a tepid kind of an update because you're seeing some bit of lost market share, especially on the retail side of things. But let me first start off with client base growth. It's grown nearly 43% YOY, but when you're looking at the month-on-month number, just 1.5%. 3.06 crore customers is now what Angel One has, which is roughly a 19.5% market share. In terms of gross client additions, also just 5 lakh additions this month, which is down 26% when you're looking at it month over month. Average daily orders were down around 9% month on month. Average daily orders, the better metric to look at the total orders, largely because the number of days in February were lower, and therefore the average daily orders indicating that regardless of what month, you're still seeing a downtick with regard to the number of orders placed on a daily basis. Your F&O retail turnover market share has gone down by 23 bips. Your cash turnover market share is down 9 bips or so month over month. Overall, you're seeing your cash average daily turnover down 12% month over month. So across the board, you're seeing lower metrics. Mind you, the stock has already fallen sharply from those highs. So how much of this is built in really essentially is a question, but numbers not looking very encouraging. And of course, YOY not the best base in terms of comparability either, because the regulations or the revised regulations of SEBI really kicked in only in November.
Thanks, Harsh, for getting us the details. And if you see in terms of valuations as well, your Angel One, which is not a very expensive stock, because from the listed peers, if you have to look at the top 3 or 4 in terms of the market cap, the most expensive being a Nuvama Wealth, which is then followed by, say, Angel One, ICICI Securities, then a Motilal Oswal, right? Now, taking the kind of update that has come in from an Angel One, Astha, how are you looking at this? Because clearly there is some bit of pain.
Yes, and if we see their commentary of Q3 of FY25 numbers, first of all, there were 2-3 things that have impacted their financial performance. First of all, due to the FNO regulations and weak market sentiments. So I think company was not able to perform on the guidelines, because in fact, they were anticipating only 14% decline in the revenue, but it was at around 18 to 19%. So I think here, as a management is not able to stick to its guidance. So moreover, I think the kind of news which have come in, definitely it will act as a dampener on the stock prices. So right now, not in a mood to suggest buy on this counter. Maybe who has this counter in their portfolio can continue holding it, but no buying is recommended from us.
No buying recommended in terms of Angel One at the moment. Osho, I know you'll not be able to comment on an Angel One, but in terms of other broking companies, what are charts indicating?
Definitely for Angel One, I cannot have any kind of a view, but overall, I am expecting that the whole industry or the whole equity market has been impacted because of the last 6 months performance in the equity market and pressures seeing overall. But other companies like ICICI Securities has seen a decent consolidation and is hovering around the zone of 200-day simple moving average. So overall, the technical structure for ISEC is also looking very positive, and I expect that in the coming period, there is a possibility of revival in this counter. So overall, the whole space can see some kind of revival, specifically ICICI Securities. I'm expecting that it can see some kind of further consolidation around the zone of 800 to 790, while on the higher end, 840 to 50 is the immediate resistance, breaking which one can see a definite counter trend in this company.
Got it. Thank you, Osho and Astha, for joining us and helping our viewers understand better on the stocks we spoke about today. But with that, it's ended this edition of Profit Buzzers. Goodbye from me and Hiral and the ones who put the show together. But do stay tuned to NDTV Profit. Lots more lined up on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, we have seen some bit of volatility in trade. In fact, Nifty has changed direction nearly 4 times today in the first half of trade that we have seen, and currently it's up around 0.6% in trade.
Yeah, so let's just pull out the Nifty 50 chart instead and see what's been happening. While we are seeing another day of recovery, as Somit has mentioned, we've seen swings in terms of where the trading has been for the Nifty 50. Let's see the constituents which is leading to this kinds of gains that we're looking, some of the contributors. We have something like Reliance again bucking the trend. It's up in trade today. Axis Bank, HUL contributing positively in the green, while something like HDFC Bank and Trent, our Tech Mahindra is in pressure. Now do note that Trent yesterday had hit an intraday high of 6%, but after the revised toll count, the stock had ended 2% higher instead of the 6% gains that we'd seen. The stock is in pressure today as well. In fact, let's see where the breadth of the market is. So if you are looking at the advanced decline ratio to gauge the overall market breadth, we are looking at around 1,900 advances in comparison with around 300 declines. As the market majorly in favor of the green, it is seeing bouts of recovery as seen in the small cap and the mid cap indices since the last 3-4 sessions as we speak. In terms of where the Nifty Bank is, let's pull out that as well to see how Nifty Bank has been doing in trade. It's up over 0.17%, and largely in the last last 1 hour or so, it has remained on those similar levels as we speak. In terms of where the sectoral indices action is concerned, let's pull out the sectoral indices. Yesterday we saw that all the sectors had ended the session in green. Today we are seeing Nifty IT is the only session which is in the only sector which is in red, seeing cuts of around 0.18%, while we have something like Nifty Metals, which is a top gainer today as well. Even yesterday Nifty Metals was one of the top gainers. Nifty PSU Bank also up over 2%. Even yesterday it was clocking in those strong gains. Let's just pull out Nifty Metals, in fact, to see where the majority of this contribution is coming in from. We have Jindal Stainless, which is in focus. Ratnamani seeing gains of around 4%. Welspun Corporation remains is the stock which is buzzing in trade today as well, seeing gains of around 4%, while the only downtick that we are seeing is something like APL Apollo. So this is where the sectoral indices is concerned. Quickly pulling up where the broader market action is concerned, let's pull out the Nifty Mid Cap and Nifty Small Cap. So Nifty Mid Cap 0.7% higher, and Nifty Small Cap, if we can see that as well, 1.53% higher. So broader markets clearly outpacing the benchmark indices are there. So Somit, this is the overall, breadth that we are seeing in the markets today. Overall, it's a good session. The markets are in green, seeing signs of recovery as well.
Let's move focus to FADA. The FADA data has been come out for the month of February. We have Tushar joining us with more details on the same.
Good afternoon, guys. So what we are seeing right now is that the passenger vehicle sales have actually declined. The retail sales have declined by more than 10% in the month of February. Two-wheeler sales are also down exactly almost, it's red across all vehicle categories. Overall, the auto sales are down by about 7% during the month of February. Now, two factors that stand out in this month are, first, that the decline in urban areas is higher than the decline that was seen in rural areas. And secondly, the car inventory is still sticky at about 52 to 55 days of inventory, which means about 5.5 lakh cars or so are still languishing with dealerships. Now, this essentially shows that there is still a mismatch between how many vehicles car makers are shipping to dealerships and how many are actually getting registered or bought by buyers. FADA also pointed out that there is significant or visible softness in small car sales, whilst SUVs are still maintaining their volumes. Two-wheelers is also a concern because rural sales are down by 5.5%, while urban sales are down by a steep 7.5%. Still, the luxury segment is still holding up. We know for a fact that Royal Enfield sales are much higher, but the overall picture for the auto segment looks like that we are in a slow sales territory at this point of time.
Okay, well, thanks, Tushar, for all those details. But, let's introduce our guest for today who will be joining us and solving all our queries. Sneha Poddar, from Assistant Vice President of Research Analyst of MOFSL, joins us. Hi, Sneha. Welcome to the show. Firstly, what Tushar was speaking about is the FADA data of the February month, and it doesn't seem like a good picture for the auto companies which are there. He pointed out that there are some signs of slowdown. Want to understand your take on the same.
Okay, a very good afternoon and thanks for having me on the show. So basically what he mentioned is rightly correct, but there are few segments wherein we saw some positive data coming in. So basically the SUV segment did well, and even the tractor business saw recovery. So after a long time, the tractor segment has started recovering, and thus that reflected in the tractor players numbers, like for example M&M. So M&M benefited both on the SUV side as well as tractor side, and the positive recovery in case of tractor is likely to continue in FY26. So selectively one can look at auto segment. Moreover, in a quarter or two, ideally, the push that the government gave in the in case of consumption segment. So the higher income would in the hands of consumers would eventually lead to some recovery in few months down the line. So rural has started showing signs of recovery. It's the urban which is a pain point, so that there we might see recovery in a few months coming.
Right. Apart from that, it's the oil beneficiaries or oil stocks that remain in focus. Asian Paints, HPCL, all are up and trade, and this is largely because of the fact that Brent crude has dropped yesterday at around $68.3 per barrel, which is the lowest level that we have seen since December 2021. Now, if you look at the Brent crude prices, they have been down for the second consecutive month. In the month of February, it was down around 4.7%, and so far in March, it has declined more than 5% in trade. And from 2025 high, if you look at, prices are down nearly 17%. Now, why crude oil prices have been declining? Firstly, it was the rising dollar index, which had put pressure on the crude oil prices. Apart from that, it's the heightened global uncertainty owing to Trump tariff, which has also led to this drop in crude oil prices. Then the most important factor was the fact that OPEC Plus is looking to increase the crude oil production from April 2025 amid the demand slowdown that we are seeing in general. So these three factors have led to this sharp correction in crude oil prices. Now, how does India benefit out of this? Now, India will in general benefit given the fact that oil remains the key source of energy for the country. Nearly 85% of our crude requirement is imported into the country. Now, apart from this, if you look at the oil intensity or oil dependence or oil intensity on the GDP has actually come down for India. Back when we had crossed the $1 trillion mark, At that time, we used to import nearly 900 million barrels of crude, which formed around 8% of the GDP. And right now, when we have crossed the $3.5 trillion mark, we are importing close to 1.7 billion barrels of crude, which is just 4% of the GDP. However, it does benefit India given the fact that fuel has a direct weightage of nearly 4.4% in CPI and nearly 7.95% in the WPI, and every 10% drop in crude oil prices reduces the CPI and WPI number by nearly 40 to 80 basis points. Then comes the current account deficit. In current account deficit, if you look at total commodity, crude forms for nearly 61% of the total commodity imports and nearly 26.5% of the total imports that the country does, and every 10% decrease in crude oil prices lowers or narrows our current account deficit by nearly 30 basis points. And in general, whenever we have seen crude oil prices going down, we have seen a boost to the growth of the country because of the fact that inflation comes down, then there is loosening of financial conditions, and also robust business environment is something that we in general see which aids to growth. Now, if you focus on the companies that stand to benefit because of lower crude oil prices, first and front is the oil marketing companies. Now, in totality, if you look at the impact of lower crude oil prices on oil marketing companies is largely neutral, given the fact that there is a huge inventory loss possibility that could happen for oil marketing companies on the negative side, and on the positive side, lower crude oil prices means higher marketing margin, and every 0.5 rupees per litre increase in the marketing margin increases IOCL, HPCL and BPCL's EBITDA by around 7 to 11%. Then there are a host of sectors like paint, aviation, lubricant manufacturers, tire companies, cement companies and multiple specialty companies for whom if you look at crude oil prices, they form nearly 40 to 50% of the total raw material cost. So any drop in crude oil prices will definitely benefit their margins going forward. Lastly, on the negative side, oil explorers like ONGC, Oil India, Vedanta and HOEC stand to lose given the fact that crude oil is their key product, and whenever prices go down, the realizations for these companies come down, and it's majorly negative for ONGC and Oil India given the fact that they're the largest oil producers in the country, and every $5 per barrel drop in crude oil prices lowers ONGC and Oil India's EPS by around 7 to 12%. But do remember, this is the most important part here, that is to actually realize these benefits or for this losses to come in these companies, crude oil prices need to remain at the current levels. This short-term fluctuations will have no impact on any of the companies going forward. So we need to watch out for whether crude oil prices remain at the current level or not. And Sneha, coming to you, we are seeing a host of companies buzzing in trade on the back of this lower crude oil prices, be it HPCL, Asian Paints. Which stock or which sector stands out for you from crude beneficiary point of view?
Okay, from crude beneficiary point of view, I would say OMCs are the best bet to make. In case of paints and all, there are still a lot of weakness which is seen on the demand side. So though, like, the raw material cost will come down for the companies, but then still the demand weakness would continue to weigh on the stocks. So both the tire companies and the paint companies would continue. I mean, there might be some short-term positive impact, but then from the medium-term perspective, we don't really see much of a benefit on that side. But in case of OMCs, definitely their marketing margins will get a lot of boost. So we are quite positive. Yes, the inventory losses will increase, but then that would be largely, in fact, we believe that marketing profit would actually, substantially offset that. So OMCs will largely benefit because there's no as such price cut that we can expect in the near future.
You know what, I want to carry on with the whole Somit's discussion and even Sneha's point of view on the crude oil prices and see how one of the companies in the capital goods sector could be affected, and I'm talking about L&T here. Now, this I want to bring it up since, Saudi Arabia's Aramco reported its numbers and came out with its dividend guidance. So I'll just first of all highlight on how L&T derives some of its revenue from Saudi Arabia. So if we see Saudi Arabia, of that, L&T derives 33% of its order inflows from Middle East, which majorly constitutes from Saudi Arabia. In fact, if you look at the revenue contribution from that stands at about 18% in 2024 versus 8% in 2023. So total international business, they contribute about 50% of overall revenue to L&T. But now what the major concern is on L&T's order inflows coming from this country, considering that just Aramco announced a dividend cut impact. impact. And this was a dividend, their expected dividend now stands at about $85.4 billion in 2025 versus $124 billion last year. So it's a substantial cut that we are looking at. This they have attributed because of the fall in net profit of around 12% on the account of lower crude prices, along with some muted global demand concerns that they have cited out. So this loss of special dividend may impact the company's Saudi Arabia loss as well, that is projected at the range of $40 billion. In fact, if we see that considering this 40 billion loss that we are seeing on Arabia, there have been concerns that capex for Saudi Arabia would now be muted, considering that fiscal deficit, which was pegged at 2.8%, and this was with the levels of around $80 per barrel of oil prices in 2024. So if there was more drop, there was a more than 10% drop. Now the fiscal deficit is expected to expand up to 5%. So there have been concerns, and even though when asked to L&T about what these constraints could be on the order inflows of the company, they maintained that they continues to see good opportunities in this business from Saudi Arabia, especially in their petrochemical business and oil and gas segments. But however, do note that those times that crude oil prices were trading in the range of $80 per barrel, but since then we have seen more than a 10% drop, more than 12%. In fact, currently the crude oil prices are in the range of $69. So this could lead to some capex constraints from Saudi Arabia, which could in turn affect the L&T's revenues and L&T's order inflows coming in from this division. So Sneha, I want to take this up with you also. Do you feel that there are concerns from Saudi Arabia for L&T's orders?
There could be concern with regards to order inflow. I mean, that really time will tell exactly, like, till, how prolonged the weakness in the oil prices continue. But what I am looking at on the positive side is that though there might be some weakness on the international orders, but on the other hand, the domestic inflows is expected to pick up now. Last year it was completely muted, but now, post budget, the activity has picked up, and eventually it will gain momentum throughout the year. So that will provide the balance which is required, and order inflow will be supported now more from the domestic side. If export orders revive within 1 or 2 months, I mean, that will be an added advantage. But yes, at least this year the domestic orders will be there to support the growth for the company.
Right. The other stock that remains in focus in trade today is Credit Access Grameen. This stock is on the back of its loan asset, which has seen a healthy growth in most states bearing Karnataka. Harsh is joining us with more details on how Credit Access Grameen has performed.
Talking about Credit Access in focus because they've come out with an update in February earlier this morning, and what they've said is the portfolio at a gross level has grown by around 2.5% since the start of the quarter. What they've also said is Karnataka, the growth has been slightly sluggish in comparison to other places. Karnataka growth coming in at just 1% since the start of this quarter. So over the 2-month period ended February 2025. But most importantly, with regard to how the portfolio is performing from an asset quality perspective, in terms of the risk, portfolio at risk, that number has actually gone up when you're looking at it from the start of the quarter to the end of February. But here's where the element is. Karnataka was that element where, due to the revised regulation with regard to microfinance, you've seen Karnataka as a state perform very poorly at the start of February till the last week. So your portfolio at risk in Karnataka as a pocket has gone up, but outside of Karnataka has actually come down. So that's what's really positive in that sense, that credit costs likely will rise for maybe a quarter or two, but thereafter you're seeing light at the end of the tunnel. Also, your asset quality will likely start improving, maybe if not in this quarter, in the next quarter, and therefore you'll likely start to see some of the metrics improve, both with regard to growth as well as credit cost on the P&L, which is a positive where credit access is concerned. The situation even within Karnataka is expected to improve in the next 1 to 2 months, which is another key positive. Couple of these overhangs, once they start to go away, you'll start to see a bit of a re-rating among all microfinances, not just credit access, but credit access coming out with these numbers obviously gives good visibility.
Right, thank you Harsh for those details. Sneha, have you gone through the credit access update that has come in for the month of Feb? What's your view when it comes to credit access, Grameen and the entire MFI space? Any other stock in the MFI sector that looks much more attractive to you?
Okay. In case of credit access, I mean, the numbers are actually on a positive side. And even post Q3, if you heard the management commentary, they were the kind of outlook which the management gave was quite encouraging. And the numbers now which has come out, it further supports it. So the asset quality is actually expected to improve over next 2 quarters, and probably from second half we should actually see marked improvement in their overall performance, and this is actually backed by the strong capital position and the consistency which is there in the repayments that they receive from their customers. So we are quite positive on credit access, and in fact this is one of the strong names among the MFI segment. So I would suggest, yeah, from a long term perspective, we are actually positive on the company.
Okay, so positive view for credit access is what we are saying, but shifting focus, as copper futures gain, Hindustan Copper could be a potential beneficiary. Mika is here to explain and give us all the details on the same.
Yeah, well, Hindustan Copper has seen an intraday high of 5%. Today, it's up 8.5% in this past week. If you look at why, well, MCX copper future prices have gained. In the past week, they've gained 3%. In the past 1 month, they're up 11%. And in the past 1 year, they're up 20%. Now, the latest move, at least this week, is because of the China stimulus measures that have been announced. China is a leading, contributor when it comes to the outlook for base metals, and thus the country, announcing measures to, put stimulus in its economy would be positive for base metal prices because of its large consumer base in China. And generally, if the stimulus does come through, it's positive for both global metal demand as well as global prices. In terms of the impact on Hindustan Copper, well, higher copper prices have a direct impact on the company as it leads to higher realizations. And even in terms of the stock performance, if you look at historical data, Hindustan Copper share prices have usually tracked global coal price, global copper prices, and have gained when copper prices have gained.
Okay, well, thanks, Mika, for all those details. Sneha, coming to you now, after the China stimulus measures that we are seeing, Nifty Metal is one path which is in focus. I want to understand your view firstly on Hindustan Copper as well as some of the other names which you prefer in the metal space.
Okay, so I don't have a view on Hindustan Copper, but as it was rightly mentioned that the copper prices will have direct correlation with Hindustan Copper's revenue. So definitely the company will benefit. And this recovery has come after a very long time. There has been a sharp fall that we've witnessed over last few months in metal prices. So this recovery is definitely positive for these companies. The question is still how long do they sustain? Ideally, given the kind of stimulus that the China is announcing, the prices should sustain. And thus in fact, not only Hindustan Copper, but actually the majority of the metal companies would benefit. So like, for example, if we talk about Vedanta, Vedanta has multiple metals in its product portfolio, and it should benefit both from the rising the aluminium and the zinc prices, and also it will benefit. It has some portion of copper, so even the rising copper prices will benefit this company. So one can look at Vedanta, or one can also look at Tata Steel, which is a good play on the steel prices, and steel prices from here is expected to rise. So basically, these companies will benefit from the rising prices as well as the demand, the domestic demand, which is expected to improve with the rise in the overall capex.
Right. Another stock that remains in focus is Castrol. Now, the stock has been buzzing on the back of the fact that there has been Bloomberg report which says that Saudi Aramco is considering bidding for British Petroleum's Castrol lubricant business. Now, this deal obviously will happen at the global level, but there will be implications on the Indian unit as well, because if there's a change in hand in the global level, there could be an open offer that could come in for Castrol India as well. Now, Aramco aims to combine the Castrol's asset with its Valvoline unit, and which they had bought back in 2023 for around $2.65 billion US dollars. Aramco is especially interested in Castrol's India operations, so that again could be a positive for the Indian unit, because this is after a very long time we'll be seeing some deal happening in this lubricant business, and this deal, if at all it goes through, could also set as a benchmark for the valuations that we could assign going forward for the lubricant companies. Now, the report also says that British Petroleum is reviewing Castrol as part of its restructuring, and Castrol's valuation, that is the global valuation, is expected to be around $10 billion US dollars. So that's a big deal happening at the global level, and do watch out for Castrol India in trade as well on the back of this news. Sneha, any view on Castrol or Gulf Oil, only two companies in the lubricant space, and we haven't seen any big deal happening in this lubricant manufacturing space for a very long time now. With Aramco's interest back in Castrol, do you see a re-rating that could happen?
Yes, definitely. We are expecting a re-rating in this segment. In fact, even the post Q3 numbers, our view turned quite positive on the company, because after a very long time that we saw the management coming out with a very bold guidance, and especially post the management change that we've seen in the company. There has been a strategic, shift in the overall thought process, and the management sounded quite positive on the overall lubricant business and the volume growth going ahead. So already Castrol is a very strong brand name, and they are expanding their distribution reach rapidly. So with the new product launches, and with the wide network that they have, and the market leadership that they enjoy, they can definitely revive the overall growth. So and if this if this deal goes through, then it will definitely have a positive rub through for the entire sector. So yes, we are quite positive on Castrol.
Thank you, Sneha, for sharing all those views with us. But with that, it's time that we end this edition of Profit Top Trade. Stay tuned for India Market Close coming up next.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, and we take you through the last hour and a half of trade today. It's another very interesting day of trade. We're sitting at the top in terms of the intraday, and 22,500 breached, and that's what's really standing out today in terms of what's playing out. Let's look at the heat map on the Nifty. Metal is really standing out as well. Again, second straight day. You look at some of those names, Tata Steel, Coal India, Hindalco, all of those doing very well for themselves. Another one, Asian Paints, up 5% in trade. You have the likes of a BPCL up 4% odd, and then some of the other names are starting to catch up, but it's quite a bit of green on the screen, and that's what's again really standing out. Second straight day where we've seen that. Tech Mahindra languishing a bit, and some underperformers within the heavyweight banking space, HDFC, Kotak there. But outside of that, there's plenty of green on the screen to cheer about. Let's look at the advanced decline as well, and quickly take a glance at the breadth, well, second straight day where the breadth has been extremely favorable. And that is what is again standing out in trade today. Sectors, before I hand it over to Neeraj to kind of give us a lowdown on how the mid cap and small cap indices are doing. Look at the Nifty metal today, 3% higher, some real shine coming in. Oil and gas also doing well for itself, 2.5% higher. The energy index obviously on the back of that doing well. But the Nifty Pharma is the other one which is standing out. Again, a second straight day where the Nifty Bank and Private Bank are underperforming not only the index but also the broader markets. But Neeraj, just look at that green on the screen. It's great and it's heartening to see a second straight day of that green.
Yep, 1.73% higher for the small caps, and a clutch of names out there from the oil and gas space to otherwise doing very well for themselves. So Chennai Petro and Castrol, you can argue, okay, there are beneficiaries and doing well. Refineries like MRPL are doing well. Credit Access Grameen, because of that update, is doing okay. But there are others. Maybe Amber Enterprises and this whole thing around the shortage of air conditioners might be playing in. Amber Enterprises is doing very well for itself too. There's strength in Vijaya Diagnostic yet again, and some pretty positive commentary from Metropolis to us earlier today. So maybe the diagnostic space per se looking okay. What's not doing well? Precious little, to be honest. Kalyan Jewellers continues to grind lower. Aditya Birla Estate, Real Estate, after a very strong show the previous few, yesterday or day before, is correcting a little bit in trade. So slightly wobbly there. And names like JSW Energy, which are also correcting a bit in trade, kind of stood out for me. Anand Rathi marginally stood out for me as well in terms of the losers. And Trent, lastly, 1.6% lower at 5,023. Okay, let's get in our expert to try and understand. We actually, because we climbed some key levels, I think a lot of focus today on technicals. So we start off with Kush Bora. In a bit, we'll get in Manav Chopra, who's written us a note. He's from Nuama to top. He will also get in Anu Jain to try and understand how is she looking at things. But Kush, to you first. Thank you for taking the time out. So Kush, the zone that you had pointed out, 21,500 to 22,500, we've now eclipsed the upper end of that zone. Is this a bullish sign, or are you now waiting and cautiously watching?
Hi, Neeraj. Always pleasure to be here. First, very good afternoon. No. The time for waiting is over. You go out and buy. The first level that we spoke of on the way up yesterday was 22,500, where there was a gap to be filled. That's being done today. The intraday dip that we saw. I spoke with Alex also, during the midday Ask Profit show, where that was probably more of a weekly expiry rollover playing out, and we're back to the winning ways that we've seen over the last 2.5 days. So that first gap is filled at 22,500. 22,800 is the next level. Close to that is also the 20-day moving average for the Nifty. I think once that is taken out, you're looking at higher levels also. So we've seen quite a bit of a fall. Even if the Nifty rebounds and moves another 1,000 points from here, it will not be a surprise, and we might still not be entirely out of the woods even then. But I think at the moment, the kind of setup that we are seeing and the kind of strength, more importantly, than that the broader markets are witnessing, does make a case for a positional trade on Nifty and in fact on Bank Nifty as well.
Kush, what's the probability that this is a dead cat bounce and just sucking people in and investors in? Is that at all, in your view, a possibility?
Possibility for sure, because bottoms and tops are only known in hindsight, aren't they, Harsh? So once we're out of the woods completely, will we know that, oh yes, that was an opportunity miss? My optimism stems from the fact that the risk reward ratio at 22,000, perhaps even at 22,500, is rather favorable. I mean, you never know how low can the markets go, but given my base case scenario of 21,500 as the lower end of the band, there isn't too much of a downside left, and on the upside you've got now we've got at least 26,000 as the first mountain to summit before we make new highs. It might not happen immediately or in a V-shaped manner, but at least we know that the risk reward ratio starts to become very favorable around those levels. So even if this is a dead cat bounce, I think another 500,000 points from here, and then the Nifty might or the stock might start rebounding from those levels. So I am actually starting to look for some signs where this might just be a reversal trade and not just a rebound trade. There are early indications for that as well, but as I said, a little too early to stick my neck out and say that the worst is done and dusted. But as I said, still looking at this with a very optimistic lens, and buying from these levels definitely makes a lot of sense, as we've been discussing for the last week or so.
Interesting. Kush, your quick calls for this afternoon.
Again, both of them on the long side, as has been the case for the last couple of days. Chambal Fertilizer, the stock is doing rather well, has been doing well for some time now. Made a good base around the 535 level and rebounded smartly, from those levels. The volumes are also up on the days when the stock is held higher. So 590, 600 are your targets from the near-term perspective. 570 is where you place that stop loss. The second stock is SCBL. A little soft today, about 0.5% down, but I wouldn't read too much into it just yet. For the last three sessions, the stock's been up. You've had a golden crossover of the 20 and the 200-day moving average. The volume action has picked up. So I think from a near-term perspective, you're looking at targets of 122, 126, stop loss being around the 115 mark.
Okay, so those are some stocks as well as the call with regard to the index. But switching focus, Castrol India, what a phenomenal run the stock is having in trade today. Look at that, 12.5, nearly 12.5% now higher. There's buzz of Saudi Aramco weighing bids for lubricant assets, and Castrol in focus on the back of that. Mihika joins us to tell us more and what this could mean. Mihika.
We've seen a strong jump in Castrol today, and that's why it's the stock of the day. And this was mainly after a Bloomberg report that stated that Saudi Aramco is considering bidding for BP's Castrol lubricant business. Now, Aramco aims to combine Castrol's assets with its Valvoline unit, and this was a unit that Aramco bought for $2.65 billion back in 2023. And Aramco is especially interested in Castrol's India operations. BP is reviewing Castrol as a part of a restructuring is also what's stated. And if you look at Castrol's valuation, it's estimated at around $10 billion. Lastly, discussions are still in early stages and Aramco's bid is not finalized, and reports are also stating that there are other potential bidders which are also interested in Castrol.
Okay, thanks for that, Mihika. But Kush, your quick take with regard to Castrol on charts. I mean, stock on a tear. What part of the trade do you now sit on, given the kind of move it's made?
Can I say I told you so?
Absolutely.
Castrol Hirsch, if you remember, on 4th, which is about 2 days ago, on the closing show, was our BTSC trade for targets of 229, 236. I don't have regrets, but the smallest bit, if I can call it one, is that perhaps I underestimated the target on this one. A very good move, and it was in the cards. At least the data was showing that. We did speak about it crossing over the 200 moving average and holding ground. Now, my suggestion would be to book partially, because it's the kind of move that it has made over the last 2 to 3 sessions, but hold on to the rest of it. The stock is approaching oversold territories on the back of moves that it's made today. But we know that those things can extend given the momentum. So on the way up, perhaps even a 260, 265 kind of a move is also likely. But keep a trailing stop loss around the 240 mark. Whatever positions you've got, not a bad idea to book some money and take home profits, especially in a market like this. So book 50%, hold the rest.
Kush, Reliance has probably just started a move. What would you do here?
So, Neeraj, this is a curious case because I've been bullish on Reliance for a while now. It's just that on the price action front, it's continued to disappoint. Now, while I am looking for signs of positive divergences, volume-backed breakouts, there hasn't really been one. So for now, while from a positional standpoint, I still remain bullish on Reliance. From a momentum perspective, I would perhaps wait up a little. 1220 is the level to cross. Once that happens, you could consider this for a short term as well. And by short term for Reliance, I mean 3 months or so. But if you've got a view of anywhere from 9 to 12 months, these levels might just turn out to be a very attractive levels to start buying. As I said, momentum is missing. I'd wait for some key levels to cross before that happens. But from 12-month kind of a horizon, not a bad idea to start accumulating at these levels. Or maybe if you've already got some, not a bad idea to average out as well.
Okay, stay on, Kush. So much more to talk about. For people who are thinking of what to add, right? Brokerages are obliging. So MK, for example, in note, have given two scenarios of growth at reasonable price and quality at reasonable price. And they've used certain screeners when it comes to both. So when it comes to growth at reasonable price, here's one of the screeners. FY26 EPS growth has to be greater than the FY25 EPS growth. That's the first thing that they are saying. Then they are saying that the 1 year forward PE ratio should be at a discount to the 5-year averages. So that's part two. The stock should have corrected over 35% from its 52-week highs. Doesn't include today's move, of course. And FY26 ROE should be greater than 15%. Now, 4 stocks which meet these criteria are Motherson Sumi Wiring, Adani Green Energy, JK Tyre, and Bikaji Foods. If you like these criteria, then within the MK universe, those names were there. But they've also done quality at reasonable price screening criteria, and 4 or 5 out there. So operating cash flow to EBITDA for FY26 greater than FY23 to 25 average. That was the first one. There are multiple others. Positive free cash flow in either FY25 or 26, as well as if you look at FY23 to 27 ROC consistently above 10%. And then some more, including the fact that it should have gone, or it should have also corrected 35% from its highs. And on those criteria, the 4 stocks that meet the bill for MK are Motherson Sumi Wiring again, JK Tyre again, but the 2 new ones are Colgate Palmolive and Kajaria. So when you look at both quality and growth at reasonable price, according to MK, Motherson Sumi Wiring and JK Tyre might be the 2 stocks that fit the bill. But I tell you what, these are, I'm not saying these are seismic changes, but after a really brutal corrective move in the Indian markets, it's important to take stock of what people who look at slightly longer term charts per se as well, on the institutional side, are thinking about. And Anu Jain, President Equity Advisory, NDPMS 361 Wealth, joins us right now on the show. Anu, great having you. Thanks for taking the time out and speaking with us. Couple of days ahead, Anu, but happy Women's Day to you and hope it's a wonderful one.
Thank you so much. And it's a pleasure to join.
Thank you. So, I mean, not just charts. I know you look at multiple things. I would love to know, how have you thought about the corrective move thus far and the uptick that we've seen in the last couple of days? Is the trend changing, or is this maybe a dead cat bounce?
The fact remains that you've fallen on the Nifty about, right from the 26,000 plus to about 22,000. And the last 1,000 points was pretty brutal. I mean, it didn't give you even one pullback. So what you're seeing right now is a relief rally. Now, the relief rally can actually establish a trading range for the next month, month and a half, till your next quarter results come in, which would be closer to 15th of April. Now, the fact that what we were really looking at and we were having our eyes on was on liquidity, given the fact that advanced tax and liquidity sucking happens around the 15th of March. With government and RBI having made that thing that there is money going to be there in the system, want to see how people handle the 31st March, handle results which start coming from 15th of, the early April to mid-May. So I think what you're in for is a 1.5 month of a very crucial period, which is difficult to predict. But if I were to put a finger that what is the high probability, I think there will be a trading range established between, say, 22,000 to 23,200. Market should move in the 1,000-1,200 point range, given that it's once formed a bottom and bounced from there. For it to break 22,000 now, it would need either bad results or something globally again going, haywire. So yes, it is a difficult 4 to 6 weeks, but I think now we've seen one base, so I would call this a pullback rally.
Anu, hi, this is Harsh joining in. Want your take with regard to some names which have outperformed as part of the last 4 to 5 months of pain that we've seen. And a few of them straight up from the Nifty 50 space. You have a Bajaj Finance, you have Kotak, you have HDFC. What next for some of these? Because, of course, Bajaj has moved, but Kotak and HDFC just haven't. So, want your sense on where do some of these go?
So caveat, some of these are in our client portfolios and in our personal portfolios also. I think banking and financials as such has underperformed with the first interest cut and the liquidity. I think NBFCs will definitely benefit from it. And that goes across board. It doesn't go just to Bajaj, but to the entire pack. And I think that will be a positive for them. On the banking side, whether it is HDFC, whether it is Kotak, they are coming out of a lean period, out of which Kotak is coming out from a much more leaner period than what HDFC is coming out. But I would still say that there are other banks which look technically at least sounder, even fundamentally giving better returns, better margins for the next 2 quarters. So I would probably say ICICI looks better. I am not trying to say you should sell HDFC if you're holding it. I think it will give you a good 16-17% CAGR for the next 3 years. But if I was looking for a winner out there in the large cap banking, I think it would be ICICI Bank.
Point taken, Anu. And, you spoke about how and come back to markets and to the larger market. You spoke about how you expect the Nifty to be in a range of 22 and 23,200, 22K and 23,200. What, therefore, would your strategy be? What are you advising clients at this point? Wait again for a bit of a correction, or do you go out and buy at this point?
See, the whole point right now is all this is decided basis your risk parameters. Their clients are ready to buy even now, and their clients are saying, no, this is not the end. So the strategy is always client specific and how comfortable they are to handle the market risk, because we know it's going to be a volatile market. For all you know, Harsh, this market will continue like this till the end of the year. There is a good 10-20% chance that the volatility which has started now will continue to September. So it is a period where comfort level, if a person can sleep through the night without getting worried about his portfolio, that's the strategy he or she should be taking. So we are ready to deploy fresh funds for clients, but we are triggering it or tranching it out depending on their risk profiles. If they are medium risk, we'll do it till September. If they are high risk, we'll do it in the next 2-3 months. And if they are really conservative, we'll probably do it till December. So we do have, our picks which have been identified. Each client portfolio is being looked at separately, and decisions are being made accordingly.
Anu, just wondering, for somebody who is not risk averse, and this market has plenty of those, so of course to each their own, and they might get crucified as well later on if the market were to pull back. But for somebody who is not risk averse, are small cap names coming into the picture at all? Because I mean, you don't need the index to be very cheap for finding reasonably priced stocks in such a large universe, right? So for the risk-taking investor client, are small caps featuring in the list, or are you only sticking to large caps?
So we're looking at stocks bottom up. We're not looking at whether they are a large cap or a mid cap. So we have decided on a basket of stocks that we like, and then depending, it's like we offer the buffet to the client. Then they choose what suits their risk ability.
I'm guessing you are not in a position to talk about some of the broader market names, or are you? You're not.
No.
Okay, fair call. Let me try and change the tact of the question, Anu. Some of the themes which have fallen quite a bit, are you liking any of those? And one of them which stands out for me at least was EMS, right? Because that's a sector that came out with high growth promise even after Q3. Valuations maybe still a bit stretched, but growth promise out there. So without getting into a specific name, but are the Dixons, Ambers of the world or the Keynes Techs of the world a preference list or no?
We've been holding some of these names, and we had taken in some cases 75% off, in some cases 50% off, but we are holding the balance. We've not yet come to a point that we're comfortable adding to them now, but what we're holding, we're not giving up. I think, given that they're still not really cheap, and this is, at least I cannot make a decision that, while I understand that the growths were good, and whether you look at most of the numbers for last quarter, there was a slowing of growth, or there was a postponement of, result was like they said that it would kind of get 6 months delayed or 9 months delayed. So that would have to be seen in this quarter, how the quarter pans out, how much do they deliver versus what they have said. I think there is still some downside left, but we've seen whether, as you were taking the names, whether it's Dixon, whether it's Keynes, most of them have found first level of support. Now, depending on how this quarter results would be, it would then be wise to take a decision whether you want to add it even 5% higher or 10% higher, because the fact remains that if they've all fallen more than 30%. So even if you lose 10% of the rally and it's a 3-year stock, then it doesn't matter. But I think these are still at a point that if the market gives up again, or if they don't deliver this quarter, you can easily see another 10 to 15% fall from here also.
Right. Okay, Anu, one final question. The dollar index, for a lot of people, that will be a key determinant of what happens in the near term. Any thoughts there?
So if somebody had told me 2 months, 3 months ago, that you'll see the dollar index back at 104, I would have expected us to be at least 23,500, 24,000. The fact remains that whenever the dollar index comes out, money moves to the emerging markets. What you're seeing this time is money is moving out, but it's moving to, people are moving out from emerging market ETFs, indices, to just a pure China play. And in that process, we are still seeing outflows. So while I believe this is positive money going to emerging markets, I don't think for the next 1 or 2 months we're getting any share of it. So it will, again, as I said, we got that multiple or that premium because of our growth, which has slowed down in the last 2 quarters. We have to prove our worth by proving that we are growing faster. Else we will not get the flows for at least a quarter or so.
Okay, point well noted. Anu, thank you so much for joining in and giving us those thoughts. Really appreciate your time this afternoon.
Thank you. Bye-bye.
That's Anu Jain with her thoughts. DXY notwithstanding, flows may be a factor of growth. It's something that Rhythm Desai mentioned, that it's a question of growth, and if growth comes back, things may just turn. I wonder, Harsh, what will happen if indeed the bullish estimates on Q4 growth turn out to be true?
Well, yes, if that were to happen, and the dollar index stays where it is, basis whatever Anu is saying, looks like a decently bluing sky from all the grey clouds that we've seen over the last month or so. Kush, just very quickly, while we have you, I wanted your view with regard to an Ujjivan. What's happening there? Stock suddenly zooming 6% higher. Over the last maybe 15-20 minutes, we're seeing that kind of rally. Give us perspective.
Again, at the moment, I wouldn't read too much into it. The stock has a tendency of getting sold off and then rebounding to the 20 and the 50-day moving average. But the hurdle remains crossing that and sustaining. So while there was a base formation around the 31.50 mark, 31.40 thereabouts, this move, even though slightly volume back, might just fizzle out around this 34.50 level. Any close above the 35 mark will actually put it in a slightly different zone where the stock could turn a tide and move higher. If that were to happen, then my first target on the upside would be 37.50 and then 40 where the 200-day moving average resides. So I would still give it a day, given that the stock has seen a very long protruded kind of a fall. I am not reading too much into it, in the move that it's showing today. As I said, closing above 35 might make for a momentum play in the near term. Up until then, just book partially if you've got anything.
And what should you make on Coal India? I wonder, Kush, what's the sense like at this point? Because lots of views and lots of queries with regard to this one. What should you do from a technical perspective?
Yeah, this is different. This is where you could very well consider a long position, because the stock started to form a base long before the markets did. Even before the markets took that 22,000 support, the stock was actually trying to find its feet. Any volatility was only in line with the markets, but up until then the stock had actually started to see an up move. Now what we are seeing in the last 2 to 3 sessions is that base formation turning into a positional long trade. Even in the recent couple of days, if you see, including today, the stock crossed above its 20 and the 50-day moving average together. In all likelihood, might just close above that. So this is turning out to be a good risk reward long trade, where on the downside you've got support those around the 350, 360 mark. So that should act as your stop loss. On the upside, you're looking at targets of 410 once that is taken out, perhaps even a 435. So this is turning out to be a good base formation, and then a jump from there on. So more constructive on Coal India.
And in that sense, Neeraj, keeping a lid with regard to where oil price is concerned is rather leading to a good amount of traction in some of the oil specific names. Look at all the paint stocks that are buzzing today. Berger, Asian Paints is the top gainer on the Nifty, but outside of that, I'm sure that the other ones are also buzzing. Also, let's look at an Indigo. So some of those stocks also to be kept on your radar. Some good buzzers in that space, and long time coming. There's been plenty of pain in that space.
Yeah, pain in paints, but that seemed to be turning, and which is a good thing. But yeah, Asian, Berger, etc. Asian is 4.5% higher, and gave all the time in the morning for people who might not be too risk averse to trade if they wanted to. So that's very interesting. Okay, and then do we have Tushar now? I'd love to go to Tushar because it's a very interesting update from Tesla, and we are now learning that from CRE Matrix that if Apple may not be happy with Elon Musk's car company opening a shop right next to them, I believe. Tushar is here with more. Tushar.
Good afternoon, Neeraj. So yes, Apple is getting an unwanted neighbor in Tesla in Mumbai's BKC. Now, why do I say it? Because a couple of years ago, or actually 4 years ago in 2021, when Apple signed its lease for the BKC store, it mentioned Tesla as one of the 20 brands that it does not want in its vicinity in Geo World Drive, where the Apple BKC store came up. But now we know that Tesla has leased a 4,000 square feet ground floor space in Maker Maxcity building, which is next door to Geo World Drive. Now, the gap between these two locations is about 120 to 200 meters. So essentially, a very interesting tidbit that has emerged is that these two big US brands will eventually be neighbors, maybe not much, maybe unwanted in Apple's context.
Okay, thanks for that, Tushar. Yeah, I mean, it's great perspective. At least I wasn't aware of the fact that there was a clause installed in that Apple agreement that Tesla should not be a neighbor to Apple. So yeah, that's an interesting nugget. Thanks, Tushar, for that. But Kush, we were just talking about paint stocks before you went to Tushar. Just your quick take with regard to something like an Asian Paints, because the entire space has been in pain. Now do you think that there is scope for a bounce back? Because very small positive on the fundamental side has led to the move today. So I want to understand from a technical perspective, what are your views on this one? What are you seeing?
So I'm not reading too much into the moves that Asian Paints has made today. I'm not reading too much into what Indigo Paints is doing today. But one stock that has actually done well and was on our list for some time, didn't just turn into a call, was actually Berger Paint. Now, if you see the gains that the stock has made over this year calendar to date, that's actually quite encouraging, about 15 odd percent, if not more. So that's the kind of move that the stock was already witnessing. Agnostic of what the market is doing, the stock continued to gain traction. So if anyone is interested in the paint space per se, that's the one that this is one stock that you should have on your radar. Now the stop loss for this one comes in at 480. There's this 200-day moving average resistance around the 520 mark, but I'll take it with the kind of moves that it's already made. And once you cross that, then 545 is the next level to watch for. So again, as I said, not reading too much into the day's move, but if you see the trend over the last couple of months, then Berger Paint stands out.
Okay, very interesting. So those are some thoughts with regard to paints. Of course, the 12-month chart in front of you, and from those highs, stocks have really taken a bit of a beating. But we'll slip into a break. But before that, just want to quickly highlight a conversation which my colleague Sesha had with Birla Opus. In fact, spoke with the management about how the company's demand has been over the last 6 to 8 months and their plans for the second half of FY26, in fact. So listen in to a slice of that conversation.
So the demand for paints, as we have seen and talked about in the last 6 to 8 months also has been relatively slow. So we can see that what we hear is the general slowdown in the consumer industry. The building material, the paint industry has also been through that. But maybe with the start of the new calendar year, things we hope that should look better. But whether it will look better very soon or whether it will take some more time is for us to see.
So by the start of the new calendar year, as in you're talking about the next year?
No, January, February. So, we are hoping that with the new calendar year starting, people do more painting jobs, take more resolutions and the business works up.
All right. So maybe is it fair to assume that the second part of the next fiscal might look better?
So we hope so, but I think we'll have to wait for some real trends to come for us to make a more strong comment on that.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Welcome back. Thanks for staying with us. Now, as we do every day, Somit gets us all the dealing room chatter. Somit, coming straight to you with regard to what you're hearing from dealing room.
Well, the first stock on the list is TCS. Now, this stock stands out among the large cap IT companies. IT index is down in trade, but this stock has been gaining. It's also trading around its crucial support level of around 3,600 rupees. And what I'm understanding is there are strong buy flows on the FI desk when it comes to TCS. The second stock on the list is Lloyd Metals. Large HNIs have been actively accumulating this counter in trade today. What I'm picking up from dealers is that there's a possibility that the company might explore a fundraise option in the next quarter. And another big trigger for the company is the big mining capacity expansion that is also expected to come in the next quarter for Lloyd Metals. Third stock on the list is BAC. Now, what I understand is that domestic mutual funds and some large HNI investors have been actively buying this counter at lower levels. They're not expecting much of an impact to come in because of the date change of expiry done by NSE, and there could be some positive triggers that could come in for BAC going forward. That is what the dealers are indicating. And the last stock that we are focusing on is Nykaa. Now, large HNIs have been buying this counter in trade today. What dealers are suggesting is that there's a possibility that a big brokerage upgrade could come in for Nykaa later, and that could be from an MNC brokerage. So on the back of this upgrade in rating, Nykaa is a stock that we need to keep an eye out for.
Very interesting. Okay, and Somit, the others which you mentioned, they are also seeing some flows. I mean, I heard you speak about flows when it comes to the first and the fourth stock, which is Nykaa, but the others, wherein Lloyds, when there might be some activity expected, are there flows in the dealing rooms for the same?
Well, yes, there are selective buy flows that are coming in. Domestic investors are obviously, there are buy flows, but FIs have started selectively buying in multiple counters is what I'm understanding.
Okay, just when Somit spoke about this, there's a big spike that has come about in Lloyds Metal. So, watch out, 8% higher and counting for this one. Thanks for that, Somit. And which on cue takes us to our next conversation, because our next guest who's joining in looks at charts very closely, but looks at intermarket linkages, looks at charts for currencies as well as commodities, and therefore it's an absolute delight to talk to Manav Chopra, Director of Technical at Nuvama Institutional Equities. Manav, great having you. Thanks so much for taking the time out.
Thank you.
Now, Manav, you somewhere around mid-Feb, end Feb, you brought out this possibility that this brutal sell-off might be at some point of time coming to an end. Now, we've seen a bit of a bounce from 22,000. We kind of defended that strongly. Right. Is this the bounce?
I would say, the markets right now, since last couple of weeks entered into the final capitulation stage. That's one very key criteria to understand. Markets usually don't bottom at certain giveaway or the support levels. They usually see a throw off. The market sentiment comes to the extreme, and there are multiple sentiment indicators that we have embedded in our systems, which have called for historical low sentiments that the markets have recently validated them. Give you an example like Nifty 500, 86% of stocks were below 200-day average, which is a very rare thing. 92% within Nifty 500 were below 50-day average. These are some historical low events which has played out in recent sessions. 17 consecutive sessions of Nifty 50. The index was below 5-day average. This is the 17th. So these are some very extreme scenarios which have played, which has further validated that this is not only the capitulation but coming at the fag end stage. So the point is, whether are we bottoming at 22,000? I think a probability of few percent here or there is there, but what important is that, are we in a bear market, or is this the intermediate correction in the larger bull market? So for me, we witnessed an extended intermarket, the correction phase in the larger bull market. For my sense is that we have entered not only into the intermediate deployment zone, but also into the long-term deployment zone. We are strongly calling for a deployment into the large caps and select high beta names going forward for the clients. And our base case is that, basis on the capitulation data that we've derived, the index should see a rally of 14% in next 2 to 3 months. I'm talking of the Nifty 50, which would give us an upside of 25,000 to 25,300. And historically, as per our backtest data, in last 3 months, we haven't received any negative returns. So, coming into that scenario, it's definitely a very high probable deployment zone for us. And that's what we are going very aggressive with the clients for aggressive deployment at these levels. And going forward in the next couple of months, you will definitely see very strong rally to emerge, mainly led by the frontline names and some pockets of high beta. Important to note is that even at these levels, there are very extreme shorts. And in the last few sessions, despite of this pullback, the shorts have not yet been squeezed off. I think there'll be a little bit of wall of worry that the markets will carry forward. But as the market takes on a strong breath, I think you'll be seeing a snap of a move on the upside.
Okay. So, Manav, I have a follow-up here. And we'll come to the Nifty levels and, maybe those pockets as well. But what is leading to this is because today, for example, there's a confluence of factors which is doing this magic, right? DXY sub 105, right. Oil below 70.
Yes.
Fundamentally, the RBI has made some liquidity moves as well, which is a big shot in the arm. So is this global in nature and are there intermarket linkages? Or is this very India specific?
I think to our luck, a lot of things have also come together in a confluence. The Indian markets have witnessed the decline not because of any global meltdown as such, but largely because of shift from emerging markets to the developed markets, because of the US rally, the dollar index getting stronger, the rupee getting weak, all that parameters played for us. But what currently has happened and what we are calling is that dollar has topped out. And eventually we will be seeing a shift on the lower side on the next coming few months would be like 102 and the upside of 107. So which is a very comforting zone for us. Not only that, with the decline in dollar index, even the US 10-year yields has softened a bit, which further adds to more comforting factors for the EMs to come in. So I think with a very strong outperformance that the US has already played out, I think in next few weeks or months, you will be seeing a shift of developed markets with mainly the funds coming from the US markets getting into the EMs. When we are also looking at the MSCI Emerging Market Index, that has already given a breakout. Obviously, there might be some direct flows which might impact China over India, which could be a possibility. But the passive flows that will come to India, which has been the biggest worry of FIs, outflows, relentless money going out of India, I think that will eventually start to cool off and come in us in the direct way. So my base case is that the dollar has topped out. You will be seeing levels of 102 on the lower side going forward. And this time around the Euro USD, I think in the past, whenever you see the Euro USD moving, and right now, after, October 22, this is the first time that the Euro USD has seen a very, very strong surge. I think these global macro factors with the crude is going to act as a very sweet element for the Indian markets in general, and in commodities, energies as a cycle as a whole.
So let's talk about how do you play this, right? 14% in 3 months is a big call. So how do you play this, Manav? You've suggested large cap, you've suggested high beta, but are there pockets which you like and are there pockets which you'll stay away from?
Fair. So currently we have taken a big call on metal as a sector. We've called it as the hidden gem of 2025. And if you ask me, this is the call that we have initiated already. I think in the absolute basis, the index has just rallied 5%. But what are we looking into it? We are looking for the commodity cycles to come back with the emerging, especially we've seen historically whenever the dollar index is below a certain level, the commodities usually come up well. There is no concern in the larger time frame for the dollar index in general. Emerging, also like I discussed about the MSCI emerging market, this angle is quite favorable for the commodities. Specifically, the another aspect of metal sector, it's one of the most under-owned sector when you look at Nifty 500 versus the long-only ownerships. Okay, so long-only ownership is very subdued and FIs has very minimal ownership in that. The recent decline we witnessed in the high beta was in real estate, cap goods, infra because of heavy ownership. So this sector itself is very under-owned, and the kind of tailwinds that we are seeing on the macro front which is coming in, I think it will just act as a very strong chase coming from the metals, which we have actually seen in last few sessions. But largely speaking, I think this is just the first stage of the larger setup that we are looking into it. I have given a base case of 30% upside on the metal index, but very much likely I will not be surprised to see that if the sector front we are seeing a 30% move, the stock specifics can be anywhere between 40-50%. My top bets is Tata Steel, Hindalco, followed by SAIL, NMDC, but largely very, very constructive and bullish on the metals as a space.
30% for the index.
Yes.
This is over the calendar year 25, you reckon?
Absolutely. And in the past, whenever this sector moves, the first leg is always a very snap fast move. Don't be surprised to see if there is like a 20% in next 1 month or so.
Wow.
That is amazing. But typically, Manav, when you see the metal sector moving that way, there are China triggers involved. Yeah. What are those that you will be looking out for, or what are those that our viewers, investors should look out for? Because likely will that be the trigger? Is that something that?
I think the market has its own sense. When I'm looking at the dollar index, besides that, when we look at the international aluminum charts, or we look at the copper, copper has actually recently witnessed a fresh breakout of its important weekly resistance level, and this time the breakout is not coming because of supply constraint, because of demand renewal, right? And also when we are looking at the chart of iron ore, which is roughly also consolidating at the level. So when all these parameters also sees a shift of another 10%, I think as a whole you will see a lot of fuel coming back in, and which will be very supportive for the metals as general.
And last quick question with regard to BFSI, because that also features on your overweight list. Yes. And it's already done a fair bit of outperformance versus the index itself. You have some heavyweights which have done that. Bajaj Finance, what a stark outperformance that it's had over the last 3 to 4 months. Kotak HDFC also holding solid. So within BFSI, is there a preference there, and why BFSI? What will the triggers be?
Fair. I think like I said, there'll be another understanding to it. When we look at, if I take you back just a few years back in the BFSI, I think largely 2022 and 23, FIs have been the net sellers of BFSI in general. Okay, and it's reasonably underowned when we've seen this volatility space play out. Secondly, we have seen a very strong leadership coming into BFSI in last few weeks, and more so in a lot of underowned names, like namely like Kotak, your BAF, Bajaj Finance, and some certain pockets of private banks which have done very well. Recently, HDFC Bank and ICICI. I think going forward, BFSI will be the leader, which will be taking the markets higher. It has seen a good outperformance, but I think financial as an index, if the Nifty is moving towards sub 25,000, it will need support from the other sectors. But BFSI is the space which will cap your lower side, but give you that kind of a support going forward in the near term.
Nifty, large metals, large BFSI. I'm hearing you talk about the large caps. The pain for the market has been the mid caps and the small caps.
Yes.
Do you see SMIDs bouncing back, or will SMIDs be laggards?
Oh, okay, so in the first leg, yes, there will be a near-term good amount of a rally that will come into the SMIDs. But when we look at the mid-cap 100 to Nifty ratio charts, or the Nifty 500 to the Nifty 50 charts, they have actually violated some key support levels, and there is a possibility they will get into a broader time correction phase, which will lead for more, some pockets of correction to continue. Let it be your industrials, your power, maybe your select auto anchs. These segments will still continue to deteriorate along with real estate. Certain pockets will do well, but I think the time for the SMID or the investment in SMID would probably take in at the later stage. But at the moment, if you're getting a reasonable rally, certain large caps with high beta is what we recommend.
On that note, on that bullish tone, Manav Chopra, thank you so much for speaking to us today.
Thanks so much, Manav. Great clarity, just kind of...
Today, Kush was unequivocal in his thoughts. Anu Jain maybe a bit skeptical. Now we have Manav, who is very, very bullish, so good to know. But I just love the fact that, he's usually conservative, and the fact that he's choosing his words and then kind of saying that, ye bhi ho sakta hai, kind of gives you the lay that he is constructive.
And table thumping. So thanks for that, Manav. Thanks for that perspective. Okay, we're also joined in by Sandeep Agarwal of Sovilo Investment Managers to talk to us about markets. Kush, of course, still with us. Sandeep, your take, what are you doing at this point? Have you been sitting on cash? Have you started to deploy? What's the sense like, and what are you advising at this point? Give us some perspective.
Hi, good afternoon, and thanks for having me on the show. So, I'm seeing 5 important data, which I think is making me very, very positive in last 2, 3 days. I think that, the US economy, first of all, I think the strength of US economy will not remain where it is. So that is a good sign, which, enables the Fed to do something, number one. Number two, I think that tariff is not such an easy thing to do. I think even President Trump has understood, and that is the reason you are seeing pause and on from him on the tariffs. So I think that he also knows that tariff will definitely nullify the impact for the purpose which they are, because tariff will make again USD stronger and the opponent's currency weak. So the whole purpose of bringing in tariff will be nullified, because the opponent will opponent's currency automatically gets devalued to that extent. And third, I believe that even now India has massively underperformed China and Europe. So there will be a lot of interest which should start coming in back to India. A lot of fraud which people were talking, I think that is behind. And I also believe that RBI's quick measures on the liquidity front, it shows that government and the central bank are working towards that. There should be the environment of investment should be good. So when I see all this, I think the worst for Indian market looks to be behind. And I firmly believe that this exercise which has happened in the market of deep correction, that will actually weed out a lot of froth valuation stocks, and the good companies will remain, and they will obviously go up more substantially higher than earlier, because now there will be less number of stock which will be chased by the same amount of money when it comes back. So, and I think at some point of time FIs will also now be exhausted, because now even US has started correcting. So the whole motivation to take out money from India is gone, and USD also going below 105 is also a good thing. So I think overall everything looks like I feel that this is the right time, and we have been feeling so for last few days. And honestly speaking, we have been deploying cash every day.
Interesting. Deploying cash daily, so positive. Just quick take with regard to metals, Kush, and Jindal Stainless in particular. What's the sense like? 6.5% higher, and do you like metals in general? Because you had Manav come in and really talk about how positive he is with regard to metals.
So, the only challenge we have is that we generally don't invest in companies and stocks where, there could be very high volatilities, and which are very deep cyclical. So, because for us, when we are running a PMS, we get money every day, and the entry points for everyone is different. So it is very hard to be in stocks where, the volatilities are high. So we generally avoid this sector, but we do play the proxies for metals. We do play the proxies for crude. So we play proxies of commodities in our portfolio, which is little more with less beta and with similar kind of gains.
Well, okay, we need to go to Anushi, but maybe just Anushi, just 1 second. Kush Bora, quick, and then we'll do a detailed view. But are you constructive metals as well, Kush Bora?
Very constructive. Hindalco and JSW still are the top picks.
Of course, thank you so much. Yeah, love you understanding the tough job of a news anchor. But yeah, coming back to you.
So I know.
Coming back to you, let's first get in Anushi, who's joining with it more on some of the key stocks on her radar today. Some losers, some winners. Anushi, good afternoon.
Hey, good afternoon, Neeraj. So I'll start off with a loser first. I'll talk about Gensol Engineering. Now, this has been in focus for a couple of days now. This is another downgrade that we are seeing from ICRA, when they've downgraded the credit rating to D versus BBB minus, which was there. In fact, if we see, stock is down about 34% in the last 5 days, and this is due to credit rating by ICRA as well as CareEdge, wherein when the CareEdge rating had come out, we saw the stock locked in a 20% of a lower circuit. So the reason of the rating downgrade was due to lenders' feedback on ongoing delays in their debt servicing. Now, the company did say that the rating downgrade happened due to short-term liquidity mismatch, which was there, and they're seeing as to what they can be doing about it. So the company has given their own management commentary on the same. So they say that understand the concerns of downgrades have been raised, but deny any involvement in falsification claims to set up a committee to review the matters on the same. Now, if you just look at the current debt picture of the company, total current debt stands at about 1,146 crore with a debt ratio of around 1.95 times. The company, however, has reduced the debt obligation by 230 crore. This is as of the FY25 figure that we are in FY25 that so far we are looking at. So, Gentol, again, we are seeing a significant downtick in trade today. Second one in radar is Route Mobile. This is after promoter company Proximus partners with Nokia. So what is the recent announcement is that Proximus Global and Nokia are going to partner to offer network APIs to help developers create enterprise applications for the same. And this APIs will be exposed on Nokia's network as code platform with developer portal, which is there. So Route Mobile is another stock which is buzzing. In fact, if we see the Q3 performance also to get more idea on the business, it had seen about a 6.3% of a revenue uptick, whereas its margin stood at 9.1% as compared to 10.1% on a sequential basis is what the figures are stating, and net profits are about a 20% of a downtick. The last one on the radar is RPP Infra. This is after company received a letter of acceptance award for a 81 crore of a project, and this pertains to construction of integrated storm water drain works in Chennai. Execution period for the same stands at 1 year, and if you look at the total order book of the company, that stands at about 2,993 crores. This is as of the December 24 figure that we are seeing. So these are the three stocks which are buzzing in trade today on the back of these news flows that we are seeing.
Okay. Okay, interesting. Thanks so much for that, Anushi. Sandeep, I wonder what your view is with regard to a Gensol and what your advice would be to someone who's invested, because we're seeing consecutive downward circuits or lower circuits. So what's the sense like in your view?
So, we run a PMS, and I'm sorry, I will not comment on a specific stock, but let me tell you that when we go for investing in any company, so, our first screener is generally a non-pledge from promoter. So generally any stock which has pledge of promoter, it doesn't come in our filter only. So because that is our starting point, and stretched balance sheet and these things we generally don't like. So we are okay with old economy companies and, little less growth. We are very happy with 12-13% revenue growth and 16-17% EPS growth without much volatility for a longer period of time. So we believe that those are the companies which will be chased in bad times, and they give us very good multiples at that point of time. So we are very happy to earn less, to make less money, less returns, but we don't want this kind of any kind of stress in our portfolios.
Okay, thanks for that, Sandeep. Now, one stock which is doing extremely well today. We spoke about some paint counters and Asian Paints being one of the top gainers on the Nifty 50, but Coal India is the other one. It's in focus stocks, absolutely up, 4% higher, on fire. What's aiding the surge? Mika joins us with a bull case versus bear case on Coal India. Sharp correction, and now we're seeing a bit of a bounce back. Mika, over to you.
So the stock's actually been buzzing since last week when it announced a price hike, and this was the first time in many years. So on the bull side, when you talk about key metrics that can impact and benefit the top line, you have the company increasing its prices by rupees 300 per ton in May, and this is for the entire volume of one of its subsidiaries, NCL, who produce 18% of their volume mix in FY24. But on the bear side, the company is still not showing any signs of volume growth recovery. April 2024 to Jan 2025 volume growth is up only 1.8% on a year-on-year basis. Coming to the power demand growth, on the bull side, you have the Jan and Feb data that did show improvement of power demand, and so in the next couple of months would be better. But however, overall demand has been weak since August of 2024, and according to data, 2025 summer may not be as strong as last year. Now, in terms of inventory levels, the coal stock has risen to 19 days, and the early onset of summers can benefit the company company's demand. However, on the bear side, production needs to cope up with the early demand, and the company's production growth has been weak the last few months. Then we have market position. Well, Coal India is the largest coal dispatcher in India, but we've seen somewhat of a contraction in its market share, down from 78% last financial year to 75% currently. In terms of efficiencies, you have better operations as well as the coal prices that helps the company's financial performance, and it's translating into that. However, labor strikes as well as logistical challenges can impact and are impacting productivity and profitability to a certain extent. And lastly, we're talking about valuations. Their current PE of 6.3 is below the 5-year average, below what we saw in FY24 at 7.1. But valuations have still not bottomed out. The PE in FY23, for example, was at 4.3.
Wow, 4.3. Not sure if we'll get to see that PE again, Mika, but yeah, thanks so much for bringing us all of that. You know, one of those stocks where it's been deep value, right? And plus it's PSU, and typically it goes hand in hand. But, you know, we'll discuss this on the other side of this very short break we're going to take. Top BTST, as well as some bit of discussion with regard to this one as well as others. We'll also talk about microfinance. Stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various policies.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Welcome back. You're watching India Market Close here on NDTV Profit. We're also joined in by Rajesh Palve. It's a packed house. Rajesh Palve, Access Securities, joining us on the technical side as well. Rajesh, views, thoughts with regard to how markets are behaving. Last couple of days, we're seeing a bit of a recovery. Sustainable in your view?
Good afternoon, Harsh. So, market has recovered from its oversold trajectory, and this is the third day where we are seeing, green tick in the Nifty. And looking at the recovery about 22,500, we believe that, if we sustain about 22,500, yes, this recovery can extend further and possible move. We may see towards 22,700 kind of zone. That's the next level where we are focusing for Nifty. So at this juncture, we are trailing our stop loss around 22,450 to hold long position to play another 100-150 point up move from the current level also. Even for Bank Nifty is also, managed to cross 48,500. So that level we are closely watching. If we sustain above this level, then I think here also we may see some traction towards 48,900 to 49,000 kind of level. So at this juncture for Bank Nifty, our stop losses are placed at 48,400 to hold a long position. And this is just in pullback as market was oversold. So some recovery towards these levels we may see in the next couple of days.
Raja, come to you for picks. We're going to quickly take it to Sandeep. Sandeep, how would you play this? We spoke about Coal India, what the bull case is, what the bear case is. And I won't ask you specifically on Coal India, but what's the way to play this next leg of rally if it were to come? In your view, is it deep value, high dividend, PSU related names, or one of those three features? Or would it be through high growth, given the fact that we're seeing a bit of a cool off with regard to bonds, seeing the repo rate being cut? How best do you play this?
So we will buy where there is value. For example, the private banks, we are seeing a lot of value on the manufacturing side, in the power transmission side, in the water treatment side, all these places, and even, some shares of PSUs where there is deep value, we are definitely, open to them and we are playing it through them. So, we have always built our portfolio based on manufacturing theme primarily, with banking also as a proxy to economy. So we continue with that, and only thing which we have done differently is that in last few days we have, weed out some stocks which have done either quite well or where there is unnecessary diversification from the management. Those stocks we have weed out, so very small portions, but broadly we are very, very constructive, and we have been adding on wherever there is good value. And we believe that, all these stocks which are down 30-40%, majority of them are will again, see good price coming back once the numbers start improving. And I see all the reasons for numbers again start to improving once, there is some cool off in the bond yields and there is some action by RBI and there is some pickup in economic activity. So I think combination of all this with passage of time will make money.
Rajesh, picks for this afternoon?
Harsh, there are two picks and both are on the long side. First one is Trent. After a correction, stock has shown some bit of recovery from its recent low, and now stock is penetrating to its 20-day moving average. The kind of recovery which we are seeing on the daily chart that shows that we may see further more upside momentum in Trent. So one can look to buy this stock with stop loss of 5010, upside target we are projecting towards 5200. And the second stock, that is Dr. Lal Path Lab. Here also this is the fourth day of recovery in the stock from the oversold trajectory. And the way the charts are now shaped up, we believe that here also we may see upward momentum towards 2570 to 2600. So Dr. Lal Path Lab also can be looked at to buy with stop loss of 2495.
Okay, interesting. What nobody seems to mention is these multiplex companies, right? Or maybe this one company. Never features in the list of trades largely, but well, Kotak Securities has upgraded the stock to a buy rating, even though they've cut the target price. Mahima Johnson with the details of that note. Mahima.
As you rightly mentioned, they've upgraded it to buy from an ad rating, but cut the target price to around 1200 from 1330. Now, what they're saying is that the correction for the stock is overdone. The stock has declined significantly in the past few months due to continued weakness in the box office collections, and the issues plaguing the Bollywood industry seem structural going forward as well. But an improvement in movie releases is likely to drive higher Hollywood collections in FY26, and this could drive growth for the company. PVR Inox's initiative on cost optimization and capital light expansion are also noteworthy, and they believe that the recent correction, as mentioned earlier as well, in the stock is overdone, which is why they're seeing an upside from now, from going forward. So these are the reasons as to why they've upgraded the stock, but they've cut the target price by a bit.
All right, that's on PVR. But you know what? I'm not going to ask on PVR. I want to ask about some stocks which have done really well in the last few days and try and focus on those. So before I ask Kush about what to do with a Coforge, for example, or some of the other IT names which have bounced back, Sandeep, I would love to understand how important did you think that order win of 1.6 billion was for Coforge, as well as maybe for the sentiment around IT? Was it really important? Because these guys are not getting orders, question marks around whether large orders will come in, and here Coforge comes in and says that, hey, we are signing a $1.6 billion deal.
So, this kind of deal, they take the company into different trajectory. There is no doubt, because then you become eligible for participating in many large deals in future. So, of course, any company, whether it is TCS, Infosys, it is 1.5 billion plus deals are actually bigger for everyone. In fact, HP and HP services and even Accenture would like to have those kind of deals, and they do get sometimes those deals. So they are very rare. It showcases the confidence which the client has in the company. Being a tech analyst, I can say that there will be a lot of advantages in the long term because of signing of such deals. But the only mistake which people do is that they think when the news comes, they think that is a 1 year or 2 year or 3 year how the revenues will flow. Generally, in IT, I have seen that when large deal comes, the costs are upfronted and revenues and profitability come later. So we have to keep that in mind. So while some people may think that it will add big number to the revenue and profitability immediately, it generally doesn't play out in that way. Secondly, I have only one concern in the whole IT pack, that I still believe that the cost of doing business in IT can still go up, or there could be some negative announcement on that front, which is very much possible. Although finally, because of lack of workforce in the US, those costs will again have to be bared by US customer, which is detrimental. But sentiments can get spoiled. So I think nothing has happened in IT on the announcement side. So it can come sometime. That is the biggest risk which we run in the whole sector. But this is core to the US economy. That is what I believe.
Okay. Kush Bora, after having a really smart move yesterday, a bit of a sulk today for these names. What do you do with a Coforge, a Persistent, maybe even the larger ones like HCL Tech?
You wait and watch. Who would have imagined, a big name like a TCS would actually go into an oversold territory, at least technically, and that's what has happened. So the kind of moves that you're seeing on some of these names are actually a rebound from, either deeply oversold levels or very crucial support zones. Now, while there was this, up move yesterday on something like a Coforge, not surprised to see that it was given up yesterday. I think we spoke that whoever has this should actually take this as an opportunity to exit partially, if not fully, on Coforge, right? So that's the kind of space we are in. Even the Nifty IT setup, the index setup is not really very encouraging. So I have my doubts around some of these names. Even if they do give you a bounce, a sustainable move or a sustainable rally on some of these might be a little elusive. So just keeping these on my radar. Nothing yet that says that some of these might perhaps start to outperform. FSL is one stock that we've discussed over the last couple of weeks, which has held its ground, but there too the momentum is missing. So just for the fact that it's not given up as much ground as most of its peers have, this stands out.
Okay, interesting one. The other one which is buzzing in trade, and we've covered quite a few today, is a Torrent Pharma, 90-day positive catalyst watch by Citi. And yesterday it was Lupin, today it's Torrent. Varsha, give us perspective.
As you rightly said, they've initiated 90-day positive catalyst watch. Now 3Q third quarter numbers had been impacted by BRL devaluation, which has now reversed and may help Torrent's Brazil sales growth bouncing back in fourth quarter versus a decline in third quarter. Now the other factor is the insulin plant disruption in India was the other factor that had an impact in third quarter numbers, which is expected to fully recover in fourth quarter as per the company's earlier guidance. Impact of tariff, if imposed, is expected to be one of the least compared to peers, as revenue contribution for Torrent from US is mere in single digit. India business growth continued to outpace the industry as per Citi. Now Brazil sales are expected to grow mid-teens in local currency, and Torrent sales in Brazil are expected to, so that the mid-teen grows on the back of 4 to 5 new launches, as well as possibility of price increases that the company will see in Brazil market. GLP-1 market, that is your obesity and diabetes market in Brazil, is less competitive than in India, and the potential tariff impact on EBITDA as per Citi would be less than 2% when it comes to Torrent, because the revenue contribution from US is very less for Torrent. Lastly, domestic business EBITDA margins is expected to expand as per the Citi calculation.
Okay, thanks a lot for that, Varsha and Rajesh. Any thoughts on Torrent Pharma? And since we are very close, and I know you just give us two ideas, but coupled with Torrent Pharma, if you can give us a closing strategy as well. It could well be a repeat of the stocks that you mentioned at about post 3.
So first on Torrent Pharma, stock was in correction, and after a consolidation of 4-day, stock managed to give breakout of that consolidation range. Stock managed to give breakout of its falling trend line also on the daily chart. So it's a sign of trend reversal on the stock, and looking at the volume action, looking at the open interest built up on the long side, we believe that if it's continues to hold above 3030 level, I think there is still room for further more upside towards 3100 to 3150 kind of zone in the near term perspective. So I think one can hold with 3030 as a stop loss for further more upside towards 3150. Another stocks that I like for BTSC perspective, that is global split. That stock has managed to give breakout on the near-term chart, and looking at the overall structure, we believe that here we may see further more traction towards 970, 980 kind of zone. So global split is a buy with stop loss of 925.
What's the target, Rajesh, there?
970, 980 is the target.
Okay.
Keep stop loss at 925.
Okay, 925 is the stop, viewers. 975 or 980 is the target. So about 3:2 is the risk reward here. Kush, your closing strategy?
Godrej Agrovet. We've seen smart moves on this one in the last 3-4 sessions. The volumes have spiked up, practically double of the last 20-day averages. While it's very close to that 780, 790 resistance, with the kind of move that it's seen and the relative strength, there's a good possibility that this time around might take that level out, or it at the very least test it. So 799, 825 are your targets. 750 is where you place that stop loss. So Godrej Agrovet on the long side.
Okay, so those are a couple of names to keep in mind. Within pharma, Sandeep, actually let's quickly take Sandeep. Yeah, so with regard to pharma, is there a view that you have? Is there a preference within the pharma basket that you're liking over others? And how do you look at pharma versus healthcare? Do you prefer some of the healthcare names over pharma?
No, so we like, some spaces in the pharma, particularly on the CDMO side. And we also do like the healthcare side because, healthcare is more domestic and more structural. While on the pure pharma side, we also have some dependency on the US markets and regulations. So we always run a mixed portfolio on that front. And both the spaces are looking very good. Pharma is also quite different. It also helps in maintaining the beta of the portfolio. So we generally have some portion of pharma always. And after current correction, a lot of pharma names are looking very, very attractive. And we have been actively working on them.
Interesting. Okay, we've had a few conversations today, and among those is with regard to MGL. Key metrics with regard to profitability is something that we spoke about with the managing director, and how APM allocation looks and what he expects the price hike to look like, if at all it were to happen. Listening to some of those views, stock up 4.5%.
Margins have come down.
Yeah.
Earlier we were having margins of say 13 rupees. Now it has come down to 8.5 rupees.
Yeah.
And we had an impact of around 6 rupees per SCM. So 3 rupees we have increased the prices, and the restoration has happened by the 50%. So now we are at par. Now with portfolio management, and we expect that the prices of LNG to keep low, we expect that stability will be there in the CNG
Will
prices.
you need to take more price hikes?
May not be. Because as of now we are at par.
Okay.
Pre-cut level and current level are at par. We have taken some price hike and some readjustment in the restoration has happened. So we are comfortable at that current levels. If it goes further down, then we may think about it.
For bookkeeping purposes, so unit EBITDA, which was had slipped to higher single digits, back to double digits in quarter
yeah,
4?
I mean, if you see last 5-6 years, we have been having an EBITDA of 7 to 8 rupees. Last financial year was pretty good. We were having 13 rupees and slightly higher than that. Then we gave a guidance of 10 to 12 rupees.
Right.
Now perhaps maybe we put down one number, 1 rupee. So 9 to 11 rupees could be a new guidance.
Okay, because the number that we had was that Q3 was about 8.3, right?
That's right.
So you're saying it could be now between 9 and 11.
Correct.
It could be double digit as well in quarter 4.
Q3 was slightly low because we did not raise the prices for some time.
Exactly.
Yeah.
So back to double digits likely. Could be.
Could be, yeah. 9 to 11.
9 to 11.
Somewhere 9.5 to 10.5 rupees or something like that.
Kush, views with regard to an MGL, very quickly.
Well, it's testing the upper end of the range that it's been trading in. The upper end is close to the 1350, 1360 mark. Bulk of the move seems to be done. So it's more of an exit or a profit booking opportunity for anyone who's spotted from lower levels. No fresh positions recommended.
Very quickly cover a couple of stocks. But before that, we're going to look at what all to watch out for. One is Euro area retail sales for tomorrow. You have US jobless claims, which is something that we'll keenly be looking out for. ECB interest rate decision, US balance of trade, US wholesale inventory, US total vehicle sales. Just some of the other things that we'll look out for. China balance of trade is the other piece as well. Couple of financial stocks in focus. You look at a PFC, you look at an REC, you look at the moves that they've made today. On top of the moves they've made yesterday as well as earlier this week, I think Monday as well, they've made some good moves. So just look at some of those names, and within that basket, I also want to club some microfinance names. So you look at what, for example, a Credit Access is doing, along with an Ujjivan. So some of these names really moving in trade, and Credit Access came out with numbers as well. I want to quickly take a view from Sandeep. Sandeep, within the financials, plenty happening. Turnarounds within the microfinance basket. You have power financiers also doing fairly well for themselves. They've come off from those highs in terms of valuations. Constructive on any of these? Are there pockets where you're seeing value within these two spaces?
So, private sector large banks are available at such mouth-watering valuation. So why should we, go down the chart? That is the way we look at it. So, some of the microfinance and NBFCs are at very attractive valuation and good price, but our preference remains more on the private bank because they are really, really available at very good price, and they offer a portfolio of offering rather than only one single product. So we generally prefer private bank unless they become very expensive.
Okay, so that's a perspective coming in. Rajesh, your take with regard to the move on PFC REC. We did take Kush's view yesterday, so your quick view.
Both stock now managed to cross 20-day moving average, and looking at the buying action in last couple of days, so we believe that we may see further more traction on the higher side for REC. The immediate stop loss one can place around 406, and possible target towards 425 we may see in the near term perspective. And for PFC, one should keep stop loss towards 397, and possible target on the higher side towards 415.
And some stocks which have just zoomed in trade. One of them that catches my eye is Neogen Chemicals, because it usually doesn't move like this, but has had a big bang move in the last few minutes of trade. Pull that one up. Look at that sharp move, 10% higher for that one. So really good going. So keep an eye out for that too. Okay, we've gotten the top closing strategies from our experts for sure. We wrap it up on this leg then. And a quick thanks to our guests for joining in today. Kush Boda, Rajesh Palvia, as well as Sandeep Agarwal. Thank you so much, gentlemen, all three of you, for joining in today and giving us your thoughts. And have a great Thursday. And Harsh, over to you on a green day.
Well, yes, absolutely. Second consecutive green day, Neeraj. I'm sure you wouldn't miss that. But I mean, a favorable breadth. It's a day when markets have come back and have stayed in the green. So that resilience evident within and across indices. 22,500 is what we've taken out today on the Nifty now. And we look at the heat map, you'll see the manner in which we've taken it out is pretty comprehensive. Of course, some breadth given away as we've moved closer to close of trade. But at the moment, basis whatever experts have told us, and we've discussed with plenty of technical experts whether this is a dead cat bounce, doesn't seem to be the case. Metals are the pick at the moment, along with energy doing fairly well for themselves. Reliance, the big boy, also participating in trade today. Asian Paints up on the back of lower crude prices, along with other paint players as well. Financials not participating in a big fashion, but nonetheless sitting in the green. So there's plenty of cushion available, given that financials also sit in the green. Let's pull up the heat map with regard to sectors, and we'll talk a bit about this, because you'll see a solid coat of green. Nifty IT has just about slipped in the red. Realty is down as well, 0.25%. So those are two pockets you'll want to keep your eye out on now, given that we've otherwise had a fantastic day of trade. Look at metals, look at oil and gas, look at energy. A very good day, and mind you, it's coming on the back of a metal outperformance that we've already seen. So really creditable in terms of the move in which we've seen with regard to the metal index broadly. Let's look at the Nifty mid cap and small cap as well, because good moves on both of those, along with the large cap index. 1/3% higher on the Nifty mid cap, but largely range bound. The Nifty small cap too doing well for itself. In fact, 1.3% higher, and just about 100 points from the lows of the day, as well as from the highs of the day. So fairly range-bound day of trade on both of these indices. Let's look at the breadth of the market, and what that will signal to you is second consecutive day where the breadth has stayed in the green. We tapered off a bit right at the fag end, and that's where tomorrow becomes interesting to see what happens. Last off, BSE 500 top gainers, top losers on a day like this. Well, it's interesting. Some big moves. Castrol India with talk of a buyer coming in, and a big one, that too. So that one has moved. Lloyd's Metals, the top gainer on the metal index, 7% move, very, very sharp. Chemplast is the other one, nearly 7% higher. Credit Access 6% higher, again on the back of the numbers for February that they've disclosed. So some of those making some big moves in trade. But outside of that, you saw a bit of a cool off in Coforge, no complaints there, but Tech Mahindra was the other big boy. Within the Nifty 50 index, down 2.4% in trade today. But with that, we'll close the show for today. Thanks for staying with us. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. And stay tuned to NDTV Profit. More action on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Stellar gains for headline indices pulled by global market momentum. The Nifty ends about 22,500 mark, whereas the Sensex rises over 600 points to end about 74,300 mark. Broader markets continue gains as well. The mid-cap index rises 0.6%, fueled by JSW Infra, MRPL and Hindustan Zinc. Small caps outperform with gains of over 1%. All sectoral indices barring realty index end in the green. Metals jump the most. The sentiment backed by Trump's trade tariffs. The oil and gas index follows as crude prices cool off globally. Media, pharma and FMCG follow. The dollar index weakens to the lowest in 4 months. The sharp move in the currency comes amid uncertainty over U.S. growth prospects. Donald Trump's tariffs could slow down U.S. economic growth, sparking fear among global investors. Losses in the dollar accentuated by surge in the euro. Meanwhile, the rupee shows signs of strengthening. In the near term, dollar-rupee likely range between 86.85 to 87.20. RBI's liquidity measures and the fall in crude oil prices will augur well for the currency. Crude prices slipped below $70 per barrel, dragged by ongoing geopolitical tensions and rising production. Sharp drop in crude would lead to huge inventory losses for OMCs, but fall in crude prices will also aid marketing margins. Falling crude prices have a positive impact on paint space. All stocks are in a shade of green. Paints depend heavily on crude prices. The biggest raw material cost for paints is oil and its derivatives. Another major beneficiary of fall in crude prices is aviation. Stocks like Indigo rely on crude as a major raw material component of 40%. This means that lubricant manufacturers may gain on the back of this development, as 50% of RM cost is crude derivatives. Tire stocks stand to benefit from a fall in crude prices. Materials like synthetic rubber, carbon black and chemicals depend upon oil. This forms around 40% of the raw material basket. Specialty chemicals are a big gainer of the fall in oil prices. On the other hand, oil explorers like ONGC, Oil India, Vedanta and HOEC will have a negative impact, since low crude means low earnings. Amid high valuation concerns in the current market, Emkay comes out with a concise list of parameters to identify the right buying price, and they are FY26 EPS growth greater than FY25 EPS growth, 1 year forward price to earnings at a discount to 5-year average, over 35% correction from 52-week high, FY26 return on equity over 15%. Now, the top stock picks are Motherson Sumi Wiring, Adani Green Energy, and JK Tyre and Bikaji Foods. HSBC reduces targets for real estate stocks due to expected slowdown in residential sales, leading to lesser increase in net asset value of the company. The stocks have underperformed due to concerns about the economy, interest rates, and other macro factors. Moreover, companies may struggle to meet their guidance too. HSBC advises cautious approach towards investing in the stock market. Kotak Securities slashes target price for PVR Inox to 1,200 rupees. Kotak says that weakness in box office collection leads to declines for the stocks. Factors like high movie releases may drive Hollywood collections in FY26. The company's initiatives on cost optimization and capital light expansion are noteworthy. Macquarie maintains a positive view on Power Financiers, REC and PFC, says they both have structural story intact. Both the companies declined in past few months due to weak PSU sentiment. Some key concerns plaguing the industry are growth decline, rising competition and soft demand. Macquarie sees lower credit risk, strong return on equity and inexpensive valuations as well. In an NDTV Profit exclusive, Mahanagar Gas says that the company is bullish on infra expansion, adds 50 stations in MGL geographies in last 1 year. The company expects CNG station addition to continue at similar pace, says that station expansion outside Mumbai has been very strong. On the issue of volumes, MGL expects growth for next 3 years to be in double digit. Credit Access Grameen jumps on the back of its interim business update. While loan growth is healthy in most states, Karnataka loan growth slows on the back of poor asset quality. The MFI mentions adding over 1.5 lakh borrowers in January and February. Proximus Global, Telesign and Root Mobile partners with Nokia. The collaboration aims to explore opportunities in network API solutions. Each company will leverage its respective strengths in this partnership. The major focus is on supporting developers in creating new applications. Gensol Engineering falls over 40% in the last few days. This is primarily because of credit rating downgrades by CARE and ICRA. The downgrades were on the back of short-term liquidity mismatch. The company says that they are committed to addressing concerns. The company will also set up a committee to review the matter. Jefferies puts out a note on India's strategy. India's underperformance could see a reversal. Relative valuations against MSCI emerging markets stand at 10-year average. 4% dip in dollar index could bring back FPIs. Near-term positives are economic uptick and liquidity easing. Castrol India share price jumps 10% as Saudi Aramco considers bidding for BP's Castrol lubricant business. It is especially interested in Castrol's India operations. Now, Aramco aims to combine Castrol's assets with its Valvoline unit bought for $2.65 billion in 2023. Castrol is valued at $10 billion at present. Note that discussions on bidding are still in early stages. Galaxy Surfactants jumps over 4% on entering into a strategic collaboration with a global customer to provide engineering, procurement and construction services. Now, this JV is for a performance surfactants and specialty ingredients manufacturing plant at an overseas location. This collaboration is via its group companies. The recent move aligns with the company's growth vision to expand geographically. It is official, Tesla will make inroads in Mumbai's BKC soon. The global EV car maker finalizes location of first India showroom in Mumbai. The showroom's licensee is Tesla India Motor and Energy. Its offices will be in Pune. The showroom will span over an area of 4,003 square feet. Tesla has licensed the showroom space for 5 years. The starting monthly rent is 35.26 lakh rupees. The security deposit is 2.11 lakh crore rupees. But as Tesla plans to enter India, the US is eyeing zero tariff on cars against 110% tariffs that India charges. Now, Trump has warned of reciprocal action against India's high auto tax. But India is hesitant to bring down such duties to zero. New EV policy for foreign car makers enables to import cars at 15%. Tata Motors and M&M have lobbied against lowering import tariffs on EVs. The United States wants India to eliminate tariffs on car imports under a proposed trade deal between the two nations, but New Delhi is reluctant to immediately bring down such duties to zero, even as it considers further cuts. Sources told Reuters. Now, India's high auto tariffs will feature in formal talks for a bilateral trade deal that are yet to begin. Now, said one of the three sources, all of whom were briefed on the matter. Paving the way for American electric vehicle maker Tesla opens new tab, which is gearing up for an India launch. Taxes on cars imported into India are as high as 110%, which Tesla chief Elon Musk has criticized as being among the steepest in the world. The EV giant last year shelved its plans to enter the world's third largest car market for a second time. Musk has now found support from US President Donald Trump, who has repeatedly railed against India's high taxes, and in an address to Congress on Tuesday, he slammed the country's auto tariffs of more than 100%, threatening reciprocal action. Zaggle Prepaid announces entering into a pact with Tech Mahindra for Zatix service. Now, the agreement detailed in an exchange filing will see Tech Mahindra utilize Zaggle's spend management dashboard Zatix for improved visibility and control over their corporate and purchase card spending. The cards are issued in collaboration with SBI Cards. The Zatix service agreement is set to be executed within 1 year. Zydus Lifesciences gains on getting US FDA approval for cancer drug Dasatinib. Now, the tablets will be manufactured in Ahmedabad. To add context, Dasatinib had US sales of $1,807.7 million in Q3. IOL Chemicals and Pharmaceutical Services receives certificate of suitability for QATA pine fumarate, which is used for various mental health disorders. The company receives the certificate from European Directorate for the Quality of Medicines and Healthcare. Now, this will allow IOL to export the drug to European countries. Angel One comes out with a negative update for February 2025. The company's client base growth has been slowing. The company reports higher volumes despite downtick in daily average orders. The company has also been losing market share recently. Transport Minister of Maharashtra Pratap Sarnaik proposes to introduce bike taxi service, the proposal to be passed by the end of this month. He highlights that this service is already operational in 22 states across the country and will now be introduced in Maharashtra as well. This initiative is expected to generate employment for approximately 10 to 12,000 youth, and it will also be more affordable than other applications like Ola and Uber. Greaves Electric Mobility announces a strategic partnership with Indo-Fast Energy. The pact is to introduce battery swapping technology for electric two-wheelers aimed at the B2B fleet and ride-sharing markets. The collaboration unveils the Ampere Magnus, specifically designed for gig economy riders who travel more than 100 kilometers daily. The new model will leverage Indo-Fast Energy's growing battery swapping network, allowing riders to replace depleted batteries with fully charged ones to minimize downtime. Apple launches its most popular laptop, MacBook Air, with latest M4 chip. It comes at an even lower price compared to the M3 generation. Alongside 16 GB of RAM and several smaller improvements, it remains a well-rounded laptop suitable for most use cases. Now, this brings the price down even lower than its already competitive MRP. Fitch Ratings has come out with a note on RBI lowering risk weights of NBFCs and microfinancial institutions. Fitch says that the move is unlikely to increase rapid funding. RBI's move could ease some pressure on NBFCs and MFIs. The banks will remain cautious due to broader liquidity constraints.